Hi, everyone. We're going to get started. And as we do, I'd like to invite our dean, Professor Talzharsky, to give some opening remarks. And then I'll say a few more words, and we'll get started with our first panel. Just one word of caution, the first panel will be in Hebrew, but then we'll switch for the rest of the day in English. Tal, thank you very much for letting us organize this amazing event, participating and hosting. The floor is yours.
שלום, בוקר טוב לכולם, ברוכים הבאים לכנס. נוכח העובדה שיש לנו אורחים מכובדים מחו"ל, אשא את דברי הפתיחה הקצרים שלי בשפה האנגלית. יש לי פה טיימר. Distinguished guests, faculty members and students, as Dean of University of Haifa Law School, I'm honored and thrilled to welcome you all to our second annual Financial Regulation in the Digital Era Conference. And we at the law school hope that this will be a continuation of a long-standing tradition of holding a conference on this unique and important topic here at the faculty. And I am no stranger to these issues. I myself have written extensively on issues related to law, technology, policy, AI and information law, and therefore I find this topic close to my heart, both in research and in teaching. And our faculty and university has substantial strengths in these issues. We offer an LLM in law and technology, and we have several faculty members who are leading experts in the various facets of law and technology. Some of them, many of them, are with us here today, and we're very proud of our dear friend Nitzan, who has taken a leadership in this important issue of fintech. And this is our second meeting, annual meeting, and a lot has happened in the last year. In the last year, the Israeli technology sector has unfortunately suffered some setbacks in the ability to gather funding and to move forward. There's some thought even of some companies leaving. This is to a great extent a result of the various discussions of reforms contemplated by the Israeli government. At this point, there is an interim in moving this regulation forward, and we really hope that this calm will allow the Israeli tech market and the various fintech initiatives and startups to recuperate from the exogenous shock that they are suffering, and hopefully this will be an opening for additional years of prosperity. Another issue that has happened in the last year, of course, is the opening up of generative artificial intelligence, chat, GPT 3 and 4. And it's clear that GPT is going to revolutionize many areas. Some people are going to lose jobs. Some people are going to gain jobs. How it is going to affect the financial sector, I am not sure, but I have no doubt in my mind the effect will be substantial and it will be swift. I already read some articles of some analysts querying ChatGPT, which do they believe will be the next banks to fail. They also asked what will be the segments or what will be the elements of banks that will be subject to failure, and they got very interesting results. And this is not being a Monday morning quarterback or having the benefit of hindsight, because the ChatGPT is not updated with the new results from the web. So this is a very interesting test case. I also heard of various entrepreneurs querying ChatGPT as to what will be a good area to go into business and then use the various realms to write a business plan. So the fact that we see the introduction of AI both on a micro level of helping run businesses and on the macro level in the regulation and strategic decisions on creating such businesses, I have no doubt will lead to the fact that in the third conference, the content of our discussions will be substantially altered by the availability of such technologies. So that will be next year, but let's talk about this year. This year, I want to extend my deepest gratitude to all the speakers that came from all around the world. I had the benefit of speaking to many of you prior. I'll call out my old friend Kevin Warbach, not saying that he's old, but I'm old one, yes. So Kevin made the journey all the way from University of Pennsylvania, but we have other distinguished guests coming all the way from Singapore, Amsterdam, Zurich, to move forward this conference. And all of this is made possible by Nitzan Pakin, who is focusing her energy and research on these issues of financial regulation, consumer protection, and tech policy. We're also very proud of carrying this project as a joint venture with Reichman University, and we have Professor Moran Ophir here, and we look forward to many years of cooperating on this realm. Thank you, Moran, for your leadership. And on the admin level, we are grateful to Ms. Lily Feibisch-Schor and her staff of students and other assistants that make this event possible. And of course, I thank all of you joining us here today. So as we move forward in the day, I look forward to an enlightening and inspiring experience for all of us. We'll be talking about transformative power of technology, thinking how we could use it to enhance efficiency and possibly even fairness throughout society, using fintech perhaps to promote values of justice and security. So thank you all. Welcome to Haifa, and I'm sure we'll have a great day.
Thank you very much, Professor Zharsky. So just a few quick words, and then we'll get moving with the first panel. So again, thank you everyone for making it today. We're very excited to together here for the second annual Financial Regulation in the Digital Era. It's our privilege, Moran and my privilege, to see such a diverse group of people and experts from all over the world, and the combination of academics and scholars and regulators from Israel and practitioners is going to be something that we will celebrate throughout the day. And as we convene to discuss financial regulation in the digital era, we actually find ourselves in a world that that technological advancements literally continue to astonish us on a daily basis. Just in the last 6 months alone, we've witnessed events that captured everyone's fascination, ranging from the collapse of FTX, a major financial institution that highlighted the need for better regulatory frameworks to safeguard the stability of our financial markets, the release of ChatGPT that Professor Zharsky has mentioned, tech giants like Amazon developing payments technologies that range from scanning consumers' hands and fingers as they pay and check out, and even social media platforms that have proved and shocked regulators in the banking world by becoming significant players and showing how they can intensify runs on the banks and runs on financial institutions like never before, drawing attention to new areas where we would need to focus our regulatory efforts. So I won't waste any more of our time because we have so many exciting things to talk about today, ranging from crypto, AI, the metaverse, corporate governance in financial institutions, ethical implications of technology, open banking, payments, and many more exciting topics. Entrepreneurship, as Professor Zharsky mentioned, which is a big aspect in the Israel ecosystem. So again, thank you to our one and only Lily and the staff for making this happen. And I invite Moran as the chair of the next panel with the next group of people to start the conversation. Thank you.
So as Nitzan mentioned, the next panel will gonna run in Hebrew, So our guests from abroad are welcome to have a nice coffee outside, or if you understand Hebrew, you can easily stay. So I'm welcoming, אני רוצה להזמין את עורכת הדין יאירה פרנקל שרודר מהמחלקה למשפט כלכלי, ייעוץ וחקיקה במשרד המשפטים, את רואה חשבון נדב נגר, מנהל החטיבה המקצועית ברשות המיסים, ועורך הדין אופיר אייל, מנהל המחלקה הבינלאומית ופיתוח עסקי מרשות ניירות ערך. אז אנחנו בלי להתעכב הרבה נתחיל מיד בשלב השאלה הזהה, אז אני ארצה לפתוח בשאלה זהה לשלושתכם. למעשה נפגשנו פה עם נציגים מאותן רשויות בשנה שעברה, עברה שנה וכמו שאמרו דברי הפתיחה גם של פרופסור ז'רסקי וגם של דוקטור גסלביץ' פקין, קרו המון דברים בשנה האחרונה, והייתי שמחה לשמוע על העשייה של הרשויות הרגולטוריות שמהן אתם מגיעים בשנה החולפת כדי להתאים את הרגולציה להתפתחויות הטכנולוגיות המאוד מאוד מואצות. אני רוצה להתחיל.
טוב, אז קודם כל תודה רבה על ההזמנה. אני אגיד אולי רק מילה אחת על מי אנחנו בתוך משרד המשפטים. המחלקה הכלכלית וספציפית בתחום של הרגולציה הפיננסית, אנחנו מהווים איזשהו גורם מתכלל בתוך משרד המשפטים וייעוץ וחקיקה, הרבה מהענפים מטופלים ככה בענפים של נזיקין, דין פלילי, הלבנת הון, אנחנו גורם מתכלל בהיבט של הרגולציה הפיננסית וגם מול הרגולטורים הפיננסיים, שגרירים שלהם בעצם בתוך המערכת, לקדם את הצרכים שלהם ואת ההבנה שלהם של מה שהרגולציה שלהם צריכה. אז זה אנחנו. בהיבטים של טכנולוגיה, אני אלך טיפה אחורה ואזכיר, כלומר, אחד הדברים המשמעותיים שהמחלקה עשתה בעבר, זה הנושא של הסנדבוקס הרגולטורי. הייתה הבנה שהפינטק, אמנם הרבה מהפיתוח בארץ, אבל הגופים לא מגיעים לשוק הישראלי, ולכן אחרי הרבה עבודה של ועדה ודוח מאוד מפורט, הופץ גם תזכיר חקיקה והצעת חוק, שבעצם יצרה איזשהו סביבת ניסוי רגולטורית עבור חברות הפינטק, במטרה לתת להם איזשהו one stop shop, שבו גם הם יוכלו לקבל הקלות רגולטוריות, וגם ליווי בתחומים נוספים, נגיד כמו הלבנת הון, שעד היום מהווה ככה גורם שמאוד מעכב אותם בכניסה לשוק הישראלי. אנחנו מאוד מקווים לקדם שוב את הצעת החוק הזאת, עכשיו אולי אחרי חוק ההסדרים, אבל כן חשוב להזכיר שגם ככה ממש בשנים האחרונות, זה עצם העיסוק בנושא הזה של הסנדבוקס, הניע תהליכים פנימיים, גם הרגולטורים נתנו כל מיני הקלות לחברות כאלה, ועודדו פעילות, נגיד באינשורטק, מצאו כל מיני כלים אחרים לעודד את הפעילות הזאת, וגם בחוקים האחרונים שעברו, למשל ב-PSD, ניתנו כל מיני הקלות לחברות זרות, כדי לאפשר את הכניסה שלהם, ונושא נוסף שממש ככה נכנסו אליו בצורה מאוד דומיננטית בשנה האחרונה, זה הנושא של בינה מלאכותית. המחלקה הכלכלית פרסמה דוח בשיתוף משרד המדע והטכנולוגיה שעוסק בבינה מלאכותית ברגולציה בכלל, והייתה גם הבנה אבל שזה נושא שדורש התייחסות מיוחדת במגזר הפיננסי, זה מגזר שהוא מאוד מוטה טכנולוגיה ומאמץ את הטכנולוגיות מהר, ולכן הוקם צוות בין משרדי שכבר פועל עם כל הרגולטורים הפיננסיים, המחלקה הכלכלית במשרד המשפטים, רשות התחרות, והמטרה של הצוות היא קודם כל ללמוד, ככה לקבל תמונת מצב עדכנית של השימושים בבינה מלאכותית, אנחנו באמת במצב שהשוק הקדים אותנו, אנחנו לומדים את המצב, והרעיון אחר כך להגיע גם לאיזשהם המלצות לגבי הצורך ברגולציה, או התאמות רגולציה, אולי אפשר להסתפק בפרשנות, אנחנו מבינים אבל שזה משהו שצריך לעשות עכשיו. יצא האמת בעניין הזה גם קול קורא לציבור, שפורסם ככה ועדיין מחכה להערות הציבור, אז אם מישהו רוצה, לא ראה ורוצה לשלוח הערות לצוות, אז אנחנו גם מאוד נשמח.
כן, בוקר טוב לכולם, קודם כל. אני נדב, מנהל החטיבה המקצועית ברשות המיסים. מבחינתנו כרשות מיסים, כסוג של רגולטור, כל הפעילות הדיגיטלית הזו נחלקת בעצם לשני דברים, שתי מחוזות עיקריים. אחד, קודם כל, זה הוודאות. יש מכשיר חדש, יש טכנולוגיה חדשה, מתבצעות עסקאות על הדבר הזה, על אותה פלטפורמה, ולכן חשוב שלמשקיעים, וכל מי שפועל באותן זירות, תהיה לו את הוודאות לצורכי מס, מה הסיווג. בסדר, קודם כל, מה העסקה לצורכי מס. בעניין הזה, אני חושב שאנחנו כרשות, באמת הובלנו, וכמה שיותר מהר הוצאנו חוזרים, ביטאנו את העמדה שלנו, שקודם כל המשקיעים ידעו, איפה הם נמצאים מבחינת הדבר הזה, עשינו את זה ב-2018 עם שני חוזרים, גם בנושא מיסוי מטבעות דיגיטליים, אז התחלנו עם הקריפטו, לאחר מכן הנפקות, ICOs, ובשנה האחרונה, מה שנדרשנו, אז בעצם פרסמנו נייר עמדה בנוגע ל-NFT, שבעצם אנחנו רואים אותו כנכס על כל המשמעויות שלו, שכנכס בלתי מוחשי. הרגל השנייה, או המחוז השני שבו זה פוגש אותנו, שמעבר לזה שהמשקיע יודע מה הסיווג של העסקה לצורכי מס, ואיך אנחנו רואים את הדברים. ההיבט השני זה ההיבט התפעולי. פקודת מס הכנסה או מערך המס בישראל מושתת ברובו על עולם של ניכוי מס במקור, אין חובת דיווח כללית. ולכן אנחנו פועלים רבות על מנת כן לאפשר את הדבר הזה. אנחנו מצליחים בפניות ספציפיות שיש אלינו לחטיבה, כן לאפשר את הדבר הזה בזירות שהן מפוקחות, כן לתת להם את האופציה להיות נאמנים מנקים ובעצם לגבות את כל המיסים מהעסקאות האלו למי שסוחר בפלטפורמה, אבל עדיין יש מה לעשות, זאת אומרת, יש גבול כמה אנחנו יכולים מבחינת הפרשנות שלנו לצקת תוכן לפעילות העסקית, ומה לעשות שהחוק לא מתקדם עם ההתקדמות הטכנולוגיה והכלכלה, ולכן גם במסגרת צוות בין משרדי, או צוות אוצרי יותר נכון, אבל בין משרדי בתוך אגף, בתוך משרד האוצר, ברשות הכלכלנית הראשית, אז כן גובשה איזושהי עבודה, ועדה של הסדרה של כל התחום הזה, ובין היתר, אנחנו נקדם חקיקה כדי לאפשר את המסחר בכל הטכנולוגיות הדיגיטליות האלו והחוזים החכמים, בדיוק כמו בניירות ערך, על כל המשתמע מכך לעניין ניקוי מס במקור, לעניין הסדרה וכו', כדי להפחית את הנטל הבירוקרטי והרגולטורי, גם בהיבט התפעולי של גביית המיסים. וזהו, זה מה שעשינו בשנה האחרונה, ואנחנו ממשיכים לדחוף קדימה.
היי, אופיר מרשות ניירות ערך, מנהל המחלקה בינלאומית ופיתוח שווקים. לפני שאסביר מה עשינו, אני רוצה להסביר את ההיגיון מאחורי הדברים שאנחנו עושים. כמובן הסמכות שלנו הבסיסית של רשות ניירות ערך, הגנת המשקיע והחדשנות וטכנולוגיה, כשניסיתי לחשוב על זה, הם מוצאים אותנו בשלושה מקומות. דבר ראשון, מול הגופים הקלאסיים, שאנחנו מפקחים עליהם, מנהלי תיקים, חברות ציבוריות, משווקים, מתווכים וכיוצא בזה, למשל מנהל תיקים שרוצה לשלב טכנולוגיה של AI בבחירת ההשקעות שלו, שרוצה לשלב טכנולוגיה בזיהוי לקוח, בבירור צרכים ודברים כאלה שהם התהליכים הרגילים שהוא עושה, או קרן נאמנות שרוצה לכלול בתוך הפורטפוליו של הנכסים קריפטוגרפיים, או חברה ציבורית שיש לה איומי סייבר, כלומר מקומות של הגופים הקלאסיים שנתקלים או באיומים טכנולוגיים או בהזדמנויות טכנולוגיות. המקום השני הוא מול גופים חדשים שרוצים להיכנס לשוק ושאנחנו רוצים שייכנסו לשוק, כיוון שהם מחוללי תחרות או טכנולוגיה חדשה או גורמים אחרים, מגוונים את האפשרויות. ופה יש לנו אתגר אחר, כלומר אלה גופים שפועלים בצורה הרבה פעמים שונה מהגופים הרגילים, ויש לנו אינטרס לנסות להכניס אותם לגוף ולשוק, והם מנהלים את העסקים שלהם באופן שונה. מקום שלישי זה תחומי פיקוח חדשים שקיבלנו בשנים האחרונות, שהם כמעט בהגדרה מבוססי טכנולוגיה, אני מדבר על ספקי מידע פיננסי ותחום התשלומים, שאביטל תדבר יותר מאוחר, אז אני לא ארחיב. אז אלה שלושה אזורים שאנחנו נתקלים באתגרים טכנולוגיים, עוד מעט אני אפרט קצת מה עשינו בכל אחד מהם, ויש רכיב אחר שאני חושב שנוטים פחות לדבר עליו, אבל שהוא מאוד מאוד חשוב, שמשותף אני חושב לכל רגולטור פיננסי, והוא האתגר התפעולי פנימי של הרשויות. רגולטורים הרבה פעמים מורכבים, או העובדים שלהם, כוח האדם, עורכי דין, כלכלנים, או אנשים שפחות קשירים, או פחות מנוסים בתחומים טכנולוגיים, וככל שיש יותר רכיבים טכנולוגיים בפיקוח או בהסדרה או בחקיקה, אנחנו מחויבים או חייבים לרכוש איזשהו ניסיון או התמקצעות שאין לנו בשוטף או במקור. זה מחייב ידע שונה, זה מחייב השכלה שונה, זה מחייב התייעצויות עם גורמים שונים, זה מחייב מבחינת כוח אדם, משאבים שונים, דברים שהם מאוד מאוד חשובים, שלפעמים נדחקים כי הם קצת יותר אפורים, אבל הם מאוד מאוד חשובים. עכשיו אני אפרט ממש במילה מה עשינו בכל אחד מהאזורים האלה לאחרונה, בנוגע לאתגר הראשון של שילוב טכנולוגיה בפעילות של גופים קיימים. אז שוב, עשיתי פה איזו רשימה של דברים שעשינו, אבל גם התאמנו את חוק הייעוץ, שזה חוק שהוא יחסית ישן, לשירותים שהם יותר מתקדמים במסגרת הוראת שירותים מקוונים, בחנו גם איך ליצור בהירות בהפרדה בין ייעוץ בכלי תקשורת לרשתות חברתיות, פרסמנו חוזר לגבי שיח ברשת, כדי לחדד את השוני בין ייעוץ קלאסי לבין כל מיני עצות שאנשים מקבלים ברשתות חברתיות, גיבינו נבט בנוגע לפתיחת חשבון מרחוק, עמדת סגל בנוגע לסיכוני סייבר בתאגידים, וגם גיבינו אותה בביקורת, מערכת הצבעות שכבר קיימת כמה שנים, שמאפשרת להצביע מרחוק. אז זה חלק מהעשייה הטכנולוגית, מהקשר הטכנולוגי בתחום של הגופים הקלאסיים. בנוגע לגופים החדשים, שהוא באמת אתגר יותר גדול, איך להכניס פינטקים לעבוד בישראל, אז כבר ב-2017 הקמנו פינטק האב בתוך הרשות, על מנת להיות בקשר עם הגופים האלה, להבין את הצרכים שלהם. השקנו יחד עם רשות החדשנות תוכנית פיילוטים, על מנת לאפשר סביבת ניסוי לגופים לפינטקים, תוך כדי מימון והספקה של ידע ושל בסיסי נתונים, כדי שהם יוכלו לעבוד עליהם. הקמנו את מחלקת פיתוח השווקים, שאותה אני מנהל, שגם היא עוסקת בכך. היינו שותפים לקידום של חוק הסנדבוקס, שכבר הוזכר כאן ושלצערי עדיין לא הושלם. אז זה בהקשר הזה. בהקשר לפעילויות החדשות, שוב, אביטל תרחיב, הקמנו יחידה שלמה ומאוד פעילה בתוך הרשות, על מנת לסייע בהקשר הזה, לקבל את הגופים החדשים, להבין מה הם עושים, כמובן כל הליך החקיקה. ובנוגע לבניית הכוח, שהוא באמת החלק המאוד משמעותי ושפחות מדובר, אז הקמנו מספר ועדות פנימיות, כדי להתמקצע, כולל ייעוץ חיצוני, גם בנוגע ל-ICO בזמנו, שהיה הגל ב-17-18, וגם אחרי זה לגבי נכסים דיגיטליים, לגבי סליקה, כמובן חברים בצוות הבין-משרדי, שגם תום פה וגם מוזכר בנוגע ל-AI, מערך טכנולוגי במחלקת השקעות שהקמנו מאפס, והוא גם כן נועד למטרה הזאת. הייתה גם ועדה מייעצת להנהלת הרשות שהקמנו ופעלה באופן אינטנסיבי, ויצאה לרשות על ידי מומחים חיצוניים בהקשרים טכנולוגיים ועוד, אבל עדיין יש פער, אני חושב שלא רק אצלנו, אלא בכלל ברגולטורים שחייבים לתת עליו את הדעת בכל ההיבטים.
אז תודה רבה, ואני באמת זכיתי להיות נציגת האקדמיה בוועדה המייעצת, ובאמת היו שם דיונים מאוד מאוד מעניינים ומשמעותיים. אנחנו נעבור עכשיו לשלב השאלה הייעודית, הייחודית. אז יאיר, אני אתחיל איתך. בימים אלו מושלמת החקיקה של חוק העיסוק בשירותי תשלום, באמצעות חוק ההסדרים, ומבלי לעסוק בשאלה האם ראוי להעביר חקיקה כזאת משמעותית בעזרת חוק הסדרים, או שזה מה שמצוי וככה אפשר לקדם את הנושאים האלה. מדובר בחקיקה מאוד מאוד משמעותית שעוסקת בשירותים פיננסיים שניתנים באמצעות טכנולוגיה. והשאלה שלי אלייך, בהנחה שהדברים יעברו עד סוף החודש, מה הם האתגרים העיקריים שאנחנו רואים בהמשך ההליך ההסדרה של הפעילות הפיננסית המפוקחת?
עובד? אז באמת ה-PSD, אני חושב שזה נקודת ציון ככה, ובכלל בהסדרה של השירותים הפיננסיים, אם אנחנו מסתכלים בשנים האחרונות, היה לנו את החוק שירותים פיננסיים מוסדרים, קשה להאמין, אבל רק ב-2016 בכלל הנושא של רוב השירותים הפיננסיים של לא בנקאיים הוסדר פעם ראשונה, ואחר כך היו לנו באמת את השירותי מידע, ועכשיו עם ההסדרה הזאת של השירותי תשלום, בעצם יש איזו השלמה ככה של שירותים שהם טכנולוגיים יותר, איזה ועדכנים, מביאים אותנו ככה מבחינת התוכן של ההסדרה ככה לאן שצריך להיות, בשילוב כמובן עם ההסדרה של הנכסים הדיגיטליים, שגם אותם מאוד חשוב להשלים, ואני מבינה ששמואל ידבר על זה אחר כך, אבל אני חושבת שאנחנו כבר במצב שאנחנו יכולים ככה לראות את הסוף, לראות את ההורייזן, שלפחות מבחינת התשתית ההסדרתית, יש ככה משהו להתחיל לעבוד איתו. אבל אז ברגע שככה קצת מרימים את הראש, אני חושבת שאפשר לזהות שתי בעיות רוחב משמעותיות, בהסדרה שיש ובהסדרה שמתגבשת, והן קשורות אחת לשנייה. קודם כל הבעיה שידועה, אבל היא רק הופכת יותר ככה אקוטית מיום ליום של הפיצול הרגולטורי, של ריבוי הרגולטורים. יש לנו עכשיו בעצם הרבה חוקים עם הרבה רגולטורים, הרבה הוראות. אני חושבת שבחקיקה שנדבר עליה של שירותי תשלום, זו חקיקה של מעל 130 עמודים, ואם אנחנו מנסים לזקק ממנה את החקיקה המהותית, מדובר אולי ב-20 או 30 עמודים. כל שאר החוק בעצם עוסק בניסיון המלאכותי לסרטט קווי גבול בין שירותים פיננסיים שונים בגלל שהם מוסדרים על ידי רגולטורים שונים, ניסיון להימנע מכפל רגולטורי, ניסיון להימנע מהוראות חופפות או הוראות סותרות וסמכויות לרגולטורים ורגולטורי על ושר כזה ושר אחר, למנוע כפילויות רגולטוריות ולמנוע פגיעה בגופים שבעצם היא כל כולה נובעת מהפיצול של הרגולציה, שזה באמת בעולם שהטכנולוגיות עצמן והשירותים הפיננסיים הולכים לעולם של convergence, כאילו בעצם הולכים בכיוון ההפוך, וזה היה ברור גם קודם, וזה ברור לכולנו, אני חושבת גם עכשיו בממשלה, שצריך למצוא לזה פתרון ארוך טווח. אני מקווה שיתפנו גם לעסוק בזה. והנושא השני הוא קשור בתוכן של הרגולציה, שבאמת בגלל שאנחנו צריכים, הפער בעצם בין ה-time to market של הטכנולוגיות ושל הרגולציה הולך ומתרחב, ואם לממשלה אז לקח 10-15 שנה להתחיל להסדיר את האינטרנט, בעולמות של צ'אט GPT צריך כנראה לעבור לפחות ליכולת הסדרה בחודשים, וזה מחייב.
אין ספק שעכשיו מפגינים יכולת חקיקה מואצת, אני חייבת לציין שלא ראינו בהיסטוריה, ונקווה שאולי לפחות את זה יהיה אפשר למנף לתחומים שחשוב להאיץ בהן את החקיקה.
חקיקה אוטומטית, כן. אז יש כמה, כלומר גם ברור שצריך לעבור לחקיקה שמבחינת התוכן שלה היא יותר מבוססת עקרונות, מה שיאפשר גמישות וחדשנות, וגם שהיא באמת היכולת לפרסם את הרגולציה תהיה יותר גמישה ולא תדרוש חקיקה ראשית, אלא באמת להעביר סמכויות לרגולטורים עצמם, ויש באמת את חוק ייעול ההסדרה של חוק ניירות ערך, וצריך לראות איך עושים את זה במקומות אחרים, כדי באמת שאפשר יהיה להעביר רגולציה שהיא מהירה יותר ועדכנית. זהו.
תודה רבה. אז נדב, נעבור אליך. לרשות המיסים למעשה יש שני סוגים של אתגרים כשהיא עוסקת בנכסים הדיגיטליים. קודם כל עצם החיוב במס או הכרה בזה שיש פה איזשהו אירוע מס ואיך אנחנו מבצעים את החיוב, והדבר השני זה האכיפה והגבייה, איך אנחנו אוכפים וגובים בשווקים שהם מתנהגים בצורה לא מסורתית. והשאלה היא איך הרשות מתמודדת עם האתגר הכפול הזה בשני הרבדים שלו.
אוקיי, אז אני אתייחס. ראשית, לגבי האתגר הראשון, נכון, זה גם מה שפתחתי איתו, זה עצם הסיווג, הוודאות, איך בעצם אנחנו מנתחים את אותן עסקאות דיגיטליות, שדווקא במקום הזה אנחנו בקומפורט זון שלנו. זה בגדול, זה שהעסקה נעשית על בסיס חוזה חכם, על פלטפורמה דיגיטלית, היא לא משנה מבחינת המהות שלה, ולכן ככל שפונים אלינו וככל שאנחנו רואים צורך מבחינת השוק, אז אנחנו דואגים כמה שיותר מהר לפרסם, לשקף את העמדה שלנו, שקודם כל תהיה ודאות באשר לנגזרות המס מהעסקה. הפן השני, שהוא הפן התפעולי, הוא הרבה יותר מורכב, במרבית המקרים הוא גם לא תלוי בנו. מה שקורה, אני לא יודע כמה מכם ערים לדבר הזה, אבל ישנו מצב אבסורדי של אנשים שמשקיעים בטכנולוגיות הדיגיטליות האלו, בפלטפורמות האלו, בחוזים החכמים האלו, בסופו של דבר לא יכולים לממש את ההשקעות האלו, לממש גם כניסה וגם יציאה לתוך המערכת הפיננסית הבנקאית שכולנו מכירים, מה שמאלץ אותם גם בגלל היעדר רגולציה, ושלוקח זמן להקים את הרגולציה הזו, אז בעצם הפעילות הזו עד עכשיו בעיקרה נעשית על ידי גופים מחוץ לישראל, גופים כאמור שהם לא כפופים לרשת המס ולרגולציית המס של ישראל, ולכן הדבר הזה מטיל קושי רב לאנשים שפועלים בתחומים האלו, לדווח ולשלם את המיסים שלהם בזמן וכראוי, ואני אהיה קצת בוטה, אבל המצב פשוט גורם לאנשים מסוימים נורמטיביים, לעתים לעבור על החוק, או לעבור על תשלומים לרשות המיסים. אנחנו מנהלים את הדברים האלה אפילו ברמה של בתי משפט, של אנשים שתובעים מוסדות פיננסיים בנקאיים, על כך שהם לא נותנים להם את הזכות להפקיד את הכספים האלו בחשבון הבנק שלהם בישראל, וזה משהו שמעסיק אותנו כבר 5 שנים, לצערי אנחנו לא מוצאים פתרון. אני מקווה שבחודשיים הקרובים כן נוכל להציג איזושהי פרצת דרך כפתרון זמני לבעיה. כמובן שפתרון ארוך הטווח נמצא אצל החברים פה לשולחן, בעצם בהסדרה הרגולטורית, כי כן אנחנו רוצים שתהיינה פלטפורמות ישראליות שפועלות מישראל. אנחנו מעודדים את זה, מבחינתנו כל פלטפורמה ישראלית שפנתה והיא עוסקת בדבר הזה ויש לה רישיון, אנחנו מאפשרים ונותנים פרי-רולינג כדי לאפשר את הביזנס הזה, כדי לאפשר את עשיית העסקים, כי אין ספק שהפעילות הדיגיטלית והחוזים החכמים זה מעודדי פריון וצמיחה, וחשוב שאנחנו נהיה שם תמיד ראשונים כמדינה.
אז תודה רבה, ובקשר ישיר אני רוצה להפנות שאלה לאופיר. בעצם מסורתית היינו מדברים על עולם החברות וניירות הערך המסורתי, שיש בו איזושהי תחרות רגולטורית, שחברות יכולות לבחור להתאגד במקום שבו הדינים נוחים להם, וכשאנחנו עוברים לעולמות הטכנולוגיים ולעולם הפינטק, זה הופך להיות עוד יותר עניין משמעותי. בעצם חברות הפינטק לא חייבות לבוא לפעול בישראל, הן יכולות לפעול איפה שהן רוצות. אנחנו רואים חברות פינטק רבות שהיזמים בהם הם ישראלים, אבל הן בוחרות לפעול בחול, ולכן יש פה חשיבות מאוד רבה של ההסדר הרגולטורי המקומי, לעומת הסדרים זרים שאנחנו רואים בעולם. אז השאלה שלי זה איך הרשות לניירות ערך מביאה את זה בחשבון כשהיא מסרטטת את קווי המתאר של הרגולציה של עולמות הפינטק, ואיך אנחנו בכל זאת משאירים את חברות הפינטק בישראל.
כן, זה נכון. אני רוצה להתייחס קודם למשהו שיאירה אמרה בנוגע למבנה הרגולציה. שוב, עמדה שלי אישית, לא עמדת הרשות, אבל אני חושב שבהרבה מקרים הקושי נוצר לא בגלל ריבוי רגולטורים. כלומר, אנחנו יודעים שכשמסתכלים ברחבי העולם, אז השיטה שלנו היא לא יוצאת דופן. כלומר, עדיין ברוב המקומות בעולם יש מבנה של 3 רגולטורים באופן זה או אחר, ובמיעוט יש או רגולטור אחד או טווין פיקס. הקשיים הנקודתיים שיש אצלנו, בראייה שלי, הם נובעים מכך שרגולציה מסוימת מפוצלת, תחום מסוים מפוצל בין כמה רגולטורים. למשל ה-P2P, למשל ה-API, מה שהיה עכשיו, אולי בתשלומים זה גם באופן מסוים, ואז מתחילות להיווצר הבעיות או הארביטראז' שאנחנו נתקלים בו, אבל מספר רגולטורים הוא עדיין המודל המקובל, לפחות מבחינה סטטיסטית, כן, אפשר לדבר מבחינה עיונית מה נכון, אבל סטטיסטית זה לא יוצא דופן. לעניין השאלה שלך זה נכון, כלומר אני חושב שרשות ניירות ערך נתקלת באתגר אחר מהרגולטורים האחרים, בהקשר של שילוב טכנולוגיה בפעילות של הגופים המפוקחים שלה. כי בעוד שהמפקח על הבנקים, או במידה מסוימת גם רשות שוק ההון, יכולים להורות במידה זו או אחרת לגופים המפוקחים שלהם, לשלב טכנולוגיות או לתוך המוצרים או לתוך השירותים בלי חשש שהמפוקחים שלהם יעזבו את הארץ, כן, הבנקים פה הם נתון והגופים המוסדיים גם, אז במידה מסוימת זה נכון דרך אגב בתחומים אחרים, המפוקחים של הרשות הם, אני קורא לזה אלקטיביים, כלומר חברה, וכמו שציינת, גם חברה ישראלית לא חייבת להתממן על ידי הציבור, גם אם היא בוחרת להתממן על ידי הציבור, היא לא חייבת להיות ציבורית בישראל, בדומה פינטק ישראלי, הוא לא חייב לפעול בישראל, הפוך אולי, אם אני יזם של פינטק, אני רוצה לקבל רישיון אירופאי שפותח לי 500 מיליון לקוחות, ולא רישיון ישראלי אולי שפותח פחות, אם אני מתייחס לרגולציה כקוסט, ואפשר אני חושב בגדול להגיד את זה, באותו אופן קרן נאמנות, אם אני לקוח, אני לא חייב ללכת לקרן נאמנות ישראלית, אני יכול, כלומר רוב המוצרים שלנו שמסתכלים עליהם, הם לא חייבים לפעול בישראל, לא חייבים להיות פה, ולכן האתגר שלנו הוא איך לא רק להבין טכנולוגיה, ולסרטט רגולציה שהיא טובה מבחינת טכנולוגית, אלא לשרטט גם רגולציה שהיא זולה מבחינת השירות או מבחינת החברה, כי ככל שהרגולציה שלנו לא תהיה דומה למה שקורה בעולם, ככל שיווצר פער שישית עוד עלויות, אז הם פשוט יבחרו לא להיות פה, ואנחנו רואים את זה קורה, רואים הרבה, על אף שבישראל יש, המספרים משתנים, כן, חלק עם 550, חלק 700, שמעתי הרבה מספרים של חברות פינטק שמגיעות מפה, שנוסדו פה, שאפילו פעילות מפה ופונות רק כלפי העולם, רק מיעוטם בחר לפעול בשוק הישראלי, ובראייה שלנו ואחרי הרבה גם עבודה שעשינו, זה לא בגלל שהרגולציה הישראלית היא חונקת או לא טובה או לא זה, אלא בגלל שהיא הרבה פעמים, גם יש מקומות שהיא עדיין לא קיימת, כלומר, למשל, ברוקר דילר, חקיקה שחסרה לנו, יש גם איים כאלה, אבל גם במקומות שהיא קיימת, היא שונה, השונות הזאת יש לה עלויות ציות, עלויות אחרות, והחברות פשוט מעדיפות, נגיע לישראל, אבל נגיע לישראל כשנגיע למדינות של 10 מיליון לקוחות, ונעבור קודם את כל המדינות האחרות. ולכן האתגר שלנו הוא לעשות את הרגולציה משהו יותר, כמובן, מוגנת, כי זה התפקיד, הצ'ארטר המקורי שלנו, אבל גם נוחה וזולה. ובהקשר הזה אני מפנה למשל להסדר הרישום הכפול, שהוא בדיוק עם אותו רציונל. חברות ישראליות שבחרו להירשם מחוץ לישראל, מצליחות, כי שם האבלואציה הייתה יותר גבוהה, שם הייתה יותר שכירות, נזילות וכו'. רצינו גם שתהיה להם רגל בישראל, איך עשינו את זה? אמרנו להם מה ש-good enough בוול סטריט, מספיק טוב גם פה, ואז הצלחנו, אני חושב, באופן לא מבוטל, יש יותר מ-50 חברות דואליות שנסחרות בישראל, ובאותו אופן אנחנו מנסים לעשות גם במקומות אחרים, מתוך ההבנה שלנו של המערך של התמריצים. אז באמת בחקיקה של שירותי מידע, יש פרק או כמה סעיפים שנותנים הקלות, אם אתה מגיע עם רישיון זר. בחקיקה של התשלומים, גם ניסינו לעשות את זה. בקרנות נאמנות, אז יש את ההסדר של קרנות נאמנות זרות, אתה יכול גם, אם אתה מנפיק של ETF, מבורסות מסוימות, לבוא בהסדר שהוא גם הסדר רישום כפול, וכל פעם אנחנו מאוד מאוד מיינדד, לסרטט חקיקה שהיא לא רק נבונה, ומכירה את כל הפן הטכנולוגי וכו', אלא שהיא גם זולה, על מנת זולה מבחינת העלות הרגולטורית, כדי שהיא תהיה אטרקטיבית לחברות לבוא הנה, אתגר מאוד מאוד לא פשוט. אז זה דבר אחד, ודבר שני שהוא מהווה קושי, אני חושב שדי ייחודי, לנו הוא שחקיקת ניירות ערך היא מאוד מאוד קשיחה, יאירה הזכירה את זה קצת, ולכן אנחנו יודעים שקשיחות או נוקשות וטכנולוגיה זה הרבה פעמים מתנגש אחד בשני, על מנת להגיב לשינויים טכנולוגיים, אנחנו צריכים להיות מהירים וזריזים, ואצלנו כל דבר אנחנו צריכים כמעט לעבור בוועדת הכספים, בחקיקה ראשית או חקיקה משנית או הליך מסורבל לצורך העניין, להבדיל מנבטים או מחוזרים שרגולטורים אחרים יכולים להוציא, וגם פה זה משהו שאנחנו הוזכר חוק ייעול הסדרה, וכלים שיתנו לנו יותר גמישות על מנת להגיב לשינויים טכנולוגיים. אז אלה באמת שני הקשיים שלנו. א', שהמפוקחים שלנו הם לא שבויים, אנחנו צריכים חקיקה אטרקטיבית או הסדר אטרקטיבי כדי שיגיעו הנה, כולל חברות פינטק שאנחנו רוצים לראות אותם פה, והדבר השני שמבחינת תגובה רגולטורית אנחנו קצת יותר מסורבלים עם רגולטורים אחרים. אוקיי,
אז לסיבוב האחרון והמהיר, אני ממש רוצה במשפט שניים מכל אחד מכם לשמוע על עם איזשהו מבט לעתיד, איך נראים היעדים ארוכי הטווח שלכם במקומות שמהם אתם באים, ואפשר להתייחס גם ברעיונות לשיתופי פעולה בין הרשויות השונות מעבר למה ששמענו פה כבר שקורה, ואולי יש לנו פה הרבה מאוד אורחים מהרבה מדינות בחו"ל, על איך גם משתפים פעולה עם מדינות שונות בעולם, כי נכסים דיגיטליים יש מאפיינים שהם מאוד מאוד גלובליים, ולכן כנראה בלי שיתוף פעולה, זה לא יוכל לעבוד עד הסוף, אז אולי נשנה קצת את הסדר. נדב, נתחיל איתך.
אוקיי, אז החזון שלי הוא קצת ורוד, אני תמיד אופטימי. אני באמת מאחל לנו ואני מקווה שנצליח להגיע לשם, שאנחנו לא נראה את כל הפלטפורמות וכל ההתפתחות הדיגיטלית הזו כאיום אלא כהזדמנות, וכרגולטורים נדאג להיות שם מבחינה דיגיטלית. זאת אומרת, אנחנו צריכים לשנות את הקונספט של איך אנחנו חיים כחלק מאותה בלוקצ'יין, מאותה שרשרת דיגיטלית, ואת כל הרגולציה בין שלנו כרשות מיסים ובין של הרגולטורים האחרים, פשוט לעשות אותה על הפלטפורמה. היום כל המידע הוא דיגיטלי, אנחנו בעולם של רגולציה וביקורת מהטובים שיש, ואנחנו מתחפרים עמוק ועמוק ועמוק יותר ככל שהטכנולוגיה, זאת אומרת, יש פה איזשהו אוקסימורון, משהו שלא מתכנס, ולכן אני מקווה שבאיזשהו שלב יהיה פה איזשהו היפוך של תקליט, ופשוט אנחנו כרגולטורים נשב כבלוק אחד בתוך השרשרת הזו, כרגולטור, מבלי להפריע, ויש פה גם רצון של הטכנולוגיות עצמן, מבחינת הפתיחות שלהם, ה-API וכו', לשתף במידע, ואז אנחנו נהיה בעולם אחר. פשוט מקווה.
טוב, כן, אולי באמת הרעיון הזה של ה-convergence, שיהיה גם ברגולציה, ואולי גם חסר לנו ככה אלעד וידר, אבל הוא באמת הלבנת הון שחקן ממש פיבוט בתחום הזה. צריך אולי גם להזכיר שאנחנו מקווים שיהיה איזשהו צו אחיד, שכל השוק גם יתכנס סביבו, ויתנו כל מיני הקלות רגולטוריות, שאנחנו גם מנסים מאוד לשאוב וללמוד מהעולם, איך אפשר לעשות את התהליכים האלה בצורה יותר חכמה ויעילה, ובלי צורך לפגוש אנשים פיזית, ובעצם לאפשר את כל ההיתכנות הטכנולוגית הזאת, גם בהיבטים האלה.
אני חושב שהדבר החשוב הוא שיתופי פעולה, כלומר זה המפתח, אני חושב שטכנולוגיה מקצרת טווחים, וגם בין מדינות וגם בין הרגולטור לשוק, כלומר ואנחנו צריכים להמשיך בתהליך שהתחלנו בו גם פעילות מול השוק וביחד עם השוק, הזכרתי קודם, תוכנית פיילוטים, הרבה שיחות עם השוק, כלומר דברים שבאמת אני מרגיש שבשנים האחרונות העמקנו בהם, כולל הקמת יחידות ומחלקות ייחודיות ברשות שזה התפקיד שלהם, והדבר השני הוא באמת עם הרגולטורים המקבילים בעולם, עם ארגונים בינלאומיים, רשתות בין רגולטורים בעולם, כפי שגם ראינו, כמו ג'יפין שאנחנו מעורבים בו מאוד ומקומות אחרים, ולפעול ביחד, תוך שכל אחד זוכר את התפקיד שלו, כן? כל אחד שישמור על הצ'ארטר שלו, אבל יש עוד הרבה מן המשותף, שרק בעבודה משותפת יהיה אפשר להגיע.
באמת תודה רבה לשלושתכם, היה מאוד מעניין, חשוב, משמעותי, קיבלנו גם איזה קריאת כיוון לעתיד, ואני מקווה שניפגש פה שוב פעם, כולנו בעוד שנה, נשמע מה קרה בשנה החולפת, ואיך השתנו באופן דינמי היעדים לעתיד ולהתפתחויות הטכנולוגיות החדשות. אז תודה רבה לפאנליסטים. And now we'll switch back to English, and our next speaker is Dr. Shmuel Abramson, who is the Senior Deputy to Chief Economist in the Ministry of Finance, and he will talk about digital assets. Thank you, Shmuel.
Okay. So thank you for the invitation. Ken, yes. Okay, let's check if it works. Okay, great. Good morning. Thank you, Moran, for the invitation. I'm Shmuel Abramson. I'm a Senior Deputy to the Chief Economist. And in the 15 minutes of this short talk, I will give you some illustration of where we in Israel stand in terms of regulating digital assets. What I'm going to talk about is based both on a report that we published this November and a cabinet resolution that was passed, a government resolution that was passed this February, which gives broad projections and decisions that relate to digital assets regulation in Israel. So first, a few statements on where we in Israel stand, which I think resonate also with many other advanced economies that deal basically with the same challenges that we deal with. First, one thing about risks. So we cannot downplay the risks. Of course, both risks to the investors, consumers, and to the market as a whole, financial stability, monetary risks, and so forth. But at the same time, I think it is safe to say that the whole advanced Western world is in some understanding, a mutual understanding, that at this point, the risks are contained and can be contained. Plus, we need good regulation, and we need clear regulation in order to make sure that these risks remain contained. So this is one understanding, that we are not going towards a banning of this world, but rather than doing our best to create regulation that deals with these risks. I can also add that in some ways what we've seen in the past year with several cases of bankruptcy, of investors losing their money, was actually in some ways a good reminder and good way of clarifying the risks that we see, be it fraud risks, being risks of excessive risk-taking, lack of transparency, and all those things that we actually know from the traditional system, but we did get a good, clear reminder, which will probably help us also devise better regulation. Now, from the point of Israel, in some ways, maybe you might say we are lucky in that case. The level of penetration of digital assets in Israel, when we compare it to other countries, all based, of course, on surveys, we don't have all the real data, shows that Israel is still, in some ways, behind, maybe in a good way, of this penetration, unlike other countries, including the US, that the penetration of the use of these assets is much more prevalent. In terms of opportunities and potential benefits, which is also very important when we come to devise policy, it meets Israel beyond the whole maybe global way of looking at the potential. For Israel, we have some special points in this case. First of all, we have a large fintech ecosystem, which was also mentioned here by Ophir, and if we want to be part of the future in the fintech ecosystem, we also need to see that we are open for playing in this new playground. Another point in Israel is the issue of low competition in financial services. We have a fairly concentrated, low competitive banking sector mainly, but also other financial service providers. And we do see this penetration of digital assets as a potential to shake this market, in some ways make it more efficient, more competitive, and we also welcome that. Of course, all this given the containment of the risk. I will also say, as a small country, we do not imagine that we will be the ones who will set the global regulation on this. We look at the larger countries, be it the US, the EU, or other international forums, and hope we'll be able to see them really devise some global infrastructure which we can follow. This will be, in our terms, the best scenario. Now let's dive a bit into what we see in Israel. What are the main impediments? What are the main barriers? Many of these things were actually also the short-term and the long-run barriers were also mentioned by the panel beforehand. I'll try to repeat it shortly. First of all, we have in the short run, we can say we treat it as a triangle of three areas where together they affect each other and create an impediment. One being the licensing of digital asset providers. So in this area, we actually had a lot of advancement in the past year. 4 providers already have been granted licenses, which was not the case a year ago. The licensing enables also better ability to bring money into the banking service sector because they abide AML regulations and so forth. The banking sector has been very, very difficult. I would say very conservative in Israel. This is an issue that also relates to some extent also to questions of competition. And then there's the issue of paying taxes, which Nadav also discussed. So in order to pay taxes, you need access to a banking account, which is not always available when you don't have a good licensing system. So all these are discussed together. And also in paying taxes, there's also a lot to do to further clarify the way you pay taxes or the law. Then we have issues of long run, are more substantial issues that also were mentioned in the panel. So one relates to issues that are not really only connected to digital assets, but financial regulation in a broader sense. And it's the fact that we have a regulatory system that is fairly fragmented in Israel. We have a sectoral system, in many ways similar to the US. In the US, in some senses, it's even more fragmented, but we are fragmented enough to make it very, very hard for fintechs to operate here, to be to have to adhere to different agencies. I can say that even in the US, as I said, it's a problem. In the EU, in some ways with the state and the state level and the EU level also create some complexity. So kind of the whole world is dealing with these challenges. There are some lucky countries that have one regulator that can really take a broad look at everything, but not most of the countries. That's one area, and then there's areas that we just do not have the right regulation in place. Be it stablecoins, which is an area in Israel that is de facto completely not well regulated. In that sense, we're similar to the United States. We're similar to the UK. The European Union has advanced some regulation on that, and we are in our cabinet resolution also following some of the principles that the EU laid out. And then there's other areas that need either clarification or really new regulation, being it assets that are not securities, but are financial instruments that use digital assets. We have the whole world of DeFi that needs clarification, and then there's the issue of decentralized autonomous organizations. Before I go over what the cabinet decided and what are the next steps in Israel, I will say a few principles that we laid out, and I think most countries can really relate to that. First of all, the issue of providing clarity. This whole issue of digital assets is super uncertain, and the government, at least at its part, should do the most it can to provide its clarity on, or at least lower the uncertainty that inherits in its position. This is one guidance that the government is asking us to do. The other thing, and I mentioned that, is the issue of alignment to international standards. I think it's safe to say that that there is a problem in this this arena. The global superpowers, the global world, was not able yet to really convene themselves and create some broad standard setting in this arena. I think this is definitely a sweet spot of what can be done and is not done at the moment. So I said we have the EU that kind of went ahead, but the UK, the US did not, and also the international organizations that can be a platform are not yet been able to really devise a global way of working there, be it the OECD or other forums. And we hope that in that sense, there's going to be an improvement. I think it's very well needed. Then, again, an issue that we need to always remind ourselves is not to be too rigid, enable flexibility and innovation when we devise regulation. And of course, the issues of avoiding arbitrage when it's possible, avoiding regulatory gaps. We definitely connect to the slogan, to the idea that was devised in the US of same business, same risks, and same rules, which need to be also provided here. We understand that there might be specific risks to digital assets, but when we do look at issues, for example, DeFi, we do need to ask ourselves, are these specific risks for the business, or maybe these are basically the same risks that we need to also regulate them the same way. So this is the last slide, which puts down the main, there's a lot of letters here, a lot of fonts. You can find it online also, but these are the 6 pillars of where our government is heading. One area on the left top talks about the ability to look at licenses that are provided by foreign regulators and take them into account when we when we give licensing in Israel. This is a key issue, especially given the global nature of license providers, of service providers in digital assets. The second area is expanding the scope of supervision. This relates mainly to the ISA, the Israeli SEC, where we need to make it very clear that core activities that the ISA regulates, when they are done by digital assets, from the concept of technological neutrality, we want the ISA also to be able to regulate them. So that's another area. The issue of simplifying tax payments. So here, as Nadav also mentioned, we are going towards making things more clear by law and other regulations. And we also are thinking of a path of enabling private sector to pay taxes also through a bank account of the government, of the tax authority, in the central bank in some cases when the commercial banking system does not enable them to pay. In terms of the banking sector and the banking system, this is an area that is less part of the government. As a government, the regulator is a separate independent regulator in the central bank, but also there they declare that they will be monitoring and taking action in order to ensure the more smooth acceptance of money into the system. Then we have the whole issue of stable coins, which is something that is really at its infancy in Israel. First, we need to decide where the regulation is going to be. It's not clear at the moment, given also the fragmentation of the system. But once that will happen, we will go towards a legislation process of roughly a year. That's the timeline that we put there of establishing the regulations on that area. Last but not least is the issue of DAOs, of the decentralized autonomous organizations. The government has decided on creating a task force headed by Ronnie, that's sitting here, and myself, which we will, in the next half a year and a bit more, sit and try to devise recommendations for the government, the way it will treat these organizations in the way they act, both in terms of the way we should treat them as a corporate or not a corporate, in terms of the way they need to be taxed, issues of financial regulation, and so forth. So these are the main 6 pillars that the Israeli government is taking forward. And I hope, as Moran said, that in a year, if we meet, then we will see some kind of V's on this checklist. Thank you very much.
Trying to figure out how the puzzle fits in. Thank you very much to Dr. Shmuel Abramson. This is a really great segue for our next panel, which will be focused on digital assets. And we'll talk about regulating digital assets, and some of the stuff we just heard will be super helpful. And so I have with me Eva Mischler from the London School of Economics, Marco Delbera from the University of Zurich, and Elad Finkelstein, a little bit south of here, not across any borders, but from Ono Academic College. And thank you very much for joining us to this discussion. And we talk about digital assets, we talk about regulating digital assets. And I guess one thing that people often neglect to mention is that it really is the case that, and we mentioned this a little bit last year actually in the conference with Sebastian Omlor from Germany, which has been one of the leading countries in sort of trying to figure this out. Digital assets, and I guess Eva, this is for you, if you don't mind starting with this question. Digital assets push the boundaries of property law. And when we talk about digital assets, we really kind of need to regulate their custody. This is something that we've seen to be an issue. We need to work this out better. And it's not a coincidence that last year we had a professor from Germany talk about this, because the UK, where you're situated in Germany, have been leading the fronts in that area. Can you share a little bit more about that with us?
Yeah. So thank you very much for inviting me here. It's wonderful to be here. One thing that is fascinating about digital assets is they turned out to be an invitation for us to go back to legal history and almost legal prehistory, because it's a new thing, and we need to work out what they are, and for that, private law precedes regulation. So the question is, what is it? Is it property? And for that, you have to revisit what is property, for what, how do we define concepts? And it's fascinating how the UK and Germany have taken different paths. So what happened in the UK was a jurisdiction task force was convened, and that was led by 4 practitioners, by 4 barristers, who toured the country in seminars, gathered information, and then wrote a statement, which is now the basis on which judges argue. And they went back to work out what is property. And the trouble they faced is traditionally English law distinguishes choses in action. And from the very term, you can see how very old this idea is. So that's an idea that moved into the common law when William the Conqueror entered the country, because it's legal French that he brought with him. So choses in action and choses in possessions are the 2 categories. Choses in possessions are easy, they're tangibles. Choses in actions traditionally are rights, and that is a claim against someone. And the very big problem became, can we expand that category to make it a category of everything else other than tangibles? And that's what the Jurisdiction Task Force did. They said it's a residual category, and the argument can be, it's not, especially for Bitcoin and other cryptocurrencies, there is no right. But that category was expanded through that method. The Germans, on the other hand, just passed a law which doesn't apply to cryptocurrencies but to digital assets, and they did this very straightforwardly. They said they are recognized as property and they're transferred like tangible assets. Goodbye. Which solves the problem of recognizing them, but doesn't solve the problem of how do we then analyze a transfer. And those problems, of course, then come back to us, and we need to work out how we adapt the law and custody to do that. So I think there's a really sort of interesting property law background to this.
And I think this is building up on that. We've heard about different areas in which we regulate digital assets, and obviously the capital markets and anti-money laundering and taxes and all the things we've just started discussing earlier. But as we kind of look at that, at digital assets as a type of property, and there are other regulations, other types of regulations that perhaps need to be addressed, and other types of disputes. And I guess that leads me to my question to Elad, which, so this kind of different regulation that needs to come into play, not the capital markets, not the taxation, not the anti-money laundering, when we view it as something that we transfer and we deal with and conflicts arise, what do we do? Can you share a little bit more about that and what needs to be done?
Yeah, I think we'll take the discussion to private law and to commercial law. And, in Israel, it's still a theory. We have no judgments and no special laws. But if we think about the DeFi, decentralized finance, so it offers tools of traditional finance like lending and borrowing. But instead of relying on the bank, so the transaction are made to peer-to-peer basis as via smart contracts on the blockchain. And if we think about the central autonomous organizations, it's an organization with no leadership or hierarchy. Tokens functions as allocating voting shares and ownership, and still all of the relations between the parties are in a smart contracts in the blockchain. So when we think about smart contracting, I'll take the discussion to contract law. So we can think about 3 forms of smart contracts. You know, the first one is when the contract is in a natural language and the code is just making the actions. But we can think about a hybrid contract when we can see part of the contract is via computer code, and then we have to decide what is the relations between the code and the natural language. And I think the most interesting is when we speak about smart contract, that all the contract is via code of computer code, and then we have especially a very interesting dispute that can arise regarding how to interpret the contract and how to enforce when there is dispute between the parties and so on.
And I guess, Marco, the next question is to you. So we were talking about whether, you know, we should view digital assets as property and how do we resolve disputes between parties. And all of this, you know, we talk about this, it's obviously not, you know, these are not tangible items. And you have focused a lot in your scholarship on the metaverse and the potential relationships and parties' interactions. What about digital assets in the metaverse? And some of your work is focused on how to regulate that and their status. So.
Okay, thank you so much for your question. Thank you for your invitation. Yeah, I mean, this conference personally comes at a very special time of my scholarship because I've been finishing a huge project on the regulation of the crypto economy, and I'm starting to dive into the metaverse. That is kind of an exotic topic. We don't clearly know what the metaverse is at the moment. There are a couple of definitions that I find quite interesting. I can tell you that there's a colleague of mine that said what the metaverse is and will become relies on the collective sense-making processes outcomes. There is another author, Herman Narula, that is focusing on the way the metaverse emphasizes different forms of exchanges, including value exchange. Now, what's the relationship between the emergence of the metaverse and what we've been witnessing in the last years, and especially DeFi? And one way of looking at DeFi probably would be to think about it as the finance of the metaverse. I'm not saying that the metaverse relies exclusively on crypto, because there are different determinants. There are brands, creators, influencers. There's the huge role of cloud, big tech, and gaming industry. But in addition to that, we have this layer of NFTs, crypto, and blockchain that becomes one of the foundational layers for developing the metaverse. And this is connected somehow to what Eva was saying about the importance of property and how property evolves and how proprietary rights evolve. What's the role of property in the society? And the answer to that is that property and proprietary rights exist also because they are, up until now, given the technical tools that we have, they are an efficient form of societal organization. Now, decentralization, if fully implemented, gives us the opportunity to rethink this very traditional framework. And in the context of my theoretical question, my research question is whether in the context of a synthetic universe, as the metaverse could be, would financial mechanisms and as a reflection of financial mechanisms, financial law become dominant in this new paradigm? Would financial law and financial mechanisms in a way phagocyte other mechanisms of the society and other areas of law? And in this sense, we could say, well, NFTs are not necessarily securities, but fractional NFTs are clearly securities. And fractional NFTs don't share the key characteristics of NFTs, of course, because of their fungibility, of the scale and the scope of exchanges taking place in this context. And because fractional NFTs allow for exchanges in many different contexts, including proprietary rights, then my question is whether we are witnessing also a financialization of all these situations. And what is interesting in this new form of societal organization that is clearly complementary to what we have now as a real society, and that I hope it's here to stay, is the fact that financial laws would be predominant. And this is unusual in comparison to what we witness in our current societal organization. So these are the main questions that I'm considering.
And I think that also corresponds a little bit with what Ophir Eyal was mentioning before when he was talking about regulating influencers and all these new different environments in which we're operating. But I want to go back to one of the principles that was also on the screen a few slides ago that Shmuel Halvorson mentioned, which is the technological neutral. And I want to ask, and maybe I can start with you, Ray, if you think this is actually a viable principle, and if you think this is actually workable, do you think that we hear this often? What do you think of this point?
Yeah, so you hear it very often. And before I answer this, let me say this is a really good time to have this conference. And that's because the EU has started doing work on MiCA. The UK has a consultation that ended in April about the regulation of digital assets. And I just heard from Dr. Abramson here about what Israel is doing. So this is a really good time to be considering this because everybody is in consultation stage. And coming back now to your question, everybody talks about technological neutrality. And that seems to be a comforting term, this idea of we're going to do something that is technologically neutral. And it works as a concept when you think about same risk, same regulation, but maybe not quite same regulation, but more same risk, we should regulate. This is doing something that is similar to what we're regulating now, so there should be a way of bringing this into the regulatory realm. And my view is, at that point, we should stop thinking about technologically neutral, because the question of how we regulate then is very closely linked to technology. So I'll give you the example of custody and safekeeping. Everything we do and know about custody and safekeeping is connected to paper. It's this idea of an asset being in some form manifested in a physical format through paper, and then we lock it up and all's well. Now, digital assets are not represented in paper, and therefore you cannot lock it up. So when you approach the idea of how to keep them safe, you need to be immediately aware of there's a private key. How do you keep a private key safe? Private keys can easily be shared. And what do you do with situations where there is a multi-signature environment or a multi-party computation environment? How do you make sure that when you have a regulatory rule that an investment advisor needs to have a custodian who has possession and control of the asset, so that could be a regulatory rule, ensuring safekeeping for clients, and the SEC has recently proposed an amendment to the custody rules where they will require investment advisors that hold client assets for their clients to use a qualified custodian, and that qualified custodian has to have possession and control. And somebody then needs to decide, what does it mean to possess and control a multi-signature private key? Is that enough? Or what do you do with a situation where the client as well as the advisor has access to the key? Does that then mean the regulatory requirement isn't complied with because the custodian doesn't have possession or control of the key? And all of those questions are very far from being technologically neutral. They're very closely linked to technology. So I think technological neutrality as a sort of regulatory goal, there's nothing wrong with it, but it needs to be, it has to be abandoned the moment we think about what we do, because approaching it through concepts that were developed in relation to paper doesn't help us solve the problems. That just distracts us from developing adequate solutions for the problems that arise here.
Yeah, and I think that's a very interesting perspective. And Marco, you've actually done some work looking at exchanges and how historically this concept has changed and shifted from traditional exchanges to the non-traditional ones, I guess, crypto-focused ones, right? Kind of looking at the concept of how much they're intermediating and what they're doing and how they're holding, and some of these questions that we've seen with that made these questions of custody become so relevant because the newer entities were doing things so differently. I'm wondering if you could share a little bit about your research in terms of like going through the history and I guess actually evolution, right, of exchanges to where they are now, and what has changed so much that requires such different, unique perspectives.
Yeah, thank you. What is really interesting about all these questions is the historical perspective. I realized I knew nothing about the way the law evolved, and so it was really great it was an occasion, a unique occasion to rethink the key fundamental structures that we take for granted. And capital market infrastructures are very much understudied in a way, not only clearing houses, but also stock exchanges. And so I was dealing with these new crypto trading platforms, starting from the traditional role of stock exchanges. Now, stock exchanges have existed for a century. They have clear functions in the financial and economic system. They provide a trading venue. They are information providers, they are SROs, and more recently, they run for-profit businesses after the huge wave of demutualization. And then, in addition to traditional stock exchanges, we have broker-dealers providing an intermediation, acting as intermediaries while also investing on their own account in the proprietary trading. And the intersection of this key to market actors then leads to the emergence of what we think crypto exchanges are these days. And crypto exchanges are, well, the notion of crypto exchanges is definitely very vague and very far from the activities that a traditional exchange would perform. There are there's a huge expansion in the functions and in the services provided. So crypto trading, crypto swap, leverage trading, all the services in relation to shadow banking, in a way, lending, staking, launch pads, and so on, which also triggers a problem in terms of conflict of interests related to these key fundamental institutions, and also in relation to the importance of self-regulation in the context of these new paradigms. My question is always, what are the real incentives of crypto trading platforms in a situation in which we know that creating self-regulation is expensive, requires investments, enforcing self-regulation is even more complicated. And so in this context, what are the incentives if the time horizon is very limited? We have witnessed a huge turnover in this industry. And in a way, this is preoccupying if we compare the key fundamental players in the crypto economy with, I don't know, the New York Stock Exchange. Would you ever imagine that the New York Stock Exchange would fail as a consequence of banking services that were provided? Because this is what happened with some of many digital platforms that were also benefiting from the vagueness of the way they were marketing themselves and their activities. This is the case of Celsius and Voyager. Do we really know whether they were marketing themselves as broker-dealers or exchanges? And these are very different activities. These are very different risks involved. And then, of course, when it comes to FTX, we witness the apology of all the mistakes with these two major layers, the Lehman layer with the liquidity of the securities involved, and the Enron layer. So a very weak and a poor corporate governance in place that then leads to the implosion of these fundamental market actors. I think that what is interesting is that we're here to talk about intermediaries. And in a way, this could be, to some of us, a contradiction to the idea of full disintermediation. But probably we have to be careful about the meaning of the words that we use and have clear in mind that full decentralization doesn't necessarily mean that there won't be any form of intermediation or any form of centralization. And I don't want to take too long, but just to give you an example, when you think about decentralized finance, we clearly think about a fully decentralized paradigm. But then, to implement this fully decentralized paradigm, we have some form of centralization. Some stablecoins are centralized, but nonetheless, they come with some risks, but nonetheless, they triggered some discourses and debates and a broader implementation of decentralization. This is the Tether and Circle, for example. So to come back to the problem of stock exchanges and crypto exchanges as intermediaries, we need some form of intermediation. We need some form of gatekeeping functions and guarantees within these systems, even if this might sound as a contradiction in relation to what we think decentralization is.
So that's a very good point, and it actually leads me to my next question to Elad, which is, so we talk about, decentralization. Obviously, regulators prefer centralized entities. It's much easier to regulate when there is a centralized entity. Some other regulatory initiatives we've spoken about actually can only work when you have some intermediaries. And Elad, you've done some work on other options when there are no centralized entities or intermediaries. And one of the ways is obviously to resolve disputes in such situations or conflicts is find other ways like ADR. And I'd love to hear a bit more about that, because that's something that is not spoken much about. But perhaps if we shift more toward decentralization, we'll need much more of that, given the situation we'll find ourselves in.
Yeah. First of all, I want to tell to all the regulators that you committed 1 year to come here with the new development. But when I saw that the last conference was 10 months ago, so you don't have so you don't have the whole year. And I'm seeing just another word that when we speak about the regulation of smart contracts, we also see that even so we speak about technology, when we come to law, we are coming back to the basic questions of law, even though we are dealing with technology. Regarding dispute resolution, I just want to let you know the new rules in the UK, the digital dispute resolution rules, and there are some unique features that maybe fit to smart contracts and to the new world that we have. As of course, there are rules of efficiency, and the dispute need to be very fast to be to an end. But I want to relate to another three points. First, there is an optional anonymity of the parties. There is an arbitration that the arbitration organization is know who are the parties, because there's money laundering and other regulations, but there is a possibility for the parties to be anonymous from each other. So just the arbitration organization is know who are the parties, and this is very interesting. I think the most interesting thing is that in the new rules of the UK, there is a power of the tribunal to implement awards on chain. So I just will read you the rule. It says like this: the tribunal shall have the power at any time to operate, modify, sign, and cancel any digital asset relevant to the dispute using any digital signature, cryptographic key, password, or other digital access or control mechanism available to it. And the tribunal shall also have the power to direct any interested party to do so, any of those things. So the arbitration, they can enforce the awards, and I think it's something new that we need to think about. To think about, and another point is the potential incorporation of automatic dispute resolution process. There is a automatic resolution process is defined like this. I shall read you the rule again. Process associates with a digital asset that is intended to resolve a dispute between interested parties by the automatic selection of person or panel or artificial intelligence agents whose voting or decision is implemented directly within digital asset system and so on. So I think the future is here with the alternative dispute resolution and the arbitration that will go direct to the smart contracts, and it's a new era that we need to think about. Thank you.
Super interesting. Maybe we'll later when we talk about AI in finance, we might get to a connecting point where we talk about algorithmic smart contracts and kind of how to combine all worlds together. I guess so. One last question for each of you to kind of wrap things up. So we talked about the custody and traditional securities, and I guess I wanted to ask you, like, where do you think we're going with this? Like, what are the current issues or the next few issues that we'll need to focus on, or you anticipate in terms of like the custody of digital assets?
So to this, I would say, so one thing I think we need to pay attention to very closely are the contractual arrangements that are being made in the custody industry. And we saw this problem emerge when it went from, in the UK, from paper settlement to computerized settlement. The biggest issue has become the custody contracts that individual investors are signing. There's a lot there in the small print that then has the effect of disenfranchising investors through securities lending, through liens. And I've just looked up for this presentation here what's happening in the United States with the SEC's recent custody rules. So what they're doing is they're saying a custodian has to be fully responsible for a sub-custodian. There is an understanding on the kind of rules that need to be contained in such a contract. So I think one area where we need to pay attention to is what kind of arrangements are being put to investors when they enter into custody arrangements. Because the idea that a negotiation process takes place isn't really a realistic one. Investors, in my classes, I always ask my students, put your hand up if you've ever read the terms when you signed up for anything online. And sometimes there's an odd person and they raise their hand and they explain that they're kind of odd because that's what they do. But people just don't read contracts. And that's the idea that there's an informed consumer reading a contract, understanding their rights is, I think, not realistic in this space, if it ever has been anywhere. Yeah.
Yeah, I completely agree. Actually, this was one of the reasons that the biggest data aggregators offering the services, the plumbing services of open banking in the U.S. settled the class action, settled the class action that was filed against them last year because of the issue of informed consent, and consumers basically had no idea they were using all sorts of third parties for payment services and financial transactions when they were using pled services. And I guess in addition to that, what other thoughts do you have of like future regulatory initiatives that we can promote or create to kind of add to what we currently have on top of like what we currently have in the ADR world, I guess, and the existing laws?
Yeah, I will take the discussion back to contract law because this is what I'm doing, and I think that the next step we need to think how to regulate contract via computer code, and there is of course the question of how to interpret a contract that was written only with code. If you can just leave the code and if there is mistakes, so it's a problem of the parties. Or maybe we need to think about the reasonable coder when we think about how to interpret a contract. And another question that was regarding the DAO, when they state in their internet site that only the code is forming the relations between the parties, and then we need to think about the laws through the use of code deterrence. And just write me I think that it remains an open question if parties can bind themselves to the outcome of executory smart contracts code, no matter what. Regarding the DAO, the famous DAO in Ethereum, they had a solution without going to legal court, just made a fork, the famous fork in Ethereum. But when this question will come to court, so we need to work about the answers. So I think this is the next thing, how to deal with contracts via computer code.
And I guess, Marco, if you could give us your thoughts about future regulatory initiatives in the market infrastructure within the crypto economy. I know you're working on a few cutting-edge projects in that area. And
yeah, I'm working on the regulatory approaches to this, to market infrastructures, and more generally, I'm trying to understand what is the regulatory approach to regulate disruption. And again, we are struggling with identifying a notion of disruption. What is this? How do we deal with disruption? And this, of course, is related to market infrastructures, but is a more general problem. And the way I approach this is by looking at disruption from a complexity science approach. In my research, I've been trying to characterize disruption happening in the context of the crypto economy as a multidimensional change. After the financial crisis, we witnessed the emergence of Bitcoin, that is a monetary related structure, and then the underlying technologies applied to capital formation, then corporate governance with digital securities and NFTs. Again, the monetary aspects come out when stablecoins emerge, and finally stablecoins trigger the reaction of central bankers with the emergence of more structured financial networks. So this is what I identify as multidimensional. And by the way, complexity is fundamental to emphasize dynamism in financial markets, not as a structural attribute, as generally scholars and regulators do, but to identify ways to anticipate the changes, which leads me to the other key fundamental aspect of dynamism and complexity, which is trying to identify alternative forms of regulations that are not merely an ex post reaction to scandals, and the resulting rules are supposed to be there in place forever, but thinking about different forms of smart regulation, where of course there is the limit of the rule of the law and legal certainty, but regulators are empowered with other tools, in particular a fundamental use of sandboxes, innovation hubs, reliance on data for anticipating some forms of developments in the markets, but also a more rigorous historical approach, because in my research I realized that a lot of things happening in the context of shadow banking applied to crypto are an extension of what happened before the financial crisis. And so regulators should probably then now try to understand and develop toolkits for regulating centralization, for regulating the other spectrum, that is full decentralization, and at the same time the transition of a business model from centralization to decentralization. And I think this is an important development that at the moment I'm not seeing. And let me say also something. I was at the Ethereum Foundation conference in Zurich, where I went there to listen, so I didn't speak at all. I was with a leather jacket to make questions without getting any questions from the people. And I was surprised that there were no regulators at all in a context that is becoming extremely complex, technologically and financially. And with a lexicon developed by teenagers or people who are in their early 20s, that I wonder...
I believe the professional term is FinTok.
That I wonder whether regulators understand these epochal changes, and they also do not underestimate a transition towards decentralization that is now happening. So this history that we're saying that everything is centralized and will remain as it is, it's simply a story that is not entirely true. So if you, here there's a very vibrant startup ecosystem. So I encourage the regulators who are in this room to wear a leather jacket and go to this kind of meetings, because it's very important to make naive questions without putting at stake reputation and everything, but just to have a point of entry in this very complicated environment that now is emerging.
I mean, I'm not sure about the leather jackets, but definitely.
I mean, it's too hot here for a leather jacket
in Israel, but definitely. But this does echo what Nadav and Yaira were saying in the earlier panel about maybe figuring out, using technology, actually using RegTech to be part of the system and actually be more connected by design to be able to solve some of these issues. And complexity theory is always good to mention. There are at least two professors here from Amsterdam and IE that I know write a lot about that. So thank you very much. And we're holding you from grabbing a croissant and coffee. So we'll take I think at this point, 20-minute break and resume for the next panel, which we will be conducting via short mini TED Talks type of presentations, talking more about these issues.
Okay, hi everyone. I hope you got a warm cup of coffee or tea, because I'm freezing here. A quick note. Okay. So hi everyone, I hope you can hear me. My name is Avital Krupnik. I'm very excited to be here, and thank you again for Moran and Nitzan for the invitation. I work at the Israel Securities Authority, which is a designated regulator on these new fields, two new fields which entered into the realm of the ISA supervision, open finance and payments. And I'm here to tell you a bit about those two. So our starting point is actually Europe. We took the Israeli government decided to actually adopt the amended Payment Service Directive. We call it the PSD2. It's from 2015, so it's been a while that it was already transposed into European countries and also the UK before Brexit. And we started there in order to try to improve the Israeli payments market, which is very concentrated and low competitive market, as Shmuel said before. And the Israeli government decided to split between the information side and the payment side. And I'll split it as well and talk to you about those three main problems that were the background regarding information side. Because if we, as consumers, wanted to actually understand where we manage our money, where we are having our financial services from various and different financial providers, we had to go and collect this financial information by ourselves and to build those very long Excel sheets to have a complete picture. And that's not talking about the second and third problem. If we wanted to improve our situation and to search for better value propositions, then we had to do it again by ourselves and to bargain by ourselves and to compare between these value proposition was a very hard task. I think all of us can understand it once we, once we get offers of loans and deposits, and we need to understand their different, little letters and their different sections, and we try to compare them. We have a very limited ability, and not to talk about the limited ability to actually customize those offers to ourselves, to our unique characteristics. So this created a big headache, as you can see here on the right, and but it also created a very interesting opportunity for fintech companies, which started helping people to receive their financial overview in one place in simple, very friendly applications, as you can see on the left, with graphs and with financial insights, even WhatsApp messages that can help you ease the way to understand your financial situation. So this was the background for the Account Information Service Law, which was enacted in 2021. It entered into force almost a year ago, June 2022. And as I told you before, the Israeli government decided to adopt the PSD2, but since the PSD2 was already transposed in Europe in 2015, 2016, until 2017 even, then we already, since we got in late, we have also the advantage of learning from the UK and European experience. So this is why our Israeli law actually not only focuses on open banking, but also goes a bit further into open finance. And it does so by three main steps. It does so by first expanding the information sources, meaning not only banks are mandated to share the financial information upon having, of course, the explicit consent of the customer, but also credit card companies and other non-bank credit loaners, and also even insurance companies and provident funds regarding the credit that they give and supply to customers. Also more types of information, meaning not only payment and current accounts, but also credit card transactions and loans and deposits and other sorts of credit, and even securities transaction is soon to be open for this open finance reform. And what we also did is go even a bit further away and to include, we decided to include SMEs and corporate accounts in the law, which we now understand from the UK and Europe is a very main and interesting business model for those account information service provider regarding businesses which need to have their own financial overview as well. Trust is, as we all know, is a key to success in the financial market, and this is why the Israeli law mandates some duties on the account information service provider towards their customers. As you can see here, duties of disclosure and confidentiality and care in order to actually deal with those core risks that are inherent in this activity, such as data security and saving, privacy protection, cybersecurity and risk management, since it's all technological and on the net and on the cloud, we all understand those risks that need to be taken care of. So this is why you have also those important duties. But we didn't stop there, and actually now is a very good time to talk about the regulation of payment services, since we are now finishing the very long and intensive discussions in the Public Projects Committee and the Knesset. It's supposed to be enacted, this law, until the end of May as part of the arrangements law and the budget. And why are we doing this is because, as you can see, we are moving towards a cashless society. And the number of cashless transactions is supposed to more than double itself by 2030. And this is even not actually updated because, as you can see, it's from 2021. I think today numbers are perhaps should be even larger. So our legislative goals on this important law was to open the market for other alternatives of and attractive payment alternatives, but also to ensure the fairness and public confidence in those new PSPs, as we call them, payment service providers, facilitate their access to payment systems, as we shall soon see, and to promote competition, because as we talked earlier, our Israeli market is very much concentrated, unlike Europe, and we try to open it to competition and to improve the Israeli customer situation. So 3 main topics that were discussed in this law. First of all is how to regulate those non-bank PSPs. The Israeli regulation was fragmented, as my former colleague said, and it is still fragmented, but now it's more whole because before it was lacking in a several very main issues. So regulating non-bank PSPs was a very important pillar of this law. Another pillar is regarding payment initiation, which is a new way to pay. It should be an alternative even to credit cards for all of us buying online services and other objects, as it's supposed to ease our way of making A2A payments, and it's actually based on the same API interfaces that were used for the open finance reform, as we spoke before. And another chapter regarding the competitive market. It contains a lot of sections regarding on how to make sure the Israeli market will be competitive. So it contains sections regarding connectivity between large peer-to-peer applications and other duties on large issuers and acquirers on the way to actually operate between themselves and the other, of course, financial providers in the market. Access to payment system is also another important pillar of this regulation. What it means that once a regulated PSP receives their license from us, then it has a much clearer and much easier way to access payment systems. Those regulated PSPs will be able to choose whether they want to participate in those payment system directly or indirectly. And it's supposed to help promote competition, to decrease their dependency on banks, as it is now well known as that for now their only business model is to go through a bank. So receiving a license will help them actually connect directly by themselves without the need to have a bank as an intermediary. And of course, to make those transfers all of us do online much faster, more secure, and even less expensive, since we cut the intermediaries in the process. What I want to tell you about that those two long and intensive laws were made very much with joint efforts with all of the government agencies and offices involved, meaning the Ministry of Finance, the Ministry of Justice, us, the ISA, the Bank of Israel, the CMA, the Capital Markets Authority, and even the Israel Competition Authority. All of us had to sit around a very large table and to discuss all of these sections and all the details of those regulations. And we keep on doing it when we need to implement those two laws. And I think it's a very good example of cooperation, and I hope it will also lead to a better and less fragmented financial regulation. So we're here to make this happen, and we see ourselves as an enabler, although some look at financial regulation as a burden, we see it as an enabler, and we try to open and to develop this market by also ensuring the public, of course, confidence and their, of course, benefit. So thank you very much.
So thank you so much, Avital. And our next speaker is Tomer Michaeli, General Partner at Viola FinTech.
Hi everyone, my name is Tomer Michaeli. I'm a general partner at Viola FinTech. Viola FinTech is a fintech-focused fund, managing $200 million in asset management. Part of the Viola Group, which is the largest tech-focused investment group in Israel. Viola is also the largest and most active fintech investor in Israel, investing in all the different verticals of fintech, from banking to payments to lending to insurance to regtech and so on. And really, I need to tell you a little bit about what we've been through over the past few quarters, and what despite all the gloom that you're hearing about fintech, what are the opportunities ahead? So what basically happened in the past few quarters? So basically, it started with global tensions that caused things like pressure on supply chains and energy prices. That in turn created an inflation that we haven't seen for over a decade and a half, and in general, highly uncertain macro environment. In turn, what most regulators did, in order to fight inflation, of course, increased interest rates. That, of course, created downward pressure on valuations because, as you all learned in finance, when the discount rate goes high, is larger, basically prices go lower. That in turn created, a pressure on becoming more efficient on corporations. We made them, go through, reduction in force, which is a nice word to say basically they laid off a bunch of people, which increased high unemployment. Also, what happened is actually we came out of COVID, which means that a lot of the predictions regarding the faster adoption of areas like e-commerce actually became irrelevant, and actually the adoption of e-commerce actually slowed down, and that basically created some more pressure on things like increase in growth and so on. The fact that consumers have fewer jobs, etc., and prices are higher means that people have less disposable income, higher credit card balances. That means that, of course, businesses that get less revenue, so it really creates sort of like a vicious cycle. And that, of course, manifests itself in many ways. First of all, in the global markets, in general, NASDAQ and the S&P went down by 20 to 30% from during 2022. Also, the financial technology index also went down about 30%. Fintech revenue multiples in general went down very significantly. You can see from 2019 to 2022, basically revenue multiples went down sometimes by 90%, like in the case of InsurTech, as a result of higher interest rates. Global IPO market that was super active over 2021 and the first part of 2022 basically dried out. That means that a lot of the fintech companies basically relied on going into the public markets to raise capital. Basically, could not raise capital anymore. And that is, by the way, not a local phenomenon. Didn't just happen, not in the US, not just in the US, not just in Europe, not just in Israel, all over the place. But again, it's not like it didn't go down to zero, by the way. We'll talk about that later. It basically went down to sort of like normal averages of what we had before. So the message here that actually 2021 was actually an outlier year, and actually things are now not going, it's not like crashing, it's basically going back to normal. And remember that because we discussed that later. In Israel, we're still living here. Situation is no different. Again, comparing the NASDAQ to what happened to what we called in Viola ITI, which is basically index of the Israeli tech companies. So the NASDAQ went down about 35%, ITI went down almost 47%. And even though 20% of the Israeli unicorns are fintech, it didn't help them. And many of them that went public over 2021 and 2022, their stock prices fell until the end of 2022 by up to 90%. On the private investments, we see also what we saw in the global market, basically going back to normal. If in 2021 there were about 6 billion dollars invested in Israeli fintech private companies. That number went down to 1.6, and that reduction was mostly driven by what we call, the disappearance of what we call the mega rounds. The mega rounds are, the rounds of more than $100 million per investment round, which consists, as you see in 21, by the vast majority of the funds invested in 2021. And when those basically vanished, then basically we went back to that normal of somewhere between $1 to $2 billion invested in fintech private companies, Israeli fintech private companies each year. And also another reason why it's happened is, once recession is coming, investor stays go, from more futuristic and more sort of like future-looking areas to more what we call recession-proof sectors, like cyber, like DevOps, which basically is all around sort of like making companies more efficient, and we're going to talk about later actually, because this is actually an opportunity in enterprise efficiency. Also, by the way, in terms of the areas where the money went into Israeli fintech ecosystem, so whereas in 2021, most of the money went into payment and financial software and insurtech, basically we saw a reversion, and areas like trading and banking showed much more resiliency, whereas those hot sectors of 2021 basically crashed into the very end of the popularity list, if you want. And also in terms of deal sizes, we see basically that in valuations, we see that in Israel, across most stages, with the exception of the early stage, valuations went down, which is the first time within, again, many, many years, we see private valuation going down. That means that also investors in the private markets got the sort of like the signaling from the public market. They understand they have to, do corrections to that, to the private market valuations, and we see that. And probably going to continue with that trend for the next few quarters as well. So that's what's happened. Now, when we're moving into 2023, what are we about to expect? So first of all, higher cost of capital in general means that many of the fintech business models that existed before 2022 basically have very little viability. Especially around consumer credit. You think about things like buy now, pay later, unsecured consumer lending, and a bunch of others. Basically, once you have higher cost of capital, it's much harder to create a viable business model. Also, again, consumer credit in general, because on the one hand you have higher defaults, higher cost of capital. On the other hand, consumers have lower disposable income. That means that they spend less. Have lower revenues for the fintech. That also means that it's highly challenging for any business that involves consumer credit. On the business credit as well, as we said, businesses get less income. That means they can spend also less. Also, more businesses are getting closed. That means again also higher default rates also on the business credit side. That is also challenging for business credit as well. And in general, we're going to see a very strong shift from growth to profitability. If you can take anything from our discussion today, is that, if until in the past 15 years, there was a very strong emphasis on growth, and profitability was a little bit sort of like left aside, in the next few years, we're going to see actually the pendulum swings very, very fast towards the profitability side. But as Winston Churchill said, never let a good crisis go to waste. And we believe there's huge opportunity in fintech. And why? Because first of all, look at these graphs. So the left-hand graph, we see that basically financial sector is the largest by far globally in terms of gross profit pools. This is just public markets. On the other hand, if you look at the penetration of modern fintech companies that were established over the past 10, 15 years, even in the heydays of 2021, it was a single-digit penetration. That means there's a huge market to penetrate. And not only that, we saw that actually, you remember that I showed you all those fintech companies that went down 90% in the public market. When you actually do a regression and you try to understand what are the characteristics of all these businesses, the fintech businesses that got hit really, really bad by the financial markets, and if you look at the metric that of like the peak of the end of 2021 till the trough of mid-2022, you see that basically, the only strong correlation we can find is actually, next gen versus legacy businesses. That means that public markets really punished, fintechs just because they were young, not because, any other, not because of their EBITDA margin, not because of their sector, not because of their balance sheet intensity, and so on. That means that, basically fintechs were discriminated against without, only on the basis of age. And that means that the fundamentals of fintech are still strong. Huge opportunity, the fundamentals are still strong. And also there's a ton of opportunity. Why? Because a ton of companies have less than 12 months of runway. That for me as an investor means there's going to be a lot of opportunity going forward to raise, for companies who will come to me, ask for money, and also have much more reasonable valuation. So thank God, sideways.
Just think you need to remove the source.
No, it's still, I should add rest in peace, maybe, but it still comes from SVB. So when you're talking about the opportunities, we basically divide them in the next few years. In fintech, we divide them into 3 sectors. One is macro, markets, and technology. So in terms of markets, I think I touched some of these. So we believe that the opportunity lies in areas like financial inclusion, like increasing in liquidity, basically taking businesses and consumers that have large parts of their balance sheets illiquid, and through the use of technology, make them more liquid. You can think about anything from commercial residential real estate to asset to account receivables. Supply chain finance, if there's pressure on supply chain, what's better opportunity than provide a financing for the supply chain. Also consumers, want to have these days because of the sharp movements in high movements in capital market. They want to have better insight into their financials and so on. So anything around wealth tech and advisory is also a great opportunity. That's on the macro side. On the market side, so as I mentioned, huge pressure today on corporations to become more efficient, and that can only come through the use of advanced technologies like AI, generational AI, robotic process automation, and so on. And when interest rates on the rise and there's a shortage of cheap capital that was the driver for companies to grow, especially the B2C companies that basically use their cheap VC money to advertise on Facebook and Google and other places, basically that money is gone. So the only way for fintechs to grow these days is through areas like embedded finance, basically putting fintech or finance within products that are not fintech. Think about maybe a software for that, HR software that you get your salary slips on, and from that software you can get advanced against your working days, for instance, or advanced payments and so on. So embedded fintech and embedded and banking as a service is going to be very strong. And again, I think that the lecture before we talked about open banking and the usage of AI. We also think that when consumers are going into the recession, a recession mindset, that means they want to keep closer control on their expenses, on their salary, how their cash flow looks like. That can only happen in real time through technologies like open banking. And again, in terms of areas, technological areas that we see opportunities are, so again, generative AI. This is a huge revolution that is happening these days. Today, I think that in the short term, you're going to see it mostly embedded within existing solutions, just making them more efficient. But I think that we are excited to see how generative AI will help to think, entrepreneurs think, from first principles about solving problems in financial markets. And we're very excited to see what's happening in generative AI. And by the way, if some of you are entrepreneurs and have ideas about that, please come talk to me. Again, talking about open finance revolution, we talked about that. It started in Europe. It's happening now in Israel, and it's going to happen in many more markets and create many more opportunities. Also in embedding, again, fintech solution within other solutions as well. And infrastructure, I think that, you know, technologies like blockchain, for instance, you know, could be leveraged to create a much more advanced infrastructure for financial services, you know, anywhere from, you know, cross-border payments to real estate transactions, to syndications, and so on. So we really think, we're really excited about that as well. And really, you know, the message is that the Israeli fintech ecosystem is extremely agile, is extremely strong. We have a lot of belief in it. You know, this is just a fintech map. It shows you, you know, only the Israeli fintech companies that raise over $1 million, you know, from institutional investors. So you can see that the Israeli fintech ecosystem is strong, and that is why we still have a lot of faith in it. We're very excited about it. And thank you very much.
Okay. Hello, everybody. I just want to invite the next panel to join us for the AI in Finance panel. The following participants, Professor Nidia Ramon Leon from Singapore Management University Law School. Professor, I hope I pronounced the name correctly, Professor Jiang Jiang from the University of Florida Levine College of Law. And Advocate Amit Ashkenazi, the former legal advisor of the Israeli National Cyber Directorship, the National Cyber Security. Thank you for joining us, and thank you for taking the time to travel to Israel in this constant security problems. Okay. Thank you. All right. Happens to me all the time. You did actually. Happens to me all the time. All right. So I'm very excited to start this panel, and we'll start with a very short introduction by each of the individual participants, and we'll start with you, Nidia.
Perfect. Thank you so much for the introduction, and thanks especially to Haifa University and Nitzan for this kind invitation. I'm very excited. This is my first time in Israel, so I find it lovely, and especially Haifa, of course. I'm very glad to be here today because I'm always excited to share about not only my research, but the Singapore approach to things, particularly AI in finance. We have a distinct approach. If you, for example, ask someone in Singapore, what is the approach to privacy? What a lawyer will tell you is that in Singapore, privacy is not a constitutional right. So you may think, oh, so you have a surveillance type of state, and you don't care about privacy, and companies do whatever they want with your data. That's not necessarily the case. Actually, the way that the Singapore government and the regulators, particularly the data protection regulators, have tried to approach privacy is instead of including it as an individual right in their legislation, is that privacy or data protection is a legislation that helps companies to develop products, data-driven products, in a sustainable way. Sustainable in the sense that is responsible. So that approach doesn't mean that that companies disregard privacy or disregard those individual rights, but the perspective is different. Data protection is like an habilitator for businesses in Singapore. So that's why maybe you see a different approach in open finance, for instance. So in open finance, it's not mandatory, as in the EU, but voluntary, but the regulator is interested in orchestrating the scheme. So we have measurements to try to come up with ways to measure the success of implementation of open finance. When it comes to AI in finance, interestingly, of course, we have, as many other regulators, this approach from the Monetary Authority of Singapore, in which they have published this guidance, this principles-based type of approach, in which we talk about transparency, explainability, fairness, in the context of the applicability of AI in the financial sector. But the regulator said, and companies as well, banks, financial institutions, and fintechs said, well, what does this mean for companies in practice and for financial consumers? So MAS took another step forward, and the current approach is to develop in a partnership between MAS, banks, other financial institutions, and fintech companies, and also technology companies, another guidance. It's a set of white papers that developed an open source code for the industry. In this partnership, it's available actually for any company worldwide. It's available on GitHub. And this open source code tries to measure the impact on discrimination and the discriminatory outcomes in algorithmic credit scoring, for instance. So that's a very concrete way in evaluating fairness in the context of AI in finance. They did the same with other principles that MIS consider are the most important ones in 4 use cases. I mentioned already AI in finance in the context of algorithmic credit scoring, but also for money laundering purposes and preventing money laundering, of course. Additionally, for marketing purposes. So those use cases are the ones in which MIS, with the industry, has developed an open source code that companies can use to assess the consequences and the impact of the AI models that they are implementing in the industry. That's the Singapore approach, and looking forward to receiving more questions.
Hi, everyone. So I assume we are doing the 3 minutes intro remarks. My name is Jia Yin. I'm an assistant professor of law at the University of Florida. Well, originally I'm from China. Since our panelists talk about Singapore's approach, I can also bring in China's approach to AI in finance. And of course, I'm based in the United States. I can also talk about United States approach, but I think we have a better person. Kevin can talk about US approach to AI in finance. All right, China's approach. Well, China, I think that's not news. China has, demonstrated a very supportive and ambitious plan to implement AI, especially in finance. Not especially in finance, by the way. Finance is one key area, but another area is security. I will give you some data in a bit. So in terms of the policies, China has a mix of, for example, a means of guidance from the State Department. The State Council issue that's the most important policy, actually. In 2017, the State Council published the next generation AI developments that set a framework for AI developments in different sectors, including, of course, finance, security, education, transportation, and of course, and also, there are also industry standards. China's government work with industry participants to set up industry standards and also regulatory oversight, etc. And that's central at a central government level, and at a local government level, different from United States. States usually sometimes have different views on something and different views from central government, for example, on the federal level. But in China, once the central government issues a policy, local government just follow. And as a result of that, because the central government published the 2017 AI next generation AI plan, local governments issue tons of local policies towards AI. Some data is here. For example, as of 2020, 12 provinces, well, in China, in total, there are 23 provinces, has already developed local policies towards AI. And in Jiangsu and Hangzhou, by the way, Jiangsu and Zhejiang is where Alibaba, the headquarters of Alibaba is. These 2 provinces issues in total 140 local policies toward AI developments. And in Shanghai, the city close to Zhejiang, issued 55. You may wonder where is Beijing, because Beijing is the capital. It has more things to worry about. So Beijing has issued about 32 policies towards AI. So in total, that's a lot. And in terms of the investment, there is a requirement in the plan that each province need to invest 150 billion yuan in AI industry, AI core industries. As of 2020, Shanghai has invested about 50 billion in the AI industry, 100 billion, and Beijing has invested 50 billion, and Zhejiang has invested, Zhejiang, by the way, is a tech hub in China, and also Shenzhen, that's where I'm from, have invested 50 billion in the AI industry. But where does this money go? So a report from the think tank in China Actually, 53.8% of the money was spent in security. Security, including bio recognition, for example, facial recognition, fingerprint recognition, and also item recognition. Item recognition, give you an example here. In the United States, for example, parking, when you drive into the parking lot, there's a little machine, you press it and you get a ticket, and then when you leave, you insert a ticket and pay for whatever amount you park in that parking lot. But in China, you just drive in, drive out smoothly without doing anything because, you know, the camera can recognize your license plate, and then after you leave the parking lot, a few seconds later, you receive a text message saying that you have been charged X amount of money. So that's item recognition. Of course, applied in many other sectors as well. And finance is a key area of the economy. So 15.8% of the money of those investment is in finance, and then about 11.6% in marketing, 4.4% in transportation, and only 2.4% in education. Yeah, and then in healthcare, surprisingly, 0.4%. That's why, you know, the healthcare system there is still a disaster. And a few key players here are, for example, Huawei. I think I've heard of that on the news all the times. Huawei, and another one is Hike. I don't know the English. Hikvision. Have you heard of that? Have you heard of that company? Yes. Yeah, Hikvision. So it's a state-owned manufacturer and supplier of video surveillance equipment for civilian and military purposes. And it's, again, headquartered in Hangzhou, and it's on the entity list. I will be happy to talk about the implication in a bit. All right, thank you.
Hi. So very briefly for the introduction, just give a quick overview of what's going on with AI, the law, ethics, risk management globally and in Israel. Very basically, we're seeing a very quick trend of regulation coming to this area, a lot faster than we've seen law and policy developed in other areas of the space. And there've been the OECD recommendation on AI from 2019, immediately after that, adopted by the G20, and the UNESCO document about this issue, and the Europeans leading the way with regulation, which is legislating the core elements that these types of policy maneuvers are doing. All of these policy measures are dealing with three main issues. One is adapting and developing substantive principles to deal with artificial intelligence in general. So this, you know, from a law and technology point of view, you'd say this is the functional approach, looking at what are the new risks of artificial intelligence and how we need to address them. Issues that go to safety, security, transparency, fairness, and accountability. So that's one issue, deciding on substantive issues that apply. The second thing is dealing with the way that the government actually transposes these principles. And here we see this discussion of how do we apply these principles in specific institutional context. Should we have one agency? Should we have this deployed in a sector-specific manner? And this raises a lot of interesting discussions. And finally, the intersection between regulators and the mitigation of risk from the point of view of corporate compliance. What do we actually expect corporations to do on the ground with the deployment of artificial intelligence? And in this area, there's a lot of developments because we've seen the rising importance of standardization organizations. I would even go as far as to say that there's a standardization arms race between the ISO, the International Standardization Organization, which has a very active subcommittee on artificial intelligence, SC42. I'm a member of one of its expert committees, and it is very seriously and expeditiously managed. They're rolling out standards in a rather quick pace. On the other side of the Atlantic, as you can expect, the National Institute of Standards and Technology in the US, from the Department of Commerce, is developing its own flavor, and of course the European standardization institutions as well. So these are where things are getting, I would say, developed on the ground. Moving to Israel, over the last year, there was a lot of work regarding Israel's approach to regulation of AI, and the former government published a report about this issue, a co-production between the Ministry of Science and Trade and the Ministry of Justice, a very comprehensive report dealing with transposing the OECD AI principles and suggesting an institutional regulatory policy for Israel, which is a light touch in the sense that it wants to coordinate government regulatory approaches through having a shared taxonomy and shared principles, but not having one central agency deliver this regulation, but rather do it through coordination in the government level. Some criticisms have been voiced against this approach. I think I will, from now on, always cite Yaira, who talked about a legislation having 20 pages of substance and 60 pages of intra-governmental coordination. What does it tell us, the citizens and the regulated, about trusting the government? Anyhow, I spent most of my time in government, so I feel that I can voice this criticism. Anyhow, last point I think for this round is this issue that is very exciting and sexy and experimented, that we want to move regulation forward, and now we have something called agile regulation, right? So we have agile development of technology, and now we want to take these 60 pages of regulation and make them agile. So how do we do that? Well, we've touched upon this in the draft report. I was a consultant to the Ministry of Science and Trade, and we tried to develop the next level of thinking, how we mitigate between the risks that we're seeing because of artificial intelligence that were mentioned, and yet we give clarity to the market and protect consumers. So agile regulation is the technique that now is being unraveled. Thank you.
We actually have another one. Okay. All right. Thank you very much for the introduction. So the way that we want to structure this panel is to start with several questions to the panel, and then we'll open up the panel for the discussion. So we all mentioned a few pinpoints that I think is very interesting for the discussion. We all talked about regulation, and I think that one of the issues that we have to consider, and this is something that I would really like to hear what you are thinking about, is how you can reconcile international and very different regulation. So we have the EU, as Amit mentioned, which is getting closer, I think. At least last week we saw that they moved from after following, I think, 3 years, they just moved the act to the Parliament, to European Parliament, and we have other aspects that are changing all the time. Thinking about ChatGPT and the moving through generative AI is something that is a bit of concern, but it also sort of a new development that affecting everyone, and especially the regulator that are just have to maybe to rethink their current legislation and see what they need to do. So I think that finance, especially in a global market, it is very important to understand and to try to rethink how you can manage all these very different jurisdictions and very different legislation and legal framework to coexist together. So it's very interesting to hear what you think about that from each and every one jurisdiction perspective. And everyone want to jump in? This is
okay, maybe I can start. Very interesting developments in the regulatory space indeed. With the AI Act, Singapore, of course, MAS, particularly in the context of finance, started the conversation of whether do we need the same type of approach? Do we need more to move from the light touch approach in AI governance in finance to a more hard approach on that? The answer is, for now, no. And now the scheme is more centered in helping companies with the audit of the algorithms through these white papers that the Monetary Authority of Singapore and technology companies and financial institutions are developing. So these models are meant to help companies to develop these audits ex post. What is the consequence of not using these white papers and this guidance? Well, in theory, MAS cannot initiate an investigation against companies that are not using this because it's voluntary. But what we've seen in practice is that companies that are using this, and we already have a case that was decided by the Data Protection Authority in Singapore. This bank was HSBC. They used the guidance approved by the Monetary Authority of Singapore and the open source code to test the discriminatory outcomes of a model. They explained how the audit model was working for the client, and they redacted the final score, the outcome of the model. The client was saying, this is not explainable enough because I want to know my score. What the bank said is that because of proprietary reasons, copyright, and competition issues, they were not willing to share this information with the public, in this case with the consumer. The Data Protection Authority decided that the bank didn't have to disclose this information, and they comply with the data protection regulations and the principles-based guidelines to AI governance because they explained enough based on these white papers to the client what was happening with the model. And they, on top of that, were auditing the model with the open source code provided by MAS. So this in practice is something similar in our view on what the European Union wants with the AI Act, providing this or giving these important features in terms of AI audits for high-risk cases, use cases, namely algorithmic credit scoring, and also giving some guidance, principles-based guidance to the companies in terms of what they have to do when they use these particular models for the high-risk cases.
Thank you. In terms of the question how to reconcile that, I would say from China's perspective, domestically, it's very easy. Internationally, very difficult. So why domestically it's very easy? Well, you know, of course, there are different goals like financial stability, consumer protection, privacy protection, etc. But domestically, financial stability is the most important thing. So, you know, if, let's say, there's a conflict between financial stability and, let's say, consumer protection, undoubtedly, well, which one first? You know the answer. Financial stability first, because stability, financial stability, political stability, that's the most important thing in China because of the unique political system there. So domestically, easy. And once, like I just say, central government issue a policy, local government just follow. So no question here. But internationally, it would be very difficult, and especially when, you know, before China administration, China and the US, they are economic competitors. That's fine, that's good, that's very healthy actually. You compete for market share. But starting from China administration, US leaders treat China as a strategic competitors, you know, try to upend the post-World War II liberal international order. That would be that was very bad, because if you are a strategic competitor, then you are compete on different front. And as a result, for example, the example I just gave, many companies, many Chinese tech companies are on the entity list, the state government's list. If you are on the entity list, then US government agencies cannot collaborate with those companies. And individuals, business, they are not encouraged to work with those tech companies. So if you don't work with each other, if you don't collaborate, then it will be very difficult to set, for example, to figure out what are the problems here and how to address those problems, how to set the standards, and how to, you know, come up with norms. That would be very difficult. And at this moment, I'm not very positive about the result here, at least at this moment. Hopefully in the future we can see more, you know, more collaboration between these two countries.
So I guess we can tackle this question from 2 points of view. From a, let's say, economic diplomacy point of view, so-called the Brussels effect, the great book by Anu Bradford, talking about how the EU uses legislation to actually change the rules of the world and use its, let's say, internal market buying power to actually force its type of rules and values on other jurisdictions. From that point of view, that's for the big boys, and I will not speculate, but I can tell you that from what I'm seeing, I think that these issues are now more frequently discussed after the disruptive effect of the GDPR, Schrems 1, 2 decisions. So I think that we've seen both something called the US EU Tech Technology Council, which is a regular meeting, and it lists AI collaboration as one of its top issues. We've seen the declaration coming from Japan this month about AI being one of the top 5 things to be collaborated on the global level, and we're seeing a lot of leadership coming from the OECD, mentioned earlier, to create more harmonization between jurisdictions about how these principles play on the ground. From a pragmatic point of view, I think that all of these regulators, regulatory institutions, public, talk about actually issues of risk and harm and how we deal with these risks and harms on the ground. And those of us versed in cybersecurity risk management or data protection risk management, data protection impact assessments, know that this is a discussion of details, and there we are seeing some sort of convergence of the concepts. So at the end of the day, maybe the Europeans are feeling very brave in the sense that they want to legislate actually each one of the, let's say, policy parameters, what is high risk and what you are expected to do once you're under a high risk, and what type of evidence you have. And if you open Annex 4 of the, I think it's Annex 4 of the draft EU AI Act, it looked like something that one of our regulators would write in a guidance because it needs to be changed. It wouldn't be written in legislation. So for the legal policy people, it's quite surprising. But these types of concepts, we can see them even in Singapore, just under data protection law in Singapore, and in the UK under more, let's say, type of agile policy. So at the end of the day, I think things are converging. And if you want, I can talk about ChatGPT now or later. Yeah, so I think that's, okay, so basically, you know, these things about imagining or thinking about regulation and risk management, and you need to have some sort of concept about what is the animal you're trying to tame. And those of us dealing with this thing, we looked at AI, and ChatGPT was disruptive. Gen AI is disruptive in the sense that it is AI from the box. It's like having, you know, a Gmail account. It doesn't entail, from a organizational point of view, opening, so to speak, an IT project with data scientists and doing the whole, let's say, AI calibration lifecycle that is imagined under standardization. So companies, sometimes officially and sometimes by employees thinking maybe they can shortcut some of the hard work, are actually utilizing these tools from the box with just having an account in ChatGPT. So this is a disruptive effect that requires thinking like companies move to the cloud. It's an infrastructure that's there, and now they need to deal with it, and we need to see how regulators look at this, because obviously, as mentioned, Gen AI has a lot of contributions to more efficiency, and it can have a lot of competitive benefits, but at the end of the day, the ability to audit it is a lot more difficult because it's coming from outside. So this is the challenge.
Okay, thank you, Amit. And I think that one of the issues, and we're getting into the essence of the discussion before I open up for the questions from the audience. But we started talking about the risks, and I think that when we deal with regulation, I think the main aim of regulation and the regulator is to see how we can dissolve or address specific risks. And I would be very interested to hear what the panel is thinking about the concept of risks in the AI future. So what we're dealing now today is basically the risks that were posed by AI for the past decade. And now, as Amit mentioned, ChatGPT and other advancements are changing that as part of the disruptive technology change. So what is your perspective about those advanced changes and risks that we might have to address in the next few years, because it's really hard to see the future more than a 3 or 4 or 5 years. And I think that this discussion is also concerning the other impact that we already had with the GDPR and what we are facing today, addressing the problem that we had with implementing regulations in the past. So I would be very interesting to see to hear what you have to say about that.
Okay, so Very difficult question to answer because, of course, we don't know what is going to be the extent of the implications and consequences of the use of AI in finance. But I will link this to what we're seeing today. What we're seeing today is the automation created by the use of AI in the financial sector, for example, in lending markets, could perpetuate certain biases or discrimination against groups within those populations where AI is being used. So this perpetuation of financial exclusion is something that regulators need to work in. And it's not necessarily something that will be solved by changing the models or by changing the data, because the bias is in the data, and groups have been traditionally excluded even outside of the context of AI in lending markets. So regulators, if they want to really create some rules to promote financial inclusion, they will need to work outside even of the technology and what the technology implies, but also taking into consideration that the use of AI may perpetuate this discrimination. Additionally, something that more looking forward in some years within the implementation of open finance, I would say that financial stability, as you were mentioning before, it's a key challenge for financial regulators currently, not only because of AI generally, but also because of data-driven products, more broadly understood, and also the use of open finance. What we are seeing, for example, in Singapore is that the dominance of embedded finance is something that is going to be unavoidable. So the way in which financial regulators think about these other actors, big tech companies, technology companies entering in financial services, it's something that is going to be key in the future. And of course, these companies are much more, they don't have these legacy systems and much more well equipped to work with AI. So I think those would be the most important challenges in my view.
Well, yeah, it's working, yeah. So many risks for sure. You just mentioned discrimination, biases, etc. But I would like to piggyback to ChatGPT, GPT-4, or other large language models. Well, one of the key risks, again, my background, I'm a legal scholar, I was attorney, and from the legal point of view, I would say the use of all these large language model would directly violate duty of confidentiality. We talked about that last night at dinner. And I'm thinking about a solution here, because I mean, technology here is here to stay, and a lot of emerging technology like NLP or large language models are very powerful. In the future, we need to use it. Now the question is how to use it more effectively, more efficiently. And for attorneys, for lawyers, yes, you know, ChatGPT, GPT-4 can replace, well, you know, I use the term replace, but my friend at the IMF said, don't use the term replace, please, use the term transform. So now I would say, all these large language models had the potential to transform, for example, junior associate work at the law firm. Now the question is how to make full use of it. One risk is, for example, the potential violation of duty confidentiality. So the legal solution here is, we talked about last night, yeah, you can have agreement with, for example, with OpenAI, with all these companies, and make sure, and telling them that this is confidential information, and then don't train on this data, don't share this information, or they can have click through with very easy. But are there any technological solutions? I'm very curious. If there are any developers here in the room, I would be happy to talk to you about that. I would like to know whether there are any kind of technological solution. For example, whether we can encrypt certain data, certain confidential data, sensitive data, but in the meantime, those companies can still train this data and then provide a very accurate answer. Would that be a good solution? I don't know. So I would be happy to talk to you about that. Yeah.
So I'll be very abstract, and there's a good example I like from an article about value-based design, and it goes like this. In 2017, when a user said, "I'm so sad," a US Alexa device replied, "I wish I had arms to cuddle you." The Russian counterpart Yandex, on the other hand, replied to the same statement, "No one said life is a fun event." Now, when you think about this exemplifies the amplification of technology and the way that things that used to be regular or straightforward can all of a sudden get out of control because of the effect of technology to amplify and like a resounding board, I guess. We've seen this with social networks. I think that with ChatGPT, it's going to be a lot bigger, and we need to, and faster. So on the one hand, we want to embrace technology, obviously. On the other hand, we need to be very sensitive to the way values are embedded in technology, and we've not been that good in that up till now. When we see the way organizations embrace technology for cybersecurity, which is relatively straightforward from a value point of view, they need to protect their assets, they're not that good. When we talk about data protection and 88 pages of the GDPR, I'll be talking about this in Brussels next week with Tal, hopefully. So 88 pages of the GDPR, do we have more privacy? Are we content as citizens and consumers? Okay, and privacy is super important. And so, yeah, I'll leave you with that.
Yeah, I think we are just keeping you out of from your dinner, from your lunch, which is also something that we shouldn't do. But I promise to give maybe one or two questions from the audience. So if you have something that you want to address this panel, yes, all right.
The UK has published a draft on the regulation of critical third parties. And those are cloud service providers, but they're also saying they will roll it out onto AI. And what they're doing there is they're saying the critical third party has to self-assess and give the regulator, identify risks and tell the regulator how they're addressing these risks. And the risk assessment is one by reference to the goals of the regulation. And to me, that's a very ineffective way of approaching this, because it tells the critical third party, have a look at how you are affecting the financial system. Do some self-reflection. Tell us what you're doing, and then tell us how you're addressing it. I don't think the incentives are there. So I'm interested in how would you get a critical third party, an AI provider, to do something that enhances the goals of financial regulation. Because that's a really difficult task. They don't know about financial regulation. They don't know about systemic risk. They don't know about the financial system. And how do you bring them into the regulatory realm in circumstances where the financial regulators also don't know about what's going on in the critical third party space?
I can start. This is a very interesting question, because actually I was writing a paper on the problems of systemic risk in the context of cloud computing. And just in the context of Singapore, I met with some stakeholders just to get some ideas and some feedback on what I was proposing. Basically, I was proposing that we need to incorporate cloud service providers within the perimeter of financial regulation to assess the problems of systemic risk. Well, one of these big technology companies, I won't say the name, they were very against this idea, hesitant about it, and for them, the outsourcing regime that operates currently in most jurisdictions works perfectly. And they think they can handle systemic risk by these contractual arrangements between financial institutions and third-party service providers, which might not be the case. So it's a very interesting question, because what to do then? What I would say is that regulators need to maybe start a work that is more collaborative between technology companies, the Data Protection Authority, which is much more aligned with the regulatory goals that these technology companies are used to deal with, financial regulators, and in that context start entering them within this space. Maybe at first, as Singapore has done with AI, with a verification system or a certification that gives them like a stamp saying, okay, you're dealing with these risks in an adequate way according to MAS, the financial regulator, and the Data Protection Authority. Maybe that could be one first stage for those jurisdictions that hasn't taken the approach of the UK yet.
Well, in terms of how, I don't have a good answer for that, but I can provide you, I'd agree with you that the approach is ineffective, and I can give you another example, demonstrate that the approach is ineffective. For example, in China, a few years ago, there was a regulation that regulate blockchain service providers, including third parties. So who are blockchain service provider? Of course, crypto, for example, crypto exchanges, wallets, and those tech, including tech providers. So they need to meet certain regulation, for example, who they are serving, and then what kind of information they are collecting, etc. And then why is ineffective? And I talked to those blockchain companies and I asked them, like, it's including third parties, like tech providers, they are third parties. And I asked them, how do you meet, all this regulation? How do you comply with that? And then the general counsel at that company told me that, well, you see, here are the regulations. You need to disclose, like, for example, who you collaborate with, what kind of information you collect. You can, like, broadly meet all the requirements by saying that, okay, I work with ABC company and the information I collect, yes, these are, for example, the name, entity, etc. As long as you disclose this basic information, then that's good. You meet the requirements. And in terms of whether you can achieve the goal, the regulatory goal, the answer is no. Yeah.
So I think it's a great question, and I think to go forward with it, we need to think about the question of how we manage systemic risks in infrastructures in general, and how we make sure that the division of risk between the economy and the supplier and the user is mitigated in such a way that is not prohibitive to these type of infrastructures developing. And there's a role for the state there. And I think there's something logical in these infrastructural providers of large language models, for instance, saying we can't expect each type of use context, therefore we can't do the risk calculation in advance. I think that this is where developing this concept of agile regulation is useful, because I think that maybe the concept of regulatory sandboxes, where the regulator says, I am aware of what I don't know, and I need you, the company, to share this information in a controlled environment. Now, some think that sandboxes are like a get-out-of-jail-free card, saying you can ignore existing regulation and do whatever you like. Some of my former clients doing pilot IT projects also thought that. Everyone knows a pilot project becomes the real project quite soon if you don't manage that in advance. So at the end of the day, I think that having an experiment regulated by administrative law, so that it is intended to create transparent, explainable, and if you like, state-of-the-art social science knowledge about what's going on, I think that would be the way forward to mitigate risk. Now, and I think it would be better than this approach that you've described, because you're right, someone mentioned this earlier, self-regulation requires strong incentives for it to be effective.
30 seconds. Sandbox is not effective. And if you talk to a lot of companies, they are not willing to share their data with regulators.
Right. Thank you so much for the panelists, and thank you for the question. And moving on to the next.
Thank you, Aviv, Nidia, Jiaying, and Amit. And now I'm honored to invite Professor Kevin Wellbach from the University of Pennsylvania to a fireside chat with my dear colleague Nitzan Geslevich-Peki.
And we're literally the last thing holding you from lunch. So after this, if you didn't get enough of the fruits. So thank you very much for this fascinating panel, which is a great segue because China was mentioned. And actually, one of my first questions to Kevin, because you've done a lot of work with regards to China's credit system, is if you could, you've written about this, you've obviously explored it, and for those of you that are less familiar with the China credit system, you'll be hearing a little bit about it more now, but it's a sophisticated system that is based on data analytics, and it does offer a lot of opportunities, but obviously some challenges. It on the one hand could be used to promote people's lives, to open more doors, improve credit, and give more opportunities, but there are also some less appealing aspects of it. And I was wondering if you could share a little bit about your research.
Sure, I'd be happy to. Well, so I would actually take a broader perspective on it. If you ask, what's the broader phenomenon that's underlying all the things we're talking about today, AI, fintech, blockchain, digital assets, it's really the rise of the algorithmic society, which is something that's been going on for many decades, but has dramatically accelerated with some of the technologies we're talking about. And in this transition to algorithmic societies, there really are two foundational public policy questions. One is, how do algorithms regulate? What does it mean to have different kinds of data-driven, analytics-driven, and increasingly AI-driven in the future systems that they are influencing, constraining, and controlling behavior, both through private actors and through governmental actors? So that's one question. The other question is the reverse. What does it mean to regulate algorithms? What are the tools and mechanisms that can be used to exert oversight over those private and public algorithmic regulatory structures? And my contention in the paper that I wrote, it's called Orwell That Ends Well, is that the Chinese social credit system is basically the most sophisticated and comprehensive and extensively designed attempt to answer those questions. Now, I'm not saying, therefore, that it's the right answer, or it's a good answer, or it's a set of answers that necessarily should be exported elsewhere, but it's a system that tries to address all these issues. How can, for example, data across all different government agencies be aggregated in a way that has legal protections for privacy, that deals with the data integration and technical issues? How can data become an infrastructure layer for creating different kinds of incentive systems? The inspiration is the consumer credit system, which developed initially in the US back in the late 1960s and then became the foundation for credit markets. And then, Nissan has written about this. Now we have newer kinds of systems that are not just based on financial credit, based on social media and so forth. The Chinese system is trying to extend that more broadly to initially all government databases, and then build an analytics layer on top that creates incentives and feedback. So, for example, if someone doesn't pay their taxes or has a court judgment against them, and then later on wants to apply for some sort of permit, that there's a connection that can be made across those activities. And then there's the opportunity to build other kinds of systems on top. There are incentives for municipalities to create their own social credit systems that interface with some of this data. Now, this terrifies most people in liberal democracies. But my contention is what terrifies them, what makes them think this is Orwellian, is concerns about the authoritarian nature of the Chinese Communist Party and the Chinese state. And the question is, if you take that infrastructure, if you take the idea of data integration and data as an open infrastructure layer, so some of the things that we're talking about here with open banking, but much broader and being done across public and governmental data, and then an incentive layer about using the data and the analytics to achieve certain goals and to implement certain regulatory objectives, ultimately with things like AI and gamification, although starting with just sort of very simple rule-based systems. And then finally build on top of that what I call integral oversight, that the limitations and regulation of those tools is actually built into the mechanics of the tools and the systems themselves. If we can do that with a different set of public policy goals, with a set of public policy goals, for example, in societies that have a different conception about privacy and freedom of expression, what would that look like? Because I think we're going to need to go there. And I think the model from China helps illustrate all of the kinds of issues and the balance. On the one hand, there is value in having humans in the loop. On the other hand, humans can be corrupt. Humans can make mistakes. Humans can engage in abuses. And if you're talking about a system across an entire society, especially a large country like China or the United States, those get magnified. And so social credit, I think, is really a lens into thinking about and looking at how to potentially address all of those problems, which, again, has all kinds of implications for things we've been talking about today.
Actually, yeah. I was mentioning before when I was talking to a few people outside, the Netflix show Black Mirror, which obviously has an episode that portrays some of these concepts as you were just describing. And so we see that, while this is something that is very China now, we do see an interest and a shift in some features of these incentivizing types of mechanisms are embedded in the sharing economy that we have everywhere. And that's in my sharing economy class right now. We're also talking about some of these issues, but it is interesting how and which elements of this system would be copied or adopted in other places. Speaking of other places and other regulators, you've had a bunch of experiences recently testifying before Congress on several occasions in connection with the crypto industry that we were discussing earlier. And you've argued that the crypto industry might still have the potential to be a force for good for the world, but you've also warned about whether the industry is rife with fraud and abuse and some of the important aspects that policymakers need to be mindful of. And given everything that has happened, certainly in the last 6 months, but generally in the last year, where do you sort of stand on these issues now? What do you think are the main things that regulators need to be mindful of as they kind of think about this potential promise?
So you're asking some hard questions. We'd have to go not just through lunch or through dinner to answer some of these comprehensively. But so let me try to be brief. I bucket the digital asset crypto regulatory issues into 3 categories. One is investor or consumer protection. So disclosures, market manipulation, dealing with prosecution when there are abuses and fraud and scams. That's one. The second one is financial crime, money laundering, sanctions avoidance, and so forth, avoidance and so forth. And the third one is stability and soundness. So basically banking regulation and central banking. And all those issues need to be addressed. And what happened last year with the blow up in crypto markets and scandals like FTX and Terra Luna and Celsius, I think some policymakers, at least in the United States, drew the wrong lesson. The lesson that they drew, which is actually a correct lesson, is the good news is there wasn't tremendous contagion. Despite the fact that these were large, FTX was $40 or $60 billion at the peak, massively collapsed and now appears to have been essentially a fraud and a criminal enterprise from the beginning. Despite that and these other failures, we didn't see tremendous spillover into the traditional financial system. And so the lesson that a lot of policymakers have drawn is that we need to sort of tighten the restrictions on access of digital assets into banking. And I think that's actually a mistake. Because ultimately what needs to happen is to bring the digital asset sector into the financial regulatory perimeter, to do it in a way that's appropriate and understanding, but approaches that basically say there's too much risk, so ignore it. That's what allows for and sometimes facilitates the growth of these offshore, illicit, unregulated actors, which is the problem to begin with. I think what needs to happen is regulators to make a series of distinctions. And this has happened in other jurisdictions more so than the United States. And of course, again, there's a lot more to talk about. I won't bore you with all the details, but they're legitimate actors or actors that want to be regulated and legitimate. We heard about, for example, the licensing regime happening in Israel. The US, the problem is we don't have the framework to even license any digital asset exchanges. But there are companies like Coinbase in the United States which comply with rules that exist. And then there are entities which don't. FTX was a good example of that. Binance, in some ways, which is 10 times the size of FTX, is the dominant exchange in the world, has attributes of that kind of unregulated offshore actor. Tether, which is the largest stablecoin in the world, claims to have $80 billion of assets backing its stablecoin. Also not actually effectively regulated anywhere, yet deeply enmeshed in the system, purports to have no business whatsoever in the United States, and yet is a foundational element of the crypto economy in the United States. There are a few other companies and entities like this, and that's simply not tenable. It's not tenable even if there are comprehensive and effective local regimes. Europe has the MiCA legislation, which will go into effect next year, but it doesn't really matter very much if there are very large actors which can simply ignore the rules by saying, well, actually, we're not there, even though they have customers that are in all these jurisdictions. So regulators are going to need to make that distinction, and the US regulators have started to do that, started to take enforcement actions against companies like Binance. Tron is another one that seems to be largely disregarding the rules. The other distinction that regulators need to understand is the distinction between what's sometimes called CeFi and DeFi. So centralized digital asset financial platforms. So for example, FTX was a centralized exchange. A lot of what FTX was doing was literally stealing its customers' money, commingling and just giving money to their affiliated proprietary trading firm, which was at best trading against their customers, at worst basically losing all their customers' money in highly leveraged speculative bets. That is a problem with a centralized entity. And therefore, a centralized cryptocurrency exchange has that kind of risk and needs to be regulated like a centralized traditional exchange for that kind of risk. A DeFi exchange, like Uniswap, for example, doesn't have that issue. It's non-custodial. Users do not provide control over their assets to use the exchange. So that problem becomes mitigated. The other kinds of problems, the problem I described, for example, with illicit finance, gets much worse, because the smart contracts have no way of directly identifying who the users are. So questions about money laundering and sanctions then become a much harder problem. There are ways to address that for DeFi. So that's just an example of how the debate needs to evolve to be a lot more focused on what exactly are the problems and what exactly are the responses. And I think something that Eva Mikeler said in the earlier panel is really important here as well. The kind of simplistic notion of same activities, same rules doesn't really work. It's really about same businesses, same activities, same risks, maybe same regulatory outcomes. So again, if what we want is appropriate protection for investors against market manipulation, the way that we do that in this context will be different for digital assets. And even within the digital asset world, it may be radically different if we're talking about a DeFi platform or a CeFi platform. So I think that's the kind of conversation we need to have.
I agree, and but I do think that the confusion around many customers thinking CeFi was blockchain, and the difficulties that you described with regards to DeFi, which are essentially much harder for traditional regulatory initiatives to address, led a lot of people to kind of argue, then why do we even need this blockchain technology to begin with? Is there a killer app that is coming? Are we going anywhere with this? Is there something that makes this all be worth our while? And as the chair of the legal studies department at Wharton, you've led a bunch of groups of students in different workshops around the world trying to explore different use cases and different applications in the financial world, in other capacities or ecosystems. Would you mind sharing some of the potential thoughts on use cases or applications?
Well, I guess what I'll say, and I see there's some students here I'm actually here teaching a class at the university on blockchain, and it's great to see some of my students here. I talk about it in terms of 4 categories of blockchain use cases, which all start with the letter T. Trading, transacting, tracking, and trust minimizing. And I won't go into all of it in detail, but if we're talking about trading, about digital assets as a new financial asset class, that's today a $1 trillion market, which, in the scope of global finance, equities is a $100 trillion market is fairly small, but $1 trillion is not a small market. It was $3 trillion at the peak. That to me is already significant at scale. It's the least interesting one. It's providing a new asset class for doing what traders always do. It's about capital formation, and there's value there. And that's the piece that most people think of first when they think about crypto. The other use cases, though, I think have broader implications, but they're at earlier stages. So transacting is about payments. That was the original use case and idea of Bitcoin. And we've seen lots of interesting edge cases in places in the world that don't have well-functioning banking systems and financial systems. But for most of the developed world, The question is, how is it really better? Why would I want to use Bitcoin when I've got the existing tools that I have for payments? We're seeing some evolution that is moving in that direction. Stablecoins are a big piece. One reason that we never saw adoption of cryptocurrencies for payments is their volatility. So stablecoins address the volatility. There's some trade-off in decentralization, but they address the volatility. The other piece is scalability. So the rise of these layer 2 networks like Lightning and the layer 2 networks on Ethereum are making it possible to think about having these payment systems be at the scale where they can work for large-scale commercial and consumer payments. And there's a lot of interesting innovation, technical innovation going on in that area. For example, there's a company called Lightspark run by David Marcus, who was the guy who used to run PayPal, and he ran what was called Libra at Facebook, which failed under regulatory pressure. Lightspark is building an AI-driven layer 2 Lightning-based payment system on Bitcoin. And again, I don't want to get sidetracked with the details, but there's a lot of really interesting, sophisticated financial technology innovation to create an alternate kind of payment system. But we're just at the stage where that basic technical component to do something that might actually be better than what we have today with the existing mobile payments tools is becoming real. Same thing with tracking, which is enterprise distributed ledger technology, or DLT applications. Lots of systems in supply chain, in corporate payments. Banks are tokenizing all kinds of assets and payments. Applications for parametric insurance are being done around the world. Lots, every major corporation, if you talk about the sort of global 2,000 big world companies, almost every single one, if you go in and find where the lab is or find where the group is secretly, they're working on using blockchain or DLT because it's a new system of trust. Because anytime data has to go across corporate borders, there's a gap. And anytime that happens, both sides have to keep their own record of data. And anytime something goes wrong, they've got to reconcile. And you multiply that across all the commerce in the world, fantastic trillions of dollars of loss and inefficiency, and all kinds of things that simply don't happen because parties don't trust each other. And so blockchain providing a common layer and eliminating the need for that settlement process is a technical solution to that problem. But now we're talking about enterprise software, right? And we're talking about enterprise software across organizations. That is a multi-decade upgrade process. And so that's partly what we're engaged in. And then the last one really quickly is trust minimizing. That's Web3. That's the idea of decentralizing existing applications, using tokens as a financial incentive mechanism, building structures that allow for decentralized activities to come together. Fascinating. Really exciting, really interesting. Lots of early experimentation and exploration systems, games that have millions of users that use this and so forth. But nothing, that's the one where we haven't seen the killer apps. And we may not. There's no guarantee that anything is going to get to scale. Again, plenty of interesting examples, but we're actually still pretty early. We're 14 years in since the launch of Bitcoin, but Bitcoin was very limited, very slow just for payments. It wasn't until 2015 that Ethereum launched that there was a system that could do real smart contracts, could do any kind of application theoretically on a blockchain. And really, it's only about 3 years until there's been any kind of maturity and robustness and scalability in these systems. And it's still developing on a lot of fronts. So it's still, I think, too early to answer that question.
And of course, that makes regulators' life a little bit harder because they have to kind of hope that this promise materializes and in the meantime deal with the challenges. Speaking of challenges for government agencies operating in the tech space, you served in the Obama administration presidential team and then as an advisor to the FCC and the Department of Commerce. What are the main challenges, based on your experience, for government agencies operating in the tech space? The innovation, the promise, but also the challenge.
Well, I would first just say about your comment before, these are actually, in what I've described, in many ways opportunities for regulators. So the issue with regulators that people in the private sector don't always understand is regulators have a mission. And every agency in every country has its own mission, and sometimes they're more well-defined than others. But generally, when you speak to a regulator, so if I go talk to someone at FinCEN, the anti-money laundering regulator in the US, their job is to combat financial crime. And that is obviously an important public good. Their job is not to promote innovation. They would love to promote innovation, but they will say to you, okay, tell me, how can this make my job easier? And actually, there's a lot of reasons why digital assets, because the blockchain is transparent, it can be tracked, we can run analytics on top of it, actually can help them do their job. There are new kinds of threats, but situations there, and that's their job. The job of securities regulators is different. The job of other kind of regulators is different. So, it's sort of an answer to your question. It comes back to the question of identifying what the regulator's mission is and bringing that together with what's happening in the marketplace. The biggest challenge for regulators, people always say, oh, they can't keep up with technology. And I said, that's not the biggest challenge. The biggest challenge is access to information. Having been a regulator in various different capacities in the US, the only people that you hear from are people who are lobbying you because they want to achieve something. It's very difficult for regulators to be in the kind of fire hose of information in these new ecosystems. So some of the work that I've done is bringing regulators together from the US and around the world around digital assets with legal experts, with industry people, with academics, to have informal conversations about what's happening in the market, what are the key developments, what are the key challenges you're seeing. And there are various mechanisms where some regulators in the world have done better than others in terms of opening that door so they can have more of a window into what's actually happening. That's when regulators, I think, are able to keep up with what's going on in the market.
And then one last question, because we are keeping everyone from lunch. In Israel, just recently, the banking supervisors released a document talking about environmental aspects in banking and talking about corporate governance in banking that relate to more sustainability and environmental friendly types of operations. How can we ensure that blockchain is used in a way that is more sustainable and environmentally friendly? That's really one of the main issues.
Yeah, no, huge issue. And just to say really quickly, an aside related to the previous discussion, we're having, as many of you know, are familiar with blockchain digital asset issues, a lot of controversy in the U.S. about the SEC and what's a security and clarity on digital assets. A big part of what is happening there in the U.S., honestly, has to do with this question of mission and objectives. I'm very confident that if you ask Gary Gensler, the chair of the SEC, what his greatest top objectives are leading the agency right now, blockchain digital assets would be an important piece. It's something he understands very well and has taught about at MIT. But ESG disclosures and climate disclosures for the financial sector, I'm very confident would be ahead of that. And you can understand why. This is about climate change and the health of the planet. And is an incredibly challenging political and other issue to navigate. And there's only so much political capital. So this issue about sustainability and the environment is incredibly important. Also has spillover effects in terms of the extent to which there's focus and political capital to deal with the other issues. But to your question, well, one answer is blockchain itself is not inherently environmentally wasteful. What's problematic is proof of work, is the consensus system in Bitcoin, which requires massive amounts of computation. Bitcoin will never change. Bitcoin will always use proof of work because the ideology in that community is to use that approach. every other major blockchain has already changed. Most major blockchains already started with what's called proof of stake or other consensus mechanisms. Ethereum, which is the second biggest and really the foundation for DeFi and all the smart contracts, made a transition after a number of years, incredibly impressive engineering feat, because Ethereum is a completely decentralized system with multiple clients, multiple virtual machines. They were able to switch from proof of work to proof of stake. So part of this is happening endogenously within the industry. But to your question, for Bitcoin and for the piece that still is using proof of work, there's two mechanisms. One is the incentive structure for the miners, for the ones who are using all this energy. Now, their incentive is to use the most efficient type of energy. So there are mechanisms where they are switching over to using renewables because now in many situations that's actually the most cost-effective form of energy. There also are opportunities to use miners as a way of promoting efficiency of the grid. So energy grid needs to be balanced, needs to be built for peak load. And so ideally what would happen is regulators, when there are periods of high demand, would say to certain users, shut off your energy usage for the next hour, 6 hours, 12 hours. You can't tell that to an office building, right? You can't say shut off your energy usage. You can tell that to a Bitcoin miner. You can provide them an incentive to literally unplug and just wait to do their mining. So there's interesting experimentations called demand response with creating appropriate incentives to actually leverage mining in a healthy way for energy efficiency and sustainability. And I think this is really the ultimate answer to your question. What incentives does public policy create? The Biden administration is now proposing an excise tax on cryptocurrency miners. If that can be structured in a way that it's taxing the kind of polluting the proof of work miners who are using the most energy and non-renewable sources, and conversely to incentivize the development of renewable sources, that can actually be a beneficial element. But that requires public policy intervention. Unfortunately, too much of the debate has been about mining is bad, crypto is bad, should it just be banned? And so I think we need a lot more sophistication to really address the problem.
I was hoping personally that the IRS would take a stand with the Garrett case and kind of make staking be the incentive that pushes people to proof of stake rather than.
Yeah, but that's to my point. The IRS's mission is tax collection and revenue generation. It's not sustainability.
Right. Well, thank you very much. On this note, we will focus on our individual sustainability projects, consuming lunch right now. So we'll meet again in like 30 minutes. Yep. Yeah, I have to say that the paper that I wrote for the Stanford Blockchain Journal on IRS, like saying it was the paper I got most trolled on, like literally like on Twitter, people were like, "Do you think like I don't know." But I told my co-author, who's an accounting professor from CUNY, I was like, I've written about the controversial issues, but I've never been more trolled on like LinkedIn.
Okay, so I'm very happy to begin this panel after lunch, after we're all settled. And first of all, I would like to congratulate again Nitzan. I think that this is not the first conference that we have on this matter. I mean, Moran and Nitzan are doing such a wonderful, terrific job in organizing this very important issue that we should constantly discuss. And I'm very pleased to have this panel, which is titled Decentralized Economy, Web 3.0, and the Metaverse. And it's, I mean, I find it funny that we say Web 3.0 to describe this decentralized network, when I remember that like just a few years ago when I taught cyber law, And referring to Web 3.0 was like a vision of Sir Tim Berners-Lee regarding the web and how it should be constructed. Now we use a different term. It's okay, we can use this one as well. But I mean, the essence here is the things that we're going to talk about. Part of it is things that I'm highly interested in, like the metaverse, which I think some or a lot view as a hype. I don't, personally. I think that it will emerge as something big. It might take some time. It might be just over the curve of this current AI trend, which will also is not a hype in my view. But we're going to talk about it from an aspect which I know nothing about, which is mainly financial regulation. We have three terrific experts on this matter. So we're going to have, by order, Professor Thibault Schreppel from the Vrije University in Amsterdam, and he's also affiliated with the Stanford University Codex Center. Later followed by Professor Amnon Reichman from here, the director of the Cyber Center for Legal Policy, and he's also here in the Faculty of Law at University of Haifa. And finally, we'll have Dr. Hadar Jabotinsky from the Hadar Jabotinsky Institute for Interdisciplinary Research of Capital Markets, Crisis, and Technologies. Now, this panel is going to be a bit different in the sense that we're going to have each speaker, I gave them 10 minutes, and they have to be exact. They have exactly 10 minutes to pick one of the topics that they are most interested in within the vicinity of this general topic of this panel. And it will be followed by another 10 minutes of Q&A that we can engage. So without further ado, Professor, you're...
All right, I will stand here so I can see my own presentation. I saw some people wondering who's the person who's going to talk about vacuum cleaners. Well, that's me. First of all, I'm so pleased to be here. Thank you so very much for organizing the conference. I've learned a lot this morning. The food is incredible. I don't know if that's normal for the food to be that good, but I really thought this was fantastic. I will start the timer now and stop on time. What I want to talk about indeed is what I call here Web3 and vacuum cleaners. And I need to start with a short story. And here's the story. This, as you will recognize, is indeed a vacuum cleaner. And the reason why I'm showing you this is because I checked, and inside there is no blockchain, right? Now, the point I want to make, and we already have a fact, so we've made quite some progress in just 33 seconds, is that blockchain does not exist in a vacuum cleaner. Now, or not yet. And if we talk about Web3, and by which I would define as being all the products and services that functions on top of a blockchain, well, it actually exists in a digital ecosystem which itself is embedded in our so-called real space, right? So now maybe we live in a computer simulation. You may have read about that. I'm not here to discuss this. But to the very least, Web3 exists and needs access to infrastructures that are already in place. And what's interesting to me is that we may want to discuss whether or not the entirety of Web3 is centralized or decentralized, put that on the spectrum. You could assess that for each project, and there is truth to that. But all you look at is the inside of Web3, but again, knowing that it exists not in a vacuum cleaner, but in a digital ecosystem with existing infrastructures. I'm interested in the legal implications that this may have. Now, I do have a working paper. I've put the QR codes. I'd love to generate QR codes, so you will see maybe quite a few. If you do, it's not yet published in the final version. If you do have comments based on the presentation of the paper, feel free to send them my way. Now, I want to be more specific when it comes to the relationship between Web3 and the digital ecosystem. And most specifically, I want to tackle in the 8 minutes that I have left, the relationship between Web3 and the tech giants, the big tech companies. Now, going back to complexity theory, what's fascinating to me at the very least is that Web3 and the big tech companies, they are co-evoluting, right? They are in a competition. And you see that indeed there is a fear from the big tech companies that Web3 may compete and take down some of their services or reduce the market shares. The Web2, the tech giants, they also need Web3. This is something that you see in the metaverse. Facebook announced that within their horizon, you will be able to import your own NFTs. Why do they do that? Because it's a way, at least that's my understanding of it, to say you can trust the company that we won't be able to take your NFTs away because indeed they are recorded on the blockchain that we do not control, right? Amazon, I don't know if you're aware of that, but in a couple of weeks will actually launch its own NFT marketplace, right? So there is a need for Web2 to actually use some of the Web3 assets and features. But what I'm most interested in is where Web3 needs to actually access Web2, and as I call it here, technical and social infrastructures. And I'm about to be more specific on that. But if there is indeed a need to access what the tech giants own, this means that this may create possibility for those tech giants to actually abuse that need. And that leads to antitrust, right? Which is broadly defined the law of transactions between economic entities. So what I want to do is to give you some very concrete examples of where I see a struggle and potentially abuses, knowing that there are, to the best of my knowledge, no case being investigated by the competition agencies when it comes to that relationship between Web 2 and Web 3, but I'm here to argue that we should have a very close look at this relationship. If I start with the technical infrastructures, I just want to give you two examples here. And by technical infrastructures, I mean the ones that, as a Web3 project, let's imagine a decentralized Airbnb, a decentralized Uber, or decentralized Get, you would need to access in order to function, right? Without this, you can't function and offer something and put it on the market. If you do so, most likely you will build your service on top of the Ethereum blockchain. Maybe you will use another one. It could be Solana, Cardano. There are a few examples. But just looking at the Ethereum, you see the numbers here. There are actually two ways for you to store the blockchain, right? You could do it what is called here residential, which means that I use that computer and I store a copy of the blockchain, right? That's one way. You see that it represents 30% of where people store the Ethereum. When it comes to here, the part that is entitled hosting, that means to actually put it on the cloud. And that's what most people do. And if you look at within the hosting space, you see that 65% of the cloud services being used is the one of Amazon, meaning AWS. So end of the day, 43%, and I checked the number and updated those numbers just a few days ago, of the Ethereum is being stored within AWS, which gives great power to AWS to change the terms and conditions to be hosted there and maybe potentially to cut access. And this is not just sci-fi. If you look at what happened to Solana, one provider, not AWS, another one, Etzner, one day decided to cut access to their cloud solution, right? Which created a big mess within the Solana network. So as I speak, the Ethereum relies on AWS pretty much to survive or at least to stay as efficient. Still looking at the technical infrastructure, we can talk Web3 all you want. All of them are using GitHub. That's, if you've never been there, a website that you may use to actually publish the code of your Web3 project and ask people to improve the code and potentially adopt that in an open source fashion. Now, who's behind GitHub? Microsoft. And if you look at what happened in a probably different case, the one of Tornado Cash, GitHub, for reasons that are related to cybersecurity, took down the code of Tornado Cash, right? So we see that GitHub is actually doing that on a regular basis. They will take down the code of something that is supposedly decentralized. And then the question is, can you function? Well, maybe, but then can you access to your ecosystem and get to new updates? Well, it's much more complicated, right? So this gives power to Microsoft here to impact the survival of Web3. If I move to the social infrastructures, and by that, in just 3 minutes, what I mean is what you need to access for people to adopt your Web3, your decentralized Airbnb or decentralized Uber or Get. The first thing that you need if you want to really, if you are in the business of mass adoption, is access to the hardware. And who controls the hardware? Well, Apple, Samsung, LG, and a few others phone manufacturers. Now, looking at what's happening in the field of antitrust, you see that the French Competition Agency published an opinion a couple of years ago, and the European Commission is currently investigating Apple for not giving access to the NFC antenna. The NFC antenna is pretty much what you need if you want to offer a contactless payment solution. There are other ways, but they are non-efficient. So in practice, you do need access to that. Now, let's imagine I create a DeFi solution. It's an app. Somehow I managed to put that, in the App Store, but no one can use it to actually pay in a business in a contactless way. I'm not sure if people will start using this or will stick to the one that is very convenient, right? So you do need access to the hardware. And if not, well, potentially this may create an impact on the survival of your business. Another example is the one of what happened in Minecraft. It's a virtual world, also owned by Microsoft. By the way, I have nothing against any of those companies. What they did here is that they ban NFTs. Now, NFTs I would define as a right to access. It could be just that you want to access the picture, but it could be more than that. We could say, well, if you've been part of this conference today, you get an NFT, and with that, you can access the building, you can access reimbursement of the cost, and so on and so forth. So you can create something more out of the NFT, and Minecraft said, well, you can't do it within my ecosystem. So again, you reduce the value, the social value of NFTs. One last example. This is here a screenshot that I took of the terms and conditions of Apple. And what you see here, and I've put the link if you are interested in exploring that in more details, is that Apple is telling you that you can maybe trade NFTs using an iPhone, but you can certainly not use NFTs to unlock features within the app. The only way by which you can unlock new features is to pay, and payments before the DMA has to go through Apple, and they take 30%. So I can't say, well, I'm using an app, I have an NFT, and therefore I will unlock new features. So again, you see that Apple can decrease the social value of those NFTs. Final example in 20 seconds, that's the one of advertisement. Are you aware of any blockchain crypto Web3 project without a Twitter account? I'm pretty sure that they exist, but they're very rare. And what you see here is a tweet by the former CEO of YouTube saying, well, we've made a mistake. We took down some Web3 related channels, and it clearly is a mistake, and we are very sorry about that. Now, the question is, do they have a good reason why they are doing it? And this might be the case, consumer protection, cybersecurity. It may also be that they try to slow down the adoption of blockchain. And this is an example that I like. Facebook for years said anything that is crypto related is prohibited. You can't advertise that. And when they announced that you would be able to use NFTs within their virtual world, within days they say, oh, and by the way, now everything crypto related is okay. So the consumer protection reason actually seems to be a weak claim in some cases. So the final message is this. Antitrust and competition law is actually Web3 friends, right? And it's not just something that may prohibit you from doing something. And you could be a crypto anarchist all you want and rely on the idea that code is law. I would say this is true, but it's also insufficient. And here, you may want to use the law and again, try to protect your Web3 project and increase mass adoption that way. If you have questions, of course, we have the panel, but you also have my email address and Twitter. If you're on Twitter, feel free to come at me. All right, thank you very much.
Okay, very briefly, maybe I'll speak from here. Whatever you want. Okay. So very briefly, I just want to, so this is the futuristic panel, sort of like, let's talk about things in the horizon, might be hype, so methodologically, I think that when we approach the future, which of course learn from the past, and I think the very first thing we have to do is to understand that what's unique about now is that we have access, so we've just developed a new social dimension. The virtual dimension is a social dimension. We cannot, I think that connects with what we've just heard. So 3.0 is another layer of this new dimension, and until we figure out how and to what extent this dimension is unique, we're going to fail. So we now, part of our identity is invested in this dimension. We generate value in this dimension in unique ways. Security operates differently in this dimension. We have to just understand, for us interested in regulation, we regulate a different dimension, and therefore the relationship between this new dimension and other dimensions become relevant. Interface with 2.0, the current dimension, and and the second point is what's unique in this new dimension, number one. Number two, the state is present. We didn't talk about the state.
in the dimension. So the state is present everywhere. The state is part of the security, the regulator is there, the state is there as a user, super user, and a regulator. Eldar Haber even had a chance to write a paper on that. I was a co-author. So identifying the role of the state is really crucial. Social space, the dimension, the role of the state. What does it mean to regulate? When we regulate, we don't just regulate through the state, right? Niklas Luhmann, various systems regulate. I don't have time to get into that, but we should understand the intersection between different forms of regulation. When we build, the next point is, when we use state-based regulation, we have to understand the regulatory matrix. Regulation is process, regulation is attitudes towards the industry, and regulation is modalities. By process, we mean data collection, the classic regulatory form. You have to identify the problem, collect data, find different solutions, do an RIA to evaluate the solution, etc., move towards legislating that, and then enforcement, compliance, and then reevaluating again. So the ongoing process works at a different time cycle because technology, because it's fast. That's one dimension. The second dimension is the attitude towards the industry. Friends, are they our friends? And therefore, we should ask them to do the risk mitigation for us, to identify what the risk is, and then tell us how they confront the risk, and then tell them if they don't do that, we're going to take a lot of money out of them. That's basically kind of what we do. Okay, what is our attitude towards which part of the ecosystem of the industry do we want to build, which type of attitude towards, etc. And so there is literature on that. I'm not going to go into that further. And then there's the modality. Do we use taxes? Do we use civil liability, criminal liability, regulation through information? Do we use insurance? Now, all these, it has to congeal. Otherwise, the new dimension is not going to be regulated optimally. I'm not even talking about what we talked about earlier, the multiplicity of regulatory agencies, etc. Next, regulation by design. We have the state. We just heard, I think the first panel was actually very interesting, where the Nadav, I think, from the tax authority said, we need to develop an API. The state has to develop the regulatory ecosystem itself. Think about the state in 3.0. You talked about antitrust. The state has to know what's going on because I think we will agree that it's one thing to get NFTs out because they generate consumer protection hazards. It's a different thing if you want to deal with. So the state has to know what's going on. So the state has to be present online in different ways that the state is currently there. The state shouldn't be just reacting. The state can develop its own technology. It can actually take the lead on that. Another point. The next is to be very careful in mapping the regulatory junctures. What do we mean by regulatory junctures? What is the point of regulation most effective to achieve what? So if I care about the money influx, okay, what are the incentives that each segments of the value chain generates, and how do I capture that with the proper incentives? But I have to map that. That doesn't come out of, okay, so who gains what from where in each segment of the value chain, and then what type of regulation then should facilitate that? That's another work for us who study regulation. Next, the gatekeeping function was discussed already. Centralized, decentralized, it's not going to work without some gatekeeping. Otherwise, you cannot generate value without some type of gatekeeping. Let's investigate those new gatekeepings, and let's say which type of gatekeepers do we want to keep, and which gatekeepers actually generate hindrance, generate an obstacle. How do we do that? We do that through sandboxes or other type of agile. But the question then becomes, how do we sandbox the sandboxes? How do we make sure that the sandboxes indeed generate what we'd like the sandboxes to generate, which is agile and all that? So there's currently, I'm not aware, educate me, I'm not aware of any rigorous methodology with which we build or through which we build sandboxes. We just say, oh, that's a sandbox, come play. And then we say, oh, that sandbox actually wasn't really calibrated to what we wanted it to. Of course not, because we didn't sandbox the sandboxes a priori. So that's another challenge for us. Even if we do that, the question, and again, Europe is now becoming the leading, so the US leads in some type of innovation, China leads in a different type of innovation, and the EU leads in regulatory innovation. What's happening from Europe is, yeah, we know how to regulate, we regulate. And then the question of complex compliance arises because you have to comply with NIS2 and GDPR and the AI and the digital services and the list goes on. And that's just at the EU level. Then you have member states. And so complex compliance, it becomes an issue. Can we use technology then to comply? We can harness Web3 in Web3.0. We can use technology. And that brings me to the jurisdictional divide. I'm very close to the end. That brings me to the jurisdictional divide. So in the EU, and again, this is just oversimplification. In the US, what you do is you say, I'm willing to take risks, ex ante. If something bad is going to happen, I'm going to sue you later. FTX, okay? I'm going to believe what you're saying. What are you saying? Yeah, I'm going to believe that this is actually how you produce value. At the end of the day, there's going to be some kind of liability. You may have to go to jail. I may have to sue you to the extent I can trace your assets or whatever. Fine. The EU says, no, I'm not going to take these risks in this same. I want to protect ex ante what I can. I want to institute some risk assessment a priori so I don't meet you later in court or in jail or somewhere. And that generates different types of innovation. And the problem is, and we know, by the way, we know that the common law model, this type of model, generates more innovation. Because you assume risk, you spread it on some, and then you say, sorry, but you learn from this. In the EU, you don't say just sorry. That would be a fiduciary no. You can't just say, okay, we assume the risk, tough luck. You don't do that. In the US, you say, okay, we sacrificed some people because they drank this water and those waters. We learned. Okay, tough luck, water. Now we know better how to distribute water. It generates more innovation, but you suffer more. So this is why you have greater discrepancies in the United States between the haves and the have-nots, and there's a lot of literature about that. We have a trans-jurisdictional divide here, because technology has to speak to this side of the pond and the other side of the pond. We have to generate a common language. And I want to conclude with values. We have to recognize 3.0 and 2.0 will affect our democracy, are already affecting our democracy. Because we speak differently there. Generative AI speaks. It's a new kind of speaker. It speaks with us. We communicate with it. It generates echo chambers, or the 2.0 and then 3.0 will generate different types of echo chambers. We will generate values, not just the values of NFTs values in the sense of currencies, but also values in the sense of community values, what we care about, what we're willing to fight about. And therefore, even if we use, just to build on Kevin's point, to think that we can just take the infrastructure and say, if only we change the purpose, we're going to have a social credit system, but just geared towards the beauty and wellness of the human being. But use the same, I'm not sure, because part of the ecosystem itself generates a certain type of controls that may generate different kinds of values because it's not value neutral. So our democracy, now the challenge for us is how do we ensure democracy in the 3.0, and I conclude with that. Thank you.
Okay. First of all, thank you so much, Nitzan and Moran, for putting this amazing conference together and for inviting me. I really enjoyed all the sessions so far, and I learned a lot from all of you. So I was invited to speak about the metaverse, which is a topic that I like, and I just finalized a paper on the metaverse with the very talented Dr. Michal Avi. And this is what I want to talk to you about today. So the metaverse, I want to take you into the future. Imagine 10 years from now, you want to go shopping. You don't go down, put the key in the car and go to the shopping mall. You put on glasses. And then you walk through the mall and you try on different dresses, different pants, different skirts. You pick whatever you want. You go to the cashier, you pay, and all within the comfort of your house. And the things that you ordered, fits your figure, your avatar in the metaverse, and they just arrive to your door, via delivery drones or whatever. That will probably be in the future as well. And it'll give us a whole different feel of shopping and a different experience of shopping. You can even meet your friends in the metaverse. I can call up my friend and tell her, put on the glasses, let's go shopping together. And she might be now in Italy or in the US, and we will go shopping together in the metaverse. Now, wouldn't that be amazing? So you might say, okay, so that's a fun thing. It's kind of a gamification of the shopping process that can be super fun. But we already know online shopping, right? Most of us go online and buy from one of these or others, right? AliExpress, Shein. Israel is very big on Shein, by the way. We order a lot of things from Shein. So what's the difference? Why should the shopping experience be any different when we buy from these platforms and when we buy from the metaverse platform? Well, currently, when you buy online from these platforms, and there's a problem with what you ordered, right? So a friend of mine ordered a dress, and it came like a miniature dress. She can go back to the platform and complain, and they will reimburse her, right? So these platforms are the cheapest cost avoider, and that's why courts in the States have given them over and over again responsibility for defects and counterfeits and all these things that can go wrong when you shop on online platforms. But the metaverse, at least partly, will be also based on blockchain, right? And why do I think it will be based on blockchain? Because it will incorporate NFTs. So on the same metaverse, not only will you be able to choose to go shopping, but you can also play your favorite game and earn swords and all kinds of stuff on the game. And this will be an NFT that you can actually take to a different metaverse if you choose to switch the platform. And that will be enabled by blockchain. Now, what's the problem of having the metaverse on the blockchain? Well, here we come to the problem that, as you know from cryptocurrencies, people on the blockchain are usually anonymous. And when people are anonymous in the metaverse, this means that the blockchain-based metaverse is not anymore the cheapest cost avoider, right? Because the platform doesn't know. Try this one. I think the battery's on. So the platform doesn't know who's the trader. So they don't have anyone that they can track back to and say, hey, you sold defective product, let's reimburse the purchaser. So the problem is trader anonymity. And how do we solve this problem? So I think the solutions should come now. The regulatory demand should be that the metaverse shouldn't be anonymous, in the way that it's not that if I go on the metaverse, then you can see that Hadar purchased something from Moran, right? But that the company running the metaverse or the technology company enabling the metaverse will keep the identity of the people behind the wallets, will keep the identity of the people behind the tokens, and that if something goes wrong, people can go back and get reimbursed, right? So there should be some sort of know your trader, right? In banks, we have a know your customer. There should be some sort of know your trader mechanism before people are allowed to go on the metaverse and trade. So maybe the solution would also be that we can no longer hold the platform as the cheapest cost avoider, but we should go back to trader responsibility, right? And if something goes wrong, the trader will have to bear responsibility. That's it.
Okay, thank you so much, and I invite our speakers back. We don't have a lot of time because we don't, but I will take a few minutes because we have started a little bit later, and I will start with the first question, and then we'll open up for another question or two. So I want to challenge you a bit, the three of you. I want to say something a bit radical about the metaverse or new technologies, which you also discussed a little bit about AI. And I want to say, I don't know, radical in the sense of like J.P. Barlow's like independence and the Declaration of Independence of the Internet. Maybe it was too soon to talk about independence within the Internet, but maybe these new technologies should enable us to think a bit differently about regulation, in the sense that maybe, just maybe, we're on the surge of such a disruptive technology which will change the very foundations of the legal system, of the state, the roles of the state within regulation. So maybe, I don't know, this new world, this new exciting world, which might end or not like humanity, but it might also have clear, good, efficient tools to actually regulate conduct. And I'm setting aside criminal behavior for a while because that we should have a different discussion of what's the role of the state. But maybe we should have some sort of an independence within the metaverse, especially when we were gonna have these AI tools, thinking that maybe most or part of our interactions within it won't even be humans. It will be avatars, which will be AI based, and we will interact with them. And it won't be just one platform. It will be a lot of platforms which will compete for dominance, I would say, within this metaverse, which should be equivalent, in my eyes, to the term internet. So just a few of your thoughts. I know it's radical to say that let's leave the state out. Maybe it's time for that. Maybe the time is ripe.
Okay, I can start. I give you an answer on 3 different fronts. The first is the social one. Something I didn't get a chance to discuss is that with a couple of friends in December of last year, we announced the Metaverse Competition Agency. Now, this was kind of an art project. We thought this was fun, but also we came from working with people in the ecosystem from this idea that they may reject whatever is coming from government agencies just because it's coming out from them, right? And it's coming from the centralized world. And if you take a centralized world as opposed to decentralized ecosystem, this creates some tensions. And so we are now working with competition agencies from all over the world which are indeed interested in working with us, because what we think we can achieve is indeed try to nudge those ecosystems and blockchain-based metaverse to vote in a certain way using a DAO. And we think that they may indeed vote in favor of our proposals because we are also decentralized and we work with them, not against them. So this will be the first one, the social aspect. The second answer to the question would be a very technical one. I actually published a paper not so long ago on how to use technology to improve the law and how to combine the two. And I came up to the conclusion that there are 2 ways of doing it. One is what some people have called law as code. So what you do here is that you actually convert the law into computer code, and or you may want to use code to reach an objective which is similar than the one that you reach with the law. A good example of that is the RPM within MP3s, right? This is not taking IP law and translating that proper into code, but the objective is pretty much the same. Another way of doing it is code as law. And here what you do is that you actually use code and use the law to understand it in a way that you may do as computer code. And the third answer to your question would be one of method. We've been talking about being innovative and agile regulation and robust regulation. Something I would like to put on the table would be the concept of complex adaptive regulation. How it could work is that you will ask the regulators to tell what's the objective you want to achieve. Let's take an example we discussed to reduce the impact that blockchain has on the environment. Okay, that's the objective. Now tell me precisely how you can measure whether or not you will achieve this objective, right? So maybe it's carbon emission, maybe it's something else. Once you told me that as the regulator, tell me precisely which data you would use to measure whether or not your regulation achieves that objective. And also tell me which mechanisms you will put in place to change and adapt your regulation based on what's happening in the outside world, right? Whether to get rid of the regulation because it's not effective, maybe to make the regulation tougher because it's not, you know, strong enough. And so this will, in a sense, create regulations that are real-time adapted to the market, as opposed to regulation lagging behind the technology, or something which I think is not much better, which is regulation ahead of the technology, right? So here you make it real-time. So that's a new method maybe we can experiment with.
Thank you. So I think, Eldar, that of course you raise a question that we should consider regardless of whether it'll actually happen or not. And I think it forces us to do two things. First, to keep examining, and we haven't done that thoroughly, and this is something that we should do better, the interface between the physical and the virtual, because there's always a physical dimension. There are hubs, there are computers, there's infrastructure, all this boring stuff that is therefore susceptible for cyber attacks, all that. We must always look at this interface, number one. Number two, you're asking, what should we think about doing away with the state? And we could, as a thought experiment, do that, but provided we do one thing. If the state isn't there, there will be other forms of centralization. To think that decentralization will just emerge, I think is, again, untenable. And then the question, what centralizations will emerge? How do we check for their power? I come from public law. I think it's obvious. So I care about checks and balances and all that. So what type, and antitrust, in that respect, antitrust is a form of check and balance from a public law perspective. So we should definitely care about new forms of centralizations that emerge. Microsoft may be one of them. Five giants may be one of them. Others may emerge as well. And number three, very briefly, replacing law. Can we replace law with code? And here, that's a jurisprudential point. I think what's unique about law is that it has an inherent tension between norm and exception. If there is no inherent tension between norm and exception, it's not law, it's something else. It's bureaucracy, it's just something mechanic, it's not law. We can call it law, but it's not really law, going into the essence of thing. And you cannot get rid of, you can't program this away. There has to be a room for exception emerging, and that calls for human discretion. So human in the loop is not just, oh, we failed, so we have to have a human in the loop. No, it's a feature, it's not a bug. So I agree with you that developing systems that will adapt is a great idea. The challenge then becomes, when does human discretion kick in, and in what way?
Yeah, very shortly, just on the fact that you need to measure, and in order to make regulation, I think this is the whole idea behind RIA, the regulatory impact assessment. The question is, are we doing it correctly or not, is a different question. But this is exactly what you're supposed to do when you're doing RIA. With regards to can we leave law out, well, part of it can probably be coded in. So for example, you can think of with the smart contracts of maybe putting away some of the money, if I'm talking about the problem that I raised, putting away some of the money, and in case someone says, there's a problem with the product, this money then releases, and then you don't need the regulator in the middle or things like that. But only part, another paper I wrote with Dr. Israel Klein and Dr. Israel is about regulating the blockchain, and we came to the conclusion that not everything can be regulated within the blockchain. So the external regulator, we still need to keep them around.
Okay, I think we should revisit this question when we'll held like the 20th conference of this, like maybe then we'll see. So we have time for one question basically, so if anyone wants to raise a question, otherwise we'll go to the next panel. Okay, so thank you very much for this wonderful panel, and I do invite the next panel to come in.
Okay, so welcome to the session about innovation, corporate governance, and the banking crisis. What's coming next? And I'm going to start with a short story before I introduce our brilliant panelists. And the story starts 3 years ago when I was working on a paper with Moran Ophir. And throughout this process, I think I mentioned to Moran how frustrating it is to be a minority within the corporate law world. And eventually what started, thanks to this collaboration, was a forum for business law scholars. And it's called in Hebrew Chaverot, which is girlfriends. It's also spelled the same way as corporations. So, and so in the name of the Girlfriends Forum, or the Israeli Business Law Forum for women in business law, I'm happy to partake in this amazing conference today, and I think Nitzan and Moran really deserve a lot of appreciation for putting this together, especially in such a challenging environment. And I thank you all for coming despite everything that is going on. So without further ado, I will introduce our panelists. So we have Leon Anijar, I apologize, from IE Law School in Madrid. We have Nili Al-Sheikh Raviv, who is a partner in Shibolet, which is one of the leading Israeli law firms. And Dr. Asaf Raz, who is a research fellow at Penn University Law School. And Dr. Moran Koren from the Department of Industrial Engineering and Management in Ben-Gurion University. So I think the broad theme of our panel today is actually touching upon different movements that exist today within the corporate law world, including the ESG movement. So we'll discuss the G part, the governance aspect, but also the social aspects and the E, the environmental. And I will start with you, Nili. So earlier this month, the Israeli Banking Supervision Department released a draft order about climate risk management in the financial sector. And this draft includes 12 risk management principles, including aspects such as corporate governance, internal controls, capital adequacy and liquidity scenario analysis, and so on. And of course, also related disclosure obligations. So, and this order is expected to become effective in about 2 years or so. So the question is, what big changes do you foresee in the environment of financial institutions? And what could the managements of these institutions do right now to prepare to be for this compliance requirement?
Okay, thank you, and hello. And yes, that circular, which is, I think, a continuation of a trend that we've seen from the supervisor of the banks and the regulatory authorities, I think it sort of tells the banks to put the environmental, financial related risks front of mind and provides a framework of how to relate to that. And it goes quite the way, as you mentioned, in the types of requirements that impose there. I think it even implies in certain sections, if you read, I think, the sort of 30s, 34 to 37, and even after that, it implies that if you invest today in an oil company or a utility company or an electricity company, then you can assume a lower margin or an increased risk. And that it's not necessarily a particular risk, but more a framework of risks and a different way of thinking of financial, environmental related risks, and that they should be addressed, they should be taken into account. So we could use say, financing Ayalon as an example. If you were to finance or invest in building Ayalon 20 or 30 years ago, you could assume that Ayalon would be flooded, say, every, I'm just throwing out numbers here for sake of example, every 10 or 12 years. And if you were to do it today, you would have to assume that it could happen every 3 or 5 years. And so while this draft circular or draft order, as you called it, it tells the banks, consider those environmental risks, take them into account, both in corporate governance and in ways of how to mitigate and minimize those risks. Think of different strategies, be it shorter term loans or a different way to assess and evaluate collateral and assets and different LTVs, but it doesn't necessarily really tells them how to imply it into their business. So I think it's a little too soon to say what is going to happen. I think just as the risks are considered, there could be room to consider environmental contribution and reward. So I think there's room here for financial institutions and banks to be first movers and to win the group of clients and borrowers that are conveniently set up to assume green or sustainability-linked loans and enjoy those flock and that new segment that could otherwise perhaps find alternative routes of financings.
Well, thank you. So as a follow-up question, Israel dubs itself as the startup nation. We know that there are many young companies. They don't always comply, to put it politely, with all the applicable regulations. They don't always follow the best practices. And these are still the customers of some of the major financial organizations. So as a lawyer practicing in this field and living within these complicated dynamics, how could financial institutions both streamline and optimize the relationships with their customers, but also make sure that they follow all the procedures properly in all the regulatory compliance system?
Okay, so I think it actually goes both ways. The borrowers, the clients, the startups, and also the banks and the financial institutions. I think from the bank side, this is just as entering a new segment or type of business as any other new segment or type of business, be it, for example, high net worth individuals or the fashion industry or the restaurateur business. You plug in the business of your choice. If you want to tap into a new segment, then you have to consider the risks of those segments and also perhaps a different way of doing business. So I think the banks have to consider the segment risk. This is not to say that they don't have to evaluate a certain specific company risks, but look at the segment risk and work that into their calculations, and also understand that this is not your typical local business, to which I have the utmost respect, and I also assist in the financings of, but this is not your local Israeli business looking to open another shop or another branch. This is, and the reason everybody is talking around the table is that this is, even if it's a young company, it's basically saying, right now I am X, but if I am not within Y time 10X, then I will have failed. This is a young company with the prospects of becoming a unicorn or publicly traded. So this is how things should be looked at, and this is how the segment should be looked at. And also from the bank's perspective, there are certain things that need to be done somewhat differently than other types of financing. So say if Highway 6 were to come to the bank and say, you know, I'm looking for a hefty sum for project finance, then everybody would assume and accept that this would take months, or even in terms of years, could take up to 2 years. Startups, they don't work that way. It's a different pace. Their clientele in terms of also potential investors, that 10X many times will come from overseas. So the documentation has to be different. It has to be targeted to that segment. That's from the bank side. From the startup side, they're also tapping into a new type of financing. So they have to assume that they have to, play by the rules, and I think imply to compliance, for example, of that play field. And I don't think this is too much to ask of a startup. I mean, if a company goes public, they know that they have to comply with certain requirements. They would have to hire new personnel to do certain things. They have to disclose things. There's a whole new set of corporate governance, obligations they have to assume. And same here with this type of financings. And I think my job as a lawyer of this type is to communicate to the startup. For example, to tell them whatever needs to be and you're asked to be disclosed, please disclose. The bank will not be at a regulatory fault, even if your investors are not used to disclosing this most of the time. It's a new type of financing, and you have to understand that if you want to tap into this, then this is how the documentation comes, and this is what you need to do.
That is really interesting. Could you elaborate a little bit more about the length of this transaction and the due process throughout, before the bank decides to make this kind of strategic, I don't know, maybe not strategic, but it's convertible loan. It's something that is quite unique.
Sure. Okay, so I think at Shibboleth we have many clients that come to us and are basically, they're brought through and assisted through the corporate process, and we have high-tech lawyers that help them with everything that is high-tech and corporate, for example, founders agreement and so on and so forth. But once the startup is past the seed round and the friends and family round, and they're looking for, say they've met an institutional investor, that's when these corporate lawyers, they come to me and to my team, because this is when we'll be able to help them with the debt finance and the related finance. I think the length of these deals, just like any other deals, a lot of times it comes from how willing the parties are to compromise. And although there's a bridge to be gapped that I sort of alluded to in my previous answer about how the different sort of sectors or minds work, it could be done very quickly. And by that, I mean, it could be venture loans, it could be revolvers, it could be any type of credit, it could be to startups. There are also, I mean, when we say high-tech, a lot of times we think startups, but there are multiple consortium and multi-party loans in hefty sums that are extended to the high-tech industry and companies.
Thank you. So we will continue within the G part of our discussion today, and I will introduce the next question to you, Asaf. So in recent months, we've seen a wave of corporate misbehavior, including high-profile cases such as FTX. And according to your research, how can corporate governance help us avoid or deal with this kind of developments?
So thank you very much. I think there is a misconception about corporate law that I will describe in this way. Most people, or many people, think that corporate law is mainly or solely about shareholder wealth maximization. When we think of what we call corporate law or Delaware law, there is lots of criticism coming about how it facilitates misdeeds stemming from human greed, from the lower sides of human behavior, human nature. And corporate law and shareholder primacy have been blamed for stuff like Sam Bankman-Fried. Professor Ann Lipton just published an article named "Every Billionaire is a Policy Failure" about the Twitter. I would call it the Twitter scandal, maybe, and what happened there over the last year. And so there is this conception as if corporate law is primarily about producing essentially Logan Roy from Succession. That's the main type of human being that corporate law helps, assists, or facilitates. However, in my research, I have shown that this is not the case. I have a new article called "The Legal Primacy Norm." It just got published in the Florida Law Review. And in that article, I actually point to 6 different doctrines that operate in Delaware law They also exist in other laws. In the UK, in Israel, they have equivalents. But those doctrines actually do something very different from shareholder primacy. Those doctrines actually put the corporation's legal compliance first and foremost in the hierarchy of legal interests, in the hierarchy of what corporate directors should promote. And I will give an example of one of those 6 doctrines, an example that I think many people have heard about, Kermark. The Kermark doctrine from Delaware is a very well-known doctrine. Over the last 4 years, it has seen an explosion of cases. It is continually developing. To give just one very well-known case, the Boeing decision, which came out of Delaware Chancery in 2021, Boeing's directors were penalized in the amount of $250 million for causing the company to not comply with safety regulations, which led to 346 deaths into crashes of the 737 MAX airliner. And these doctrines continue to develop all the time. Less than 3 weeks ago, on April 26, for example, to give just one doctrinal development that has occurred, Vice Chancellor Laster of the Delaware Court of Chancery has said that the doctrine of efficient breach that we've all learned about in law school, right? Efficient breach, Easterbrook and Fischel, that does not apply in the Kermark context. A director cannot say, I will cause the corporation to earn money by breaking the law, and I will not be held liable. So Vice Chancellor Laster said, no, you will be held liable because a corporation is not permitted to break the law. Shareholders do not, in fact, have primacy. If anything, a more descriptive moniker would be that under corporate law, shareholders have some form of subordination, or shareholders are the most junior actors in the hierarchy of legal actors, and stakeholders' interests actually have the real seniority.
Thank you. So actually, I think Kermark is kind of an interesting example because it still accepts the basic premise that executives are accountable to the shareholders. You are achieving, greater benefits as a result. But it's still under the, I would say, basic vision of the corporation as a thing that belongs to the shareholders and of the officers and directors as working for the shareholders. So my question to you is, could you please clarify a bit more, how is your approach different from corporate social responsibility or the new kind of version or framing of it as a ESG?
Right. So so we have lots of 3-letter acronyms that we've encountered over the last few years in corporate law. We hear about CSR, ESG, sometimes PRI, and other acronyms. So here is something that is important to understand about CSR. CSR, the main motivation behind it is to help stakeholders, to help employees, to help financial creditors, to help the environment, to help consumers. And that's a worthy goal. That's what I want. That's what I want corporate law to do. However, what I argue in my article is that CSR, as currently understood, is basically unenforceable. Why is that? Because if you just tell corporate directors with very low information content, with a statement that has the highest imaginable information cost, just do good. Just be socially responsible, period. That's the statement. That's the duty. No court on the face of the earth, not the Delaware Court of Chancery, not the Economic Division in Israel, and not any other court that deals with corporate law cases, would ever be able to tell whether directors in a specific situation have actually acted in a socially responsible or socially irresponsible manner. However, if you go through the route that I'm suggesting in my article, and by the way, several other scholars have made similar statements over the last couple of years. Professor Roberto Talarita from Harvard has written quite a bit about this. Professor Mariana Pergendler have said similar things. The best way, the best location, if I am a legal reformer and I want to make sure that employees, consumers, the environment are protected, the best place to pursue this reform is non-corporate law. It's financial law, it's regulation law, it's contract law, it's tort law, it's all of these different spheres of law that we deal with. And the cool thing the cool thing that people did not really understand until recently is that once you make this legal change outside of corporate law, you increase stakeholders' protections outside of corporate law. At that moment, corporate law, through stuff like Caremark, internalizes that legal reform and applies it vis-a-vis directors, officers, and shareholders.
So that sounds really fascinating. So the follow-up question would be, what are the policy recommendations for lawmakers, how to change the financial sector to get all of those benefits?
Right. So if we look at a case like FTX, for example, and Sam Bankman-Fried has been operating through, I've seen a chart of entities that was filed in a bankruptcy case. There were like 60 different entities registered in places like Delaware, Antigua, the United Arab Emirates. He was just creating corporate entities all across the world. So if I had to ask, if I had to tell regulators how to handle this situation, how to handle a person like Sam Bankman-Fried, I think what they're doing right now, the way they're doing it right now, that's the correct treatment. A bankruptcy case, a criminal investigation, something like, if theoretically, hypothetically, we were to modify corporate law, and we would have told, let's say 2 years ago, we would have told Sam Bankman-Fried, dear SBF, you have to act in a socially responsible manner, which is basically what CSR says. He would have said, well, I think opening these 60 entities across the world and dealing with and doing all of the blockchain stuff that I've been doing, I think that's socially responsible. Prove otherwise. But because we have laws, because we have regulations, because financial regulation is a relatively well-developed area of law, that's why we have the remedies that we might have towards Sam Bankman-Fried, that we might see in the various litigations that are going on right now. So I believe the answer is non-corporate law or extra-corporate law, or the law outside of corporate law, and also continuing to place emphasis on those various enforcement mechanisms that I describe in my article that help corporate law promote legal compliance and obedience.
Thank you. So I think I would offer a way to reframe it in a way. So if we think about Sam Bankman-Fried, he was talking about effective altruism, and in a way you're saying we need to put some more strong or strict ways to check if it's only cheap talk when you talk about altruism and all of that, or actually the way you're structuring your corporate entities is follows the same kind of values that you claim that you serve. Well, thank you so much for that. And the next question will go to you, Leon. So in recent years, there is a lot of discussion about diversity, gender diversity, and other sorts of diversity. I started with this issue that we had within the business law scholarship, but it also applies to corporate law in general, and of course the composition of the board. So could you please describe the different approaches that different countries or regions in the world have taken in order to create a positive movement and to create change within the composition of boards?
Thank you so much for inviting me to the conference, and thank you for the question. I believe that the discussion on social corporate responsibility is highly related to the question of board gender diversity, because in my view, corporate social responsibility is not a corporate law governance concept, it's more capital market concept. And it's highly related to how you perceive board gender diversity, whether from the perspective of Anglo-American law that consider or perceive board gender diversity from the perspective of capital market law, or you have the civil law that perceive gender diversity from the perspective of corporate law in the sense that we impose mandatory requirement on the number of females that must be included in the board of directors. But more generally, I believe that you cannot address those issues of this issue of board gender diversity or try to resolve the dispute between different approaches without trying to understand the core values of corporate law. Because if you try to resolve between a capital market law approach or corporate law approach, you ignore let's say the core values of corporate law and the connection between human rights law and corporate law. And in my view, we also need to understand what is the concept of cooperation, because in Anglo-American law, cooperation is understood completely different from how it is understood in civil legal systems. In Anglo-American law, cooperation is only a reflection of a contract. This is why we can see a more capital market concept. In a civil legal system, the cooperation is an entitlement that is given by the country to private actors. This is why there is a close connections between the obligations that corporate must comply with in exchange to the right that the state gives to the private actors to act in the market through corporations.
Well, I think it's to follow the same kind of a direction that you started to describe. I think that most of the criticism or the push to promote gender equality in boards was focused on public corporations, and part of that was pushed made by the big three, BlackRock, Vanguard, and State Street. Through engagement with their portfolio companies to push for board diversity. That there is also the argument that it's just diversity washing, it's not actually working, and some criticism on the structure of the board within those institutions. So could you describe both how they work through engagement with their portfolio companies, but also within those organizations to promote diversity?
Okay, so far I described two approaches of capital market approach and corporate law approach. So I think that even if you consider the role of institutional investor with respect to advancing board gender diversity, you can identify the same concepts. Because one approach is more capital market oriented in the sense that if you have a meeting with your agent managers, you will require to file a survey in which the fund managers would like to understand what are your preferences, what are the preferences of the savers with respect of advancing board gender diversity. This is a more capital market approach oriented. But there could be another approach of imposing fiduciary obligations on institutional investor, and we have several papers of Anat Alon-Beck in this regard, of imposing specific fiduciary obligation on institutional investor with respect to advancing the interest or advancing gender equality. So also those two approaches have their own difficulties, and especially I believe a bit the difficulty of imposing concrete fiduciary obligations on institutional investor, because I think that sometimes even it's also in American law, when we speak on fiduciary law, we mean on fiduciary obligation, we mean subordinating my interest to the interest of others. But in this case, you don't have specific parties, in the sense that there are no relationship between institutional investors and the ultimate party that you would like to advance their interests, namely the females. This is why understanding, or at least imposing fiduciary obligations, feels to me a bit awkward, because there are not any legal relationship between those parties.
So your answer and the previous question related to public corporations, but this also an issue that troubles early stage companies and startups, and the same approach, especially if you're talking about a mandatory requirement, could have a cheating effect perhaps on innovation. I think that would be something that is often been raised as a counter argument. So what do you think, or how could addressing these issues in early stage companies can actually improve those companies throughout their life cycle?
Okay, so I think that the discussion today, the public debate on gender diversity is mainly focused on public corporation, institutional investor, but we still need to take into account a really important sector in which both gender diversity could play a really significant role, which is the technology sectors, and more specifically, the board of directors of startup companies. And in this regard, if you can only observe descriptive statistics, you can see that if you, for example, observe how many new ventures are created in the US by females, it's almost 40%. But if you want to understand how many startup companies are created by females, you will find a few percent, no more than 6%. And this is why most of the startups are created by men, and they are, of course, funded and supported by venture capital that always support those startups that are created by men. However, I'm not sure that using corporate law tools in order to increase both gender diversity with respect to startup companies is useful or will be effective, especially because those startup companies encounter the challenge of attracting resources to create novel ideas or novel products and services, and you cannot increase their compliance costs, at least in the early stages of their life cycle. And this is why I believe that the main solution to this problem could be through a technology solution, let's say using AI technology in the recruitment process of those talented females from rich, or let's say talented females from a very diverse background, or through changing the leadership of the startup companies in a way that it will address or will be more sensitive to gender equality issues, or even changing the organizational structure or the decision-making process in the organization from more centralized one to decentralized one in order to allow a more collaborative decision-making process that includes females and other unrepresentative members in society.
Thank you. I tend to agree with you as someone who studies startups. I don't think that sort of mandatory or harsh approach here would be very beneficial. I will add to what you already mentioned that we don't see enough women in venture capital funds. And if we don't have enough women there, of course, the funding of entrepreneurs is also going to be biased. Well, going back to the governance issues, then thank you, Leon. I will ask Moran. So in the wake of the recent bank collapses, particularly those that were related to the crypto crisis, what do you think are the measures or practices that risk assessment providers should have adopted or improved upon?
Okay, so this is a tough question. To which I don't know the answer. Speaking as an economist, I think the main place I would go to search for this answer is to look at the basic characteristics of this new economy, the crypto economy. And my first question is to ask myself, is it a new economy, right? Let's look for a second at the baseline assumptions of the cryptocurrencies, the crypto markets, right? We have decentralization. This is a very important feature we want the crypto world to embrace, or at least it said that it embraces it. In economics, it's simply called that there are no major players, right? Everybody are small players. Everyone is price taker for a second. The second thing is anonymity. In economics, it means, in the economic models, it means that we treat every player in the market equally. If I change the name of two players, I don't change anything in the market. The third assumption, so we had anonymity, and the third assumption is full information, right? We have the blockchain, everybody knows the transactions, everybody knows the funds that are held in each wallet. Of course, I'm making a generalization here. So basically, what we have here is the classic assumptions of the early economic models of the classical economics, right? So there is no surprise there that prices are very volatile because we have an influx of demand and prices goes up. And basically this is, I think, the crypto market for at least the early stages up until 6 months ago behaved like I would expect as an economist from a growing market. Let's put this aside. Now we have the bank system. The banking system, for the past 20 years, we can characterize the money as being extremely cheap throughout the world. Interest was zero. We had 20 years of almost no deflation and no interest in the markets, right? I see that I'm about the average age of the people here. The people who are older than me, how many of you remember a time where we had zero interest for almost 20 years, or very low interest, right? This is something almost unprecedented. Let's look at the bankers. The average age of a banker in the US is roughly 35. I'm talking about the entry level, not the higher up, right? These people grew up in a situation where they don't know inflation, they don't know interest. I mean, they know of it, but they didn't feel it on their flesh. People who lived in Israel in the 80s know inflation very well, for example, right? So when they hear about this growing market, this huge market becoming growing, the crypto market, they wanted to, and of course, having zero interest also lead to a high demand for high returns, right? Because if the interest is low, so are the returns. So they wanted to go into this market, this jungle, this economic jungle of crypto, but they were scared, right? Because they didn't want to take the risk. There enters, this created a demand for what we call stablecoins, right? Stablecoins, to those of us who don't know, are cryptocurrencies who are supposed to peg the dollar, to imitate the behavior of the dollar. I call these stablecoins alchemy, because the only way to peg one asset to the other is to hold a piece of the asset for every piece of the coin you have, right? Let's look at the FTX, for example. Part of the collateral of Sam Bankman-Fried was in his own currency, right? When we talk about stablecoins, the stablecoins were all designed, even those who really wanted to benefit the society. And I lost a lot of consultation jobs because I told people the next sentence: you can't have a stablecoin. Coins are volatile by nature. You can't stabilize a coin. So a lot of computer sciences did try to stabilize a coin, but their main assumption was that you will always have positive demand, not even increasing demand, that the change in demand will be non-negative or not too negative, right? If you look at the crashes of Terra Luna and FTX or almost any crash, the first thing that happens is that the price drops rapidly by 80, 90%, right? And you find yourself all the collaterals, of course, are become worthless, and you have this second wave of price drops because of the first price drop, and everything goes down to zero like this. So if I had to design a policy, the things that I would look at is how sensitive is my system to price changes, how sensitive it is to what happens if the 5 whales decide tomorrow to leave the market, right? How sensitive are the balancing mechanisms are to an initial to 10% price drop, 20% price drop, 15% price drop, and we have to keep in mind that this is this new system is very, very flexible in the sense that I can switch. I can switch from one cryptocurrency to the other faster than I can switch, I don't know what. What can you switch fast?
Apples and oranges.
Apples and oranges in the market, right? So, and this is the thing. I think that when we look at this new innovation, we need to keep in mind that when everything rises, nobody has the incentive to pull out. The regulator doesn't have, the regulator doesn't have the incentive or the knowledge to enter these markets. They only have the incentive to learn and to enter the markets when things started going sideways. And I think these are the best advice for regulators.
Well, just one last sentence about the contagion effect, and then we will need to finish with this panel and move on.
Okay.
Okay.
Sorry if I went on too long. No.
I take full responsibility.
If we look at the 2008 crisis, we see that what happened there was a crisis that started in a the subprime market, right? Where you had the housing crisis in the United States proliferated into the banking system. And what happened in the banking system almost immediately was the fact that liquidity halted. We found ourselves in a liquidity crisis where banks were afraid to pass the poison assets to other banks or loan or be exposed. Luckily, we had Bernanke there who knew a thing or two about financial crisis. He wrote the book about financial crisis. And he was able to take policy measures on alleviating them. Right now, I don't know if it's a contagion effect in the fact that one bank passes on the poison to the other bank, or simply both of them are equally exposed to overexposed to an industry who is collapsing, right? So I think this merits further investigation, but
So lots to talk about in the coffee break. I for sure am gonna want to listen to you. So thank you so much, and all of you. And we will take a break now. And whoever wants to hear more about this issue is welcome to stay with us and talk about it outside.
So we'll be back in 15 minutes for a fascinating mini fireside chat with Vicky Oslander, who's a journalist in Calcalist, and will give us her overview of a lot of the different topics we've been discussing. So we're very privileged to have with us today my favorite finance and tech journalist, that's for sure, Vicky Oslander, who's from Calcalist, and has pretty much covered and has written about all the topics we've been discussing today. Fascinating articles, cutting-edge issues, discussing the most relevant current events. And she's agreed to come here today and have a mini fireside chat conversation about these different topics, ranging from finance to technology to social-related questions in the in-between. And we're very happy to have you. And I wanted to start by asking you, so I'm going to ask you some questions about recent stories and issues that you've covered. And I want to start with, we've been hearing now in the last panel about the bank's collapse and contagion and some of the issues with regards to entrepreneurship and less traditional banking and more traditional banking and the in-between and how they impact each other. And in a recent article, you discussed the post-mortem conducted by the Federal Reserve on Silicon Valley Bank. It was fascinating to read how the bank attributed blame to various parties, including the bank's management, which we've heard before. We referenced this in multiple panels, that someone said that it was the Enron of banking. We talked a little bit about this in the context of governance in the last ESG discussion. And so the bank's management was blamed, and even the Fed itself concerned customers, which obviously reacted the way they did. And additionally, it was interesting to note the presence of former President Donald Trump, who played a role in relaxing regulations in 2018, which now everyone understands contributed to what happened as well. Could you provide further details on what transpired during this incident? And I'm curious about the Israeli tech angle, which you often cover and mention to make all these stories so accessible to the Israeli audiences.
Well, thank you very much for inviting me. It is a pleasure. And I think the story is, it's always the same story, is that it's regulation that is needed and then is taken away because we feel empowered by rising stocks and dividends and profits, and then everything happens all over again. And we say everything happens all over again and nothing changes. And I think the readers understand it in a very intuitively way, but the the postmortem, I mean, for the Fed, I mean, like everybody knew exactly what's going to happen. Everything was so predictable. So it's just reflecting the reader what I think intuitively they already thought was happening. So that's interesting because the banking system, the regulators, we all participate in the same cycle of knowing how to operate in a very more reasonable way, but then let go of everything whenever we get the chance. So it was just, I think everything rhymes, right, in tech and finance.
And obviously many of your readers are people that are involved in the tech sector and have personal connections to these stories. So even though this might be something that happens, far, far in a faraway land, and it is very relevant to so many of the people in the local ecosystem. And I wonder, do you get like feedback? People are interested, pushing for more or less of the coverage and the technicalities and the connection to Israel, or?
I'm not sure exactly what connection people do or do not do to those kind of stories, because it does feel like far away, but we do import many of those problems, and so many of our companies do operate in the States, and some of them were big clients of SVB and other banks, and yeah, everybody feels very, very connected to those stories, and they want to read and learn more. Unfortunately, we have limited time and scope to touch in those subjects, but yeah, there's big appetite to understand very complex stories, very, very big appetite for readers, and that's something. Sometimes I think journalism is doing not so well, because we try to sometimes we think stories are too complicated, and we try to give only the bottom line, and that is a very, very dangerous thing. That's what you see in crypto. That was it's a big failure, I think, of journalism, not trying to understand or deliver the complex story, because it's too complicated, and people were just thinking, oh, it's too complicated, but probably there is something to it, without understanding and with no critical thinking, and that is on us, I think, on journalism, not providing more complex stories.
I think that's actually a very interesting perspective that I never really dived into, because we often blame either influencers or the regulators that weren't there, but it's true that as an intermediary we do have journalists and the ability to communicate these stories and understand issues like the stuff we've been talking about with effective corporate governance. And if we only bother in hindsight afterwards to start looking into what happened and understanding, and then you say it's always the same story in some ways, but when it's always after the fact, it's harder to gain that interest in advance and alert people. So one of your interesting recent stories was exploring the impact of social networks in the financial landscape, and I thought it was super fascinating. You drew parallels to the GameStop incident from 2 years ago and the activities that happen now with content sharing and people transferring and forwarding and commenting on different pieces of information. And then, shifting gears to your most recent article on the topic, you were talking about, you were essentially saying that since the advent of books, there has been warnings about the dangers of mass consciousness Hinduism, which have become more pronounced in the era of social networks. So you mentioned that the technology could promote all these different things, but you did keep a relatively fresh perspective on some positive impacts.
Yeah, I'm criticized, and not just me, not just I think many journalists are criticized of always seeing the negative side, right? But for tech journalists, I think it's the opposite way around. I think tech journalism is too optimistic, is utopian sometimes. It's very, very, very hard to be a tech journalist that criticizes technology, even though
especially in Israel, in the startup nation,
especially in Israel, I think it's some companies that I work with them or I talk to them, they feel like there's a lot of criticism, but there isn't a lot of criticism, so people often criticize me being not a tech optimist, but I am not a tech. That is true. I'm not a tech optimist. I am a human optimist. So, in a sense that I don't believe in technology to free. I don't believe technology will free us. I don't believe technology will help us solve every problem in the the education system or overloading courts or something like that. I don't believe in technology. Banking the unbanks. I don't believe in all those big announcements, but I do believe that if we empower people to understand technology and to use it with their agency, then they can create amazing things. I don't really believe in blockchains. I don't believe in NFTs. I don't believe in metaverse, but I believe in people thinking about that technology, finding if and when it can help them, and then utilizing it to to discover. For instance, if it's the internet is amazing, right? You can discover and learn things that you would never have learned without the internet. So I do believe people can free themselves with technology, but technology will never free us, right? Technology will never solve our problems.
And actually, we were talking before earlier in one of the panels about the difference. I think it was Jane that said, instead of, don't use the term replace, use the term transform, transformative power. But yeah, I think that's a very nice way to kind of use technology as an enhancing tool rather than the pessimistic some of the pessimistic scenarios we've mentioned before. We also touched upon AI, and you've dedicated some of your recent articles to artificial intelligence and how this transformative power could replace people at work, could replace the way we do things in society. Are you concerned or still optimistic, even with the last few months showing us the power and the possibilities?
Yeah, so I think AI, respect to technology and innovation, which is there, and there are new tools, which are some of them are more oppressive, some of them are less. There is innovation. I'm not defying that basic assumption. I am not sure that humanity will go this massive transformation because of ChatGPT. I'm very doubtful about that. I again think we must speak about the agency that we have with those tools and to use them in a more open-minded way. And it's not just the human in the loop in those sense. It's just the human is the loop. The human starts and ends his entire decision what to do with those tools. And I don't think we need to take those in and think of them as inevitable, and we can and we don't have to implement them in our daily lives. And the most important thing is to always choose what to do with those tools and not just to take them on as something that just happens and we are there for the ride. So that's the most important part, I think. And maybe there will be changes. I mean, AI is a field that is here for so many years, and you can see the hype cycles every now and again. I mean, it's just the appetite to always, that is again what's so dangerous about technology and covering technology, that it is always just to imagine and fantasize about things that can help us and to save us from our daily lives. I mean, our inequality, our bad services that we get from taxis. I don't know. We always think of how can we have better lives, and technology always offer us those fantasies, those metaverse. So you go to the mall, you don't go to the mall, you put glasses and you don't have to do that. I mean, we always imagine things, but what those technologies actually do, how they will actually help or not help our lives, that is something that we don't know, and we shouldn't think and just imagine a better life with technology. We have to be always alert to what it can't or can do with our lives or to our lives.
Yeah, I agree with that. And actually, one of the conferences I recently attended with Kevin, our colleague from Indiana University, Professor Andrew Raymond, said that people always think, there's a problem, technology will fix this, but it's always like, technology is changing the problem a little bit, but the problem remains. So I agree with that. So I won't be mindful of the time.
Speak louder. Okay, perfect. Hi, everyone. It's very nice to be here. Thank you for having me. I'm Yuval, the co-founder and CEO of Bits of Gold. I will go through what's written over here. I'm going to take the view of the industry on how we went through regulation on the cryptocurrency field in Israel. Feel free to ask questions. It should be 15 minutes, but you'll see it's a very short slide. So let me know if I'm talking too much. So, introduction. So a bit about myself. So I have a degree in economics from the University of Tel Aviv. Studied economics and communications. Not many people know that about me. That I've also played handball professionally. That helped me very much in the crypto ecosystem of knowing how to fight and be strong in the mindset. I finished playing handball in 2017, which was at the exact moment the Bitcoin boomed in 2017. Okay, so I'm going to speak a bit about Bits of Gold and then about how we saw the entire regulatory framework in Israel and how we navigated it. My story starts from my brother that read about Bitcoin in 2012. He talked about it nonstop over dinner and said there is a new economic thing that you should know about. We kept talking about it, and in 2013 we understood that there is something big enough so that we can build a company around. We wanted to make crypto approachable, or Bitcoin approachable, for the entire Israeli ecosystem. And so we founded Bits of Gold in January 2013. And this was the birth of the first crypto company in Israel. I would say with a tiny kochavit, that Meni Rosenfeld was the first one to put something in place in the crypto ecosystem in Israel. And we had help from Meni, that's also an investor. So we are let's say the second startup company of the crypto ecosystem in Israel. And our mission was to make crypto approachable for the Israeli clients, retail clients, in order to buy, sell, and hold Bitcoin in the most easy way. And what we saw is, what we wanted to do is build a company that has the very good grounds and very good basics in terms of regulation. We wanted to build a company that talks and speaks regulation with the regulators, and I'll go through it. But what I can say is, in those 10 years that we're in the business, it's a story of persistence, perseverance. We needed to work very hard in order to convince everyone that crypto is a good thing and that they need to be open to it. Yeah, so that's about that. And we shaped the regulatory landscape in the last 10 years. When we started, there was anything. Nobody knew about crypto. Nobody knew about Bitcoin. And we wanted to make sure it's there. We wanted to make sure people know about the Bitcoin and know that we want to promote it through regulation. We thought that was the way to get it into the financial sector, to be acknowledged by the financial sector, doing that through regulation. And so the first thing we did is approach the AML authority. That was the closest we thought, the closest regulator that we thought could give us the first steps into regulation. We met with Paul Landes. Who knows who Paul Landes is? Perfect. So he was the head of the AML authority in 2013. We met with him and his team. We explained what Bitcoin was. We said, there's a new kid in town. There's a new economic thing here that you need to hear about. And we want to be reporting to you guys. We want to send you every transaction that goes through us because we believe that it's money. And you need to regulate us, give us something formal so that we can send you our reports. And so that every transaction that happens in crypto, you'll know about. And for that, it needed adaptation. We needed to adapt to some existing rules that weren't necessarily made for crypto. So we needed to study and translate some rules to crypto. We needed to integrate the flow into our flow and to know how to approach crypto and how to get new clients on board, but having crypto, having the regulation in mind. And obviously we needed to work with the regulator to report to them. It took us back and forth of a lot that I'll talk about it soon to get that integrated. And eventually we were the first one to get registrations in the AML authority. That happened in 2013, a few months after we opened Bits of Gold. And since then, actually since day one, we've been doing onboarding, KYC, full KYC for each client. The same standards that are today, we've been doing that since day one. And luckily we found regulators that were there to hear us and to listen to what we have to say. And they were, in my opinion, smart enough to understand that this needs to be regulated now. And what we've learned through the process is working with the regulators. So that was the first regulator we approached. Okay. So that was the first interaction we had with the regulator. We learned a lot from it. And from this point on, we talked to lots of regulators, but what we learned is it's a dialogue. We needed dialogue, and we found a partner to dialogue with. And we were very happy that the AML authority were open to it. And like I said, we sent, it took us about 2 years to be in a back and forth dialogue to get a formal and to send a full report that was accepted by them, because we wanted them to be able to accept BTC in the fields of that we're sending, and they were not ready to accept BTC. Yeah. I'll have it ready. So it took us back and forth of a few years to get them accepting adding BTC to their softwares, but eventually it worked. And again, we learned how to work with regulators, and it's about building trust with them, not only with them, obviously with the clients, etc., but with regulators. Obviously, we needed to trust them in order to be entirely open about what's happening and sending even reports that we're not sure that they're relevant, but we sent. We wanted to meet them a lot, to talk to them about our activity, and we were keen, and they were keen to learn about us, and we were the same on the other side. And so a few years passed, and in 2016, we were very surprised on one hand, but very happy on the other hand, that the first time we saw digital currency in an official piece of paper of a law. We didn't really hear anyone talk about it back then. I mean, we saw virtual currency are included in what is an asset in Israel. We saw virtual currencies. We said, okay, that's cool. Someone did a good job there. It wasn't us. I mean, we did what we could all those years to promote Bitcoin and push it forward. So we probably do have something to do with it, but we didn't lobby it. We didn't push it behind the scenes. So someone did push that and understood that in 2016 already, that Bitcoin and crypto should be integrated into a financial asset. And so we were very thrilled about that. And for us, it was a good step forward for the industry. And we were very optimistic. I'm smiling because it took some time from here to get to where we are today. And so in 2018, the law came into practice, and we applied to get license, and we thought it would take about 3 to 4 months, 5 months maybe, because the regulator needs to do the work. We applied for a license. I'm assuming there are others that applied for a license, so 3 to 6 months, that would be something we would be good with. And also to mention that we were already compliant with anything that was written anywhere, which was not a lot, but we were already compliant with everything that you would expect. And so we waited quite a while, 3 years, 4 years passed. We still didn't get the formal license. We worked through what's called Ishur Hemshech Isuk, which is an approval to continue your business. That's the best thing you could have get in those 4 years of waiting if you wanted to do crypto in Israel. And another problem was that in the meantime, no AML order was in place. So there were two problems. One, we didn't get the license yet. And the second, there was no AML order, Tzav Isur Halbanat Hon, in place for about 3 years. So we had, oh wow, okay, I'll go fast. Okay, I have 5 minutes, so 5 minutes I have? Okay, so I'll go faster. Cool, so, oh yeah, okay, anyway, 3 years, no AML. We needed to change the strategy, and we did that pretty rapidly. We will do that pretty rapidly. Anyway, we went to the Knesset to push the AML order because we understood that was the first steps towards getting the license. So we went to the Knesset, and January 21, the AML order was approved. So again, 3 years without any AML law. We didn't need to be, we couldn't be, yeah, I'm going to jump on that, sorry. And the step 2 was to comply to the new AML order. So it's in place with the Knesset, but we still need to comply to the new AML order. So we needed to comply by November 21. We complied by August 21 because, again, we were already ready. So we thought, okay, next step is the license. It took us 2 years to wait, and we meanwhile met with a few regulators. Again, with the AML authority, we talked about a bunch of stuff. The Israeli Security Authority to talk about what is crypto, what is security. We met with the tax authority about withholding tax. We met with the banks. You can see here that I've included them in an authority. We also met with their supervisors, the Bank of Israel, and they issued a new banking procedure where banks are supposed to help handle crypto with their clients and their companies. Of course, the capital market, our regulator today, we met a lot. And then almost 5 years later, we got licensed. So it only took 5 years to get licensed with the Capital Market Authority. Very proud. And I have to say we were very embraced by the community and the ecosystem. But we're still we still have work ahead of us. We're working with all the regulators about a few stuff, mainly the banking problem. We also have a conversation with the security authorities about, again, crypto security or not. We're having conversation with the capital market. And mainly we have still some fighting to do, and mainly with the banks. They are, on one hand, fighting us for getting crypto money inside the bank accounts of the clients. On the other hand, they want to compete with us, and that's a real problem, but that's something else we can talk about. And all the while, we are working on educating the ecosystem that if you want to do crypto, you should do it with a regulated entity. You should be working with a regulated entity, trading with a regulated entity, because two problems. If you're not trading with a regulated entity, the banks first will not get your money back, and second, it's bad for you. So that's where we're at. We're still trying to educate the ecosystem since day one and still today. And one of that's the success story I'm building up through this slideshow, and it's the last 3 slides. Is eventually all this regulation as a strategy approach we had since day one is starting to pay off. We had cooperation with one of the biggest issuers in Israel, Max. They issued a card called Max Back Crypto, where you get cash back in crypto when you use your credit card. They're using our infrastructure. We are the ones operating on a B2B2C model. And they trust us. It went through due diligence, very thorough due diligence. It went through the due diligence of the Bank of Israel. So all the work we've been doing for the last 10 years of being regulated and with a regulatory approach paid off. And this is what we're building now. It's cooperation with financial institutions, banks, EMIs, whatever, in Israel and abroad. And to finish with that, that's something that not only Bits of Gold, but here I'm talking about Bits of Gold. I feel that at least on that, we feel that we left a good legacy of promoting crypto and promoting regulation in crypto in Israel. We see what's going on around the world, and it's not trivial to have a good policy and a good dialogue with the regulators in Israel and be able to bring what you think is right to the table for the Israelis. And so we feel that the regulators are hearing us. And despite complaining that it took 5 years to get licensed, I do think that there's a good approach here and it's a good base to promote. And I hope that we can push that forward so Israel becomes a hub of crypto in Israel. And that's also something that's good for everyone. 7 minutes. Thank you very much. Questions? Time for questions? Yeah, 3. So there, if Ron is here yet? No? So I can congratulate Ron without him being here, but B2C got their license, Horizon got their license, and there is also a company that nobody has heard of before called HBH that I can congratulate them as well, without knowing them, that they got licenses. So 4 companies are licensed today in Israel, and that's a good step. Thank you.
We only have one? Okay. Okay, hi everyone. Good afternoon. I'm very pleased to be here today and hosting this exciting panel. And I want to thank the host and the organizers for a great conference so far, so thank you. In today's panels, we have 3 participants representing 3 different points of view: industry, regulatory, and legal. Okay, it's better now? Okay, I hear myself too loud. So, so we have 3 points of view. We have the regulatory point of view, the industry, and the legal practice point of view. I think it will be interesting to see on which topics there will be a consensus, but probably more interesting to see on which topics there will be none. So today we have with us Guy Sabach, okay, the Deputy Chief Economist of the Israel Securities Authority. Guy has been investigating digital assets in the past 10 years and coordinating the ISA's operations regarding digital assets, including the current legislative efforts of the ISA regarding digital assets. So hi, Guy. We have Ariel Rosenberg, who is the head of the banking and finance practice at the law firm of Goldfarb Gross Seligman, practicing finance transactions, financial regulation, and financial services. Among his clients are banks, non-bank financial service providers, and financial corporations. And we have Guy Daniel, institutional sales manager at Horizon by Altshuler Shaham. Guy comes from the field of interbank trading in the foreign exchange market, an eager supporter of blockchain technology and its future integration in the financial system. So we will start by addressing the current regulatory state of digital assets, moving on later to the future. So the first question will be for all the participants. It seems safe to say that the current Israeli structure intended to supervise digital assets is rather complex. We have the Capital Market Authority, we have ISA, we've just heard how difficult it was to get the license, so I think this is the next question should be asked. Do you think this regulatory structure is suitable, or would you recommend a single authority or something else that would supervise all innovative financial services? So we can start.
Okay, I will start with some Latin. Timeo daneo edone farentes. So, like myself, I believe anybody who was not educated in Oxbridge classical studies, so I checked the translation and it says, beware of advice, of regulatory advice from people of the practice. This is the translation. So actually it's beware of Greek bearing only live. This is the correct one. Mostly people from the practice have their position, what we call point of view. So, and sometime even in big firms, I won't mention the name of the firm, somebody can speak online in a committee of the Knesset, and then you get a phone call from another client saying, what the hell does this person saying? It just against my interest. So then you would get the call, stop. So, but on the other hand, I believe we can, all the practitioner can contribute advice on current issue, what's going on. What is the reality, the daily reality? And by the way, for me, myself, I believe that if you will ask people around what is going on, just open your eyes and see. Let's say we travel Paris, for example, Paris, okay? And so we go to the same tourist attraction. If we just leave the airport and go by foot all the way to the center of the city, so we'll see the world as itself. If I'm trying to see or to think what I'm doing from morning to evening, so this would be the situation. What are the client asking for? What is the problems? How much time is spending on these digital assets or comparing to any other activity in the market? So first thing, I would say as a practice person, I'm a little bit heretic. I really believe in regulation. Some people would say they believe in this regulation. I would say I believe in regulation and tell you why. Regulation creates the value in the financial sector, and I can prove that. For example, banks were really not happy to take responsibility for cyber frauds in the past. So it was the regulator of bank that actually asked the bank to put the responsibility in the papers. It was not an option. It was an obligation to put that. What happens in practice? All the customers started to believe, to give trust in online banking. And I believe in the long term, it created huge value for the banks. This is one thing. And the banks really cried against that. I remember, I've been there. Second thing is the obligation of credit card companies to assume full responsibility for misuse, fraud in the credit card. If somebody uses your card without permission. Then to move to EMV, which is, if you know, the chip, not the magnetic reading, and then to NFC, which is what we call in Israel Wi-Fi. So, but it's NFC, of course. It's not Wi-Fi. It was all the time Wi-Fi. So the regulator actually impose certain standards in the markets, and actually the value and the usage of the solution skyrocketing because of the regulation. So in this case, in the case of digital currency, it is also the role of regulation to create the market. I don't believe that the market will create itself because the issue of trust. There's no trust in digital markets, you know, and let alone after, I believe last year I've been here, I believe I felt more trust, even a little bit, and sorry, Oval. But this is the situation, so we need somebody to give assurance to the people, and this would be the regulator. In terms of the different agencies, still very, very early to tell. We have many other issues. Main issue today of digital assets is, of course, the AML and sanctions issue. No solution for that, and I believe that exchanges like bits of coin can do within the closed ecosystem can do the KYC issues and AML issues and can handle that properly. But for the broader ecosystem, it's a big issue. Until today, there is no plausible solution. So once we will have solution, and then we can think who will handle that. And also, when we speak about the various kinds of crypto assets, we have to distinguish between, for example, cryptocurrency. And Yuval, what is the story of Bitcoin? You speak about 2013. I've been in the Israeli Stock Exchange in round tables. It was amazing. I was invited to speak about the Bitcoin. And I asked the people there, I'm just a layman, I'm a lawyer. All of them, the tech people, you mentioned the one, the Reddit guy and the Aleph funds. What is behind, why do we need Bitcoin? So the answer was, we want something which is behind the reach of the government. This was the common answer there. So until now, there is no story other than that. So now it's a trend, it's small, but let's say you have like a widespread currency. Do you believe that Friedmanite manager of monetary policy in Israel will agree that, let's say, 20–30% of the economy will be out of the breach of monetary policy? Will lose its main tool to tackle issues in the market. Okay? So once it will be too big, you will start, I believe, feeling the wrath of the regulator. So still, we need a story. Why do we need Bitcoin? I know that maybe we need the blockchain. Technology is great. We need it to replace the SWIFT, which is obsolete already. NFT is nice. It's like collection, like NBA cards, like post stamps. Really nice. Maybe some coins for gaming. But why do we need cryptocurrency? Which is, we have dollars. We can hedge everything. We have everything. At least we'll have a story, real story about the currency, which is the main issue, other than the technology. So I believe there won't be a solution.
What's the answer?
You're in the market. I'm just, told you.
But don't worry. If you get to 20%, you'll see the Bank of Israel responding with, I think, maybe CBDC, and that's connecting to a... I
don't mind handling 20% of...
Yeah, you will get to the... You will handle the problems.
Thank
you.
Hi. So concerning which body or regulator should regulate this industries is a complex question. I wish there was one organization in charge, but the reality dictates otherwise. You can see how things unravel in the States, which each regulatory body, as the SEC and the CFTC, are both pulling to different directions as to classify which cryptocurrency is our commodity, as Bitcoin or a security. And you can see that also in Gary Gensler's lately viral appearance. So I think there is an improvement here, and it's things that will unravel as the more the industry will develop and adopt those cryptos. But I think my main point is that at the end of the day, you want to be able to defend and make it safe for users in Israel to practice that and not to wonder why is it good or not. Bitcoin, for example. So that's my 2 cents about which regulator should regulate on that.
So stability, you say, I think. Yes. It's interesting because both of you are kind of in the same, I would say, perspective, that maybe waiting a little bit, seeing the problems, and then deciding who the regulator will be after understanding the issues. That would be interesting to hear.
I mean, I wish there would be one body, but reality is different, and each body will pull its way.
Yeah, I think we're going to hear something different, so
yeah. Well, first, regarding what Ariel said about the story of Bitcoin, I think I can suggest a little answer here. I don't think the story should be being out of reach of regulation. Of course, I'm a regulator, but I do think that the story is being outside of the traditional financial system, being able to transfer funds from one place to another without being dependent on a third party. So there's a story. And regarding the structure, well, as Guy said, in a utopian world, I believe that that there should be one regulator. I'll even take it a step further and say that there should be one regulator all over the world that should regulate those things. It will make much more sense and order, especially in this field. But yeah, as also been said before, the current structure, we can't ignore it, and there are facts on the ground. There are authorities that already provided licenses after a few years, but our view is yes, that there should be a single regulator, and we said that view to policymakers. But yeah, each activity should be regulated according to the specific activity. And now it's different regulators, so be it.
Yeah, so maybe continuing with this line of thought, maybe you can explain. Yeah, really quickly though.
I believe, again, the world will not change. The only new phenomenon here is, again, the digital currency, the standalone. NFT, just, you know, it's a nice thing. Okay, NFT is just, again, like painting, like any collection. Securities, it's like, if you remember in the past few years ago, like 40, 50 years ago, securities turned from papers to electronic securities. Nothing has changed. It's just technology. So if securities will be converted from what is today to blockchain-based, so it's the same. So you have securities, NFT, which is nothing, and then currency, still, like the first story.
Yeah, I agree. Although we might think that maybe the crypto industry has a potential to become also means of payment, and that could be like a real difference from securities. But maybe we'll get to that later on. Okay. So, Guy, maybe you can explain to us, like very briefly, the proposed amendments that the Israel Securities Authority is trying to currently promote, and maybe their also relation to MiCA, which was recently approved in the EU.
Okay. So, like Ariel said, once security changes to being transferred in a different manner, it shouldn't change the facts. But as Dalit said, it's not all of them are securities. We already said that there could be different types of assets, and some of the activities that are operating with digital assets are not properly regulated. And this was expressed by Shmuel, I think, earlier today. And after the government decision to regulate, to make changes in regulation, to close the gaps, you can say, we published for public comments an amendment that says basically that adds the definition of digital assets to securities laws, not into the definition of security, which in the interpretation of security stays the same, but adding them into the intermediaries, how we treat intermediaries, such as funds, asset managers, advisors, exchanges, and adding this definition, and alongside adding the flexibility to change the different rules in order to adjust to the nature of digital assets. And this flexibility is very important in our view because it lets us be more agile and to we understand that the nature is different. We understand that there are different subjects that should be addressed, and some of the rules are not relevant to these assets, and we want to be more suitable. It's basically the same approach as Mika took, only Mika took it in a different methodology. Mika is doing it outside of regular regulations, so it's saying as long as you're not fitting into MiFID, you're going to get sort of the same set of rules adjusted, but in a more holistic view. So we're trying to do the same thing, only inside our laws. So that's the main difference. But yeah.
Okay, thank you. So maybe Ariel and Guy, can you point out to the most crucial challenge or obstacle that you think that current Israeli regulation poses for the crypto industry, and how would you change it? We should also ask Yuval. I think you would have also some insights about that if we have time. Yeah.
Okay, so I'll go first. So in context to the latest 411 amendment, so it was a blessed move and most certainly is taking us forward on the path of adoption and regulation. You can say that in that context, it's became quite...
Maybe say like one sentence about what is 411 for the people
yeah,
who
for
know what it
those
is.
who don't know, the 411 amendment gives a general guideline to banks as to how to accept funds originated in crypto. So basically that's the point, that they gave them the exact amount, as Guy said, of the leverage, I mean the room to act. So the technology is very complex at certain points, and the regulator needs to understand what he's dealing with. And there is this example that above 100,000 shekels, they can go out and reach professional opinion, which can be very costly. So that puts a strong lever on those banks as to how to accept it, and if so, and when. And that's a great obstacle, in my opinion, as to how we're going forward from here.
Do you think it legitimized the crypto, like being the supervised?
Oh yeah, I mean, as from Horizon speaking point of view, as a firm that is helping people get their, as you say, to sell and buy cryptos with coordinated work with banks, then we're seeing how banks are slowly adopting and giving out more and more guidelines as to how and which cryptos also. So yeah, it's very much it's worth
a regulatory success.
Yes, exactly. It's a regulatory success, but still a lot of challenges ahead.
Yeah, there's the Talmudic saying, "Din pruta kedin mea." Like 1 cent is like $100 in the sense of your legal treatment of the situation. So this is a big mistake, by the way, and this is the mistakes ongoing and perpetual mistake of regulators. Regulators should give us play, okay? And sometimes they even block, and your practitioner here, I believe, if I open an account worth of 100 shekels, I don't know what's your minimum, but let's say you give me 100 shekel, you still have the same regulation. Of course, there's some amount, in the higher amount, depends on the country, you have to check, but in terms of generally speaking. So we cannot develop, even small companies, startup companies, sandbox companies cannot open, cannot work. And it's still in a very experimental situation. So they should give us the ability for certain years, certain amounts to play. So we will lose money. What happens? Today, for example, there is no regulation on custody in Israel whatsoever, on custody of securities. No. So I can go to a dodgy custodian, and I can bet on a derivative, leverage derivative of the price of cocoa within the next year and lose all my money. And this is not regulated. But if I will lose 200 shekels there in his exchange or at Yuval, so it will be a big outcry. What's going on? Because it's like highly publicized, all this issue. So I believe this should be a big change in the regulation for any new issue. People are responsible, people are mature, So if you're above 18, you can smoke, you can do very risky things. So
even derivatives you can do if you're more than 18.
Even derivatives, exactly. So this is the main challenge, by the way, is the banks. You know, the interaction between what we call the legitimate, or everything is legitimate, but the more traditional system and those companies, it's a nightmare. It takes a lot of time. Depends if there are special banks which are happy to treat, not happy, but agree to treat with this company. It's a big issue. They're afraid of backlash from regulator in Israel, but more than regulator in the States, Ministry of Justice, for any small wrongdoing. There's zero tolerance for AML issues, unlike for you can lose money, it's fine, but there's some kind of leniency for market risk, whatsoever, credit risk, but not for AML risk. So this is the main issue. So the challenge is develop a good AML. But I believe, again, even here, if it's small amount, so this is not the issue.
Let it be. Okay, good. This next question is for Guy. If you can pass the, thanks. I would like to hear what you think is the most important principle or goal that the regulatory authority, whatever would it be in the future, should hold with regards to crypto. And also, if you had to choose a single regulatory demand, what would it be? Say license, oversight, capital and liquidity demands.
All right, so this is a very broad question.
I know.
And this field is very broad in its services that it provides. So it really depends on the service that we're talking about. Generally speaking, I think that it's been proven that in the recent events that the most important part is separating customers' money from the company's money, which was the basic rule that was missed somewhere around there. But yeah, you can say that all of them, all of the rules are important to the different aspects of the market. So market integrity, or so yeah, that's.
So you mentioned before, I think Ariel did the sandbox. So we had about 2 years ago a legislative proposal about adopting this sandbox attitude toward fintech or whatever. And it didn't went through as far as I know, but I would like to hear what you thought about it. Do you think it could work if we did that in Israel? Do you think it would give like a boost to the fintech industry here?
You want me to
it's
start?
for all of you, so yeah.
Well, we were big supporters of that law, and it still didn't happen, sadly. We actually went through with our own little sandbox inside the ISA. We call it's a piloting program, but without the power to change regulation to discard rules. But yeah, of course, that this is a good way to manage innovation, which is something we in Israel especially see as a key component of our economy. So.
Thanks.
Actually, I don't believe in sandbox. You know, today, even sandbox today, if you go to kindergarten, you see there's no sound anymore.
Yeah, there is no sound.
It's full of germs and so on. That's, I believe it was mentioned before, one of the panels before, sandbox. Okay, it's a nice word, but it's not practical. So sandbox can be done actually, and there's a nice experiment by the Bank of Israel of the blockchain central banks digital currencies with Norway and Sweden about multi-country using this platform to transfer amounts. So it's more, I would say, for central banks, less for companies. I would say companies need some room, not just confined sandbox, but just quiet for some years, someone, as I said before, to work. So sandbox is, again, I don't believe it's practical.
Oh, okay. So we'll move on to the future of digital assets in Israel. And maybe, Guy, you're inside the industry, so maybe you can give us any tips or hints about what will be the next development in crypto or digital assets in Israel. What do you think?
Well, I think that after Bitcoin is quite so far unanimously established itself as the most decentralized and secure asset out there, and therefore it's most popular. NFT technology is moving rapidly. It's making a lot of impact. Besides, hype about monkeys that cost you $300,000, I wouldn't support that. But yeah, the technology itself is there for a reason, and it's creating a lot of impact in medicine, and if it's supply chains or gaming, of course, and many more. So you can monitor that and see how that will develop. While metaverse adoption seems quite less optimistic, in my opinion, than it was 3 or 4 years ago. Other than that, there are all those Web3 ventures and decentralized applications, which can most definitely, in my opinion, take us forward. There's a lot of activity here in Israel. You can mention Fireblocks or Starkware. But not to give any specific example, I think this field will boom in the future and will be the next promise as to help consumers manage their digital wealth and their future financial well-being in the digital currency era.
Do you have any other views, or? Okay. So maybe Ariel, you can guide us through the further development you see vis-a-vis technology, for example, the blockchain, maybe rather than the current coins themselves. How do you see it progressing?
Yeah. So firstly, I would like to refer to the last two updates in the regulatory environment. Firstly, as I said, is the end of the experiment. I believe was a successful one, the Bank of Israel, about the central bank's digital currency. And secondly, there is a blueprint paper of the Bank of Israel about the stable coin, about introduction of new regulation for stable coin. And as I said, regulation here is good. While there is regulation, so people reduce the coin. So it's okay. So it's I believe this is marks the future for something which is relating to the world of more central bank digital currency, and the stable coin would be privatization of the Bank of Israel or the central bank's currency. Okay, when we speak about central bank currency, we're not speaking about currency. It will be the same currency. It will be the shekels, the dollar, the euro. It's just a payment system. And I believe this is the future for two reasons. Firstly, I'm trying to watch what is the need today. So the need is to develop international settlement system, which I believe the SWIFT is from the 60s, maybe, if I remember correctly. It doesn't work. Sometimes I can tell you from the practice, to wire dollars from Israel to Germany, they have to go through the US. Sometimes the US will hold it to check what is going on. So a closing...
They will charge you for it, so don't worry about it.
I'm not talking about the money, this is a big question, but about timing. If you want to close DVP, let's say you wire the money and you want to get the shares. So shares you can transfer immediately. Let's say shares in Israeli company, if private or public, but the money will go for 8 hours. So who will bear the settlement risk? So sometime in closing, we're sitting in the room, the paper here, we're just waiting to see the money going on. Think about that. It's like a bunch of executive lawyers sitting for 8 to 9 hours waiting for the SWIFT to...
It's only a technical issue. It's amazing.
Exactly. And think about, let's say, I give another example. Let's say I visited a friend in Germany. Last week I've been in Germany. Let's say he invited me to a restaurant. I want to just repay my share. So now I want to transfer money from Israel, P2P. Okay, P2P. P2P internationally is impossible. Okay? So if you try to use one of the platforms, so then you have the exchange, fees for exchange, fee for transfer. And they have to use the same platform. So those are the two solutions. Solution is international payment and settlement. So everything will go there. But then I believe the question is whether the central bank will be able to administrate all the issue as fully administration operators or as regulator. I believe it will be so huge, so it will be too big for the central banks. So they will outsource it as a regulator, like they are.
The Oregon has a system. Works on blockchain.
Yeah.
who settled the payments in the middle? Who is like the central bank? No one, or someone?
It's coming. It's not there, it's coming. Yeah.
Yeah, it's functional. But I think the central bank would care about it if it goes bigger because of monetary, issue.
I assume the central bank is on it because JP Morgan is kind of a big of a bank.
Yeah. No, but I mean like in the future, if it grows to other companies and becomes like a major payment system. So I think this is what worries even the Bank of Israel and other central bank where they're trying to develop their own CBDC as an trying to answer. True. True. Okay, you wanna? No, that was great. Thank you.
A nice contribution.
Yeah.
What are we addressing?
Like the technology versus the current currencies. This is like
as to CBDCs.
As whatever I was thinking. Yeah, largely you can go. That was the next question, so
well,
we can go ahead.
Concerning mainly to develop that notion about centralized payment systems, that's mainly the issue arriving from why is Bitcoin even invented, as to make it decentralized, and basically as to regard to the development of CBDCs, I think it's a very powerful tool that will very likely be in the future, in the coming decade, and it will allow, above for many other important advantages, it will give the central bank a better way to manage the supply of money. And that will be most likely helpful to control inflation rates and help adjust it to the inflation rate target. So I think that's the most important added value. A lot of advantages and disadvantages, but I think that mainly is something that we can look forward to as we monitor the development of CBDCs, putting aside the parameter of how centralized or decentralized will it be, which will most likely be. Many crypto users are like worried about the rollout of CBDCs. And I think that if crypto will stay with a decentralized vision, it will not suffer from this rollout whatsoever.
Yeah, I think both sides are worried that
yes.
Currently, because the crypto users probably are worried that CBDC will, be a great competitioner probably, and I think the central banks are worried of this private money, quote unquote, because it could cause them to lose some of their monetary control as it grows. So that will be interesting to see. Yeah. Go ahead.
So if I'm trying to be futuristic a bit here, I think before we see CBDCs, what we were supposed to see years ago, I think, is stable coins taking place as more of a payment method. And it looks like it's going to come faster due to current regulatory processes like MiCA that could facilitate this. But private companies probably know how to innovate in this field better than governments. And I think this is something that could really change the view. So you were talking before about the JPM coin. which is really solving the guardrails inside the banking system. But when we talk about stablecoins, we're talking about something that is for the end user. And the same as CBDCs, only CBDCs still have some things to solve on the way. The government needs to decide that they want to do it, and we have privacy issues, and of course they will have to combine some private sector innovation into that and not trust on themselves only. And if that comes to hand, then probably they will replace stable coins in that job. But I do think that stable coins have a great potential in that field. So currently they're only used as a trading vehicle in between different currencies for traders, but as payment methods it could be different. True. Yeah, it's happening, and it's been trying to come to wide adoption through Libra, through PayPal, through whatever, but still not there. Yeah, it has, but it's happening. Yeah, it's going to be there.
Yeah, I think stable coins could be like, it's very fascinating to see what will happen with this creature or whatever it is. It's kind of a hybrid because it combines the regular features of money and then other features of the crypto. So it could be interesting to see what will happen with that as well. And it also raises a lot of questions about stability and how to maintain if you're like having a fixed currency rate. So how we're gonna maintain that, and what happens if we don't. We have a history of that in the financial system in other areas. Do you have some time for questions from the audience? If maybe like one or two, if you have. You wanna for the okay.
Yeah, I think it's really too early to say, and it really depends on how they're gonna build it, how they're gonna structure CBDCs, and how they're gonna tackle all those issues. So, if they do manage to tackle them, then probably it's better to trust the government than a private company that holds the money for you. So, but yeah, no, it's true. It depends which government. It depends which government, but yeah.
And which company? You know,
and
some companies are bigger.
Yeah.
Than countries. So,
yeah, it's a tough question.
But very interesting to see what will happen. Yeah, and
might not be any different because if you hold USDC that's issued by, theoretically impartial third party, and the U.S. government decides to print more money, so it directly impacts USDC. If you have a U.S. dollar issued stablecoin and they decide to print more money, then it'll affect the
same.
CBDC. So in the end, it's the same shit.
Yeah. Same shit, different issuer, I would say.
one last question, yeah.
I would say that not really. I mean, the position of Israel is a bit different because we're a small country. The market here is rather small. And we have a lot of innovative companies, so we do want to maintain that advantage and not stifle innovation. So this is our key fear when we are talking about regulation. And on the other hand, we do want international players to come and offer their services to Israeli companies as long as they are regulated, of course. Which is now not always the issue. So that's why we need to manage that. But we are looking at other countries and how they manage. Mika is a good example of something that we're looking at when we decide on what to do.
Yeah, I would say coordination and cooperation in the global level. Yeah, sure.
In my opinion, Israel has a unique structure in the banking system. And the banking system is very centric. Two banks controlling 60% of the ecosystem here, of the banking system in Israel. So there are adjustments necessary in this term. But in terms of regulation in crypto, I think I agree with that. Few minor adjustments.
I was just going to add quickly that, sometimes because of the country's unique structure and how centralized things are, we see oddballs. So, for example, in the Knesset last week, in the discussions, people were advocating, it looks like it's going to happen, the digital wallets are going to be able to accept deposits and free interest.
Yeah, I was going to ask about that if we had time.
Yeah, which is,
it happened. Yeah, it was approved.
Yeah,
Yeah.
exactly, which is unheard of if you compare it to other. I mean, this was the defining line in the U.S. between, are you a bank or a fintech? Do you take deposits and give interest? So we have all these odd, and the reason for that, and this is how it was presented in the news, is we need more competition. So, and Bank of Israel's approach was portrayed as they don't want someone to move their cheese, which, I get that, but I think there are a lot of unique features to our banking system that kind of create all these different opportunities, but also challenges.
I agree.
One thing about the legal system in Israel, we today need to tackle a situation which, the regulation is going back beyond the situation today, just looking beyond substantially. But what is easier for the Israeli legal practitioner is that under the Israeli way of interpreting the law, we use the rationales. We can have more room to interpret the law in order to cover current situation. And it's not only for me or my firm, but all firms, all practitioners in Israel. So we can use even a very backdated law, even of 20, 30 years ago. For example, the law which analyzed today we use in order to analyze if people who came from the English law, the difference between floating charge and fixed charge of accounts, the principal ruling was of containers of grains held for securities of securities of war, for example. So there is no import, so you need a big containers of grain, still grain. So the grain is being changed from time to time because after 1 year they're already not good for consumption. So it's like account. We use that in order to interpret how do we view an account where the money or the securities are going in and out. So this is the way that we use in Israel to interpret the law. So even with a very obsolete and a very old laws, which are dealing with real assets, or even with livestock, or we can use to interpret a new situation, and we use that. We do that all the time. And therefore, I believe we are finding solution for enterprise like Bits of Gold and other enterprises, and therefore, there is no actual obstacle to the development of new startups in Israel in any situation. And in most cases, if you go to the regulator, it won't give you an answer. Go to the lawyer, have an opinion from a good firm, and this is fine. Take the responsibility, and they won't give you an answer. This is like 80% of the situation. They won't give you any ruling. Ruling you get only from tax authorities, not from any other regulator in Israel. Maybe a security authority, but other regulators, yeah. Again, they will tell you, you have a lawyer.
No, it is true that we suggest people to consult with a lawyer. It's something everyone should do when they're dealing with regulation. But of course, we are trying to give also answers when they are needed. Yeah, consult.
Yeah. So we think. So I guess we'll just have to wait and see what happens next. It's going to be interesting. Thank you so much. Thank you.
So thank you very much, everyone, for patiently staying for the most fascinating last panel that we just had. the guests that are going back to the hotel, we're going to have someone accompany you back down stairs to for the taxis that are waiting. And if people want to grab a last bite or a drink, feel free. And we hope to see all of you next year in our 3rd annual conference. Thank you very much.